Good morning. It is 9:15, 15 minutes to market open, March 28th. And we're going to be streaming today. Stocks, options, futures, trading it all. Doing some technical analysis while we do. Watching the runners. We got birds up. Pre-market, Zip Trader highlighted this in his video yesterday. So he does have a pull. Let me get set up here and get things going. Hey guys, welcome. Figure this out over here, how this old YouTube's works. Almost the end of March. And my Yaz. Aha. There it is. Hey, Birds is ripping up here still. Broke that pre-market high. Get the link here and share it on Twitter. Thank you guys to those of you that share it. $0.20 I made it to. All in pre-market. What do you know? Oh. Wow, that thing's ripping right now. So I've got orders. I don't know, I might wait to close those orders. I've been having them good till canceled, and then if there's any kind of rip, I'll just sell them automatically. But we might see, we might get enough of a move to where get a higher price. Imagine that. Okay, I'm gonna throw the Discord link in here for anybody that's not on it if you want to join. And it's up 48%. Wow. Got about 10 minutes to market open. Birds is number 2 on the pre-market runners. Running strong into open. Morning MK. That's crazy. Yeah, let me get logged in. I'm going to probably cancel those orders for now and see what the price is at. See if the price is right. The price is wrong, Bobby. Nat gas came down more. I think it kind of rebounded though. Hope this thing is about to rip. That is crushing me. Now these birds calls are at $2.50, so they're way out of the money. But maybe I get a little bump in the price regardless. So birds, oh, now birds is number 1. There you go. Zip Trader says it's gonna 10x, and here we are. It's at half an X right now. That ain't bad. GME is down 0.5%. SPY's had a little volatility this morning. Up and down and up and down. I didn't see a whole lot of news this morning. Ukraine ready to resume electricity export to EU and amid surplus. That's probably not good for nat gas, but maybe it affects oil more. I'm not sure. Oil had a big day yesterday. Markets may be entering a lost decade for global economic growth and financial instability and high inflation, World Bank has said. Yeah, we talked about this similar to Japan. Japanification. Barclays says remain constructive on oil and no potential upside risk from a protracted disruption in KRG exports. U.S. House Speaker McCarthy, I don't think we need blanket insurance on all deposits. Mortgage payments for a new purchaser of a median-priced existing single-family home was equal to 51% of disposable income in February, down from the recent peak of 55% in October, but significantly above the 30 to 35% during pre-COVID era. Graph, so you can visualize what all those jumbled words meant. Annualized monthly mortgage payment on existing median-priced single-family home, percent of disposable income per capita. Similar data points than what we've talked about. This is interesting. The share of all cash deals for homes rose to the highest since 2013 last year. Yep. Buy with cash. Record number of young unmarried couples are moving in together, with a large majority saying they're doing it for money. Artificial intelligence is about to revolutionize everything, wrote Hayam Israel, the head of Bank of America. Saudi Arabia is importing huge amounts of diesel from Russia despite producing more than enough of its own, reportedly sending much of it to Europe. McCarthy says, very concerned about where we are on the debt limit talks. Millennials have increased their debt 27% from 2019 for a total of $4 trillion. Dolores. Nat gas 209 price target. I mean 2.09. That's basically where it's at right now. At 2.08. Had a dip this morning though. Your price target is right where it's at. Seems legit. I'm just scared now that it broke that support from back in February, a month ago. I was looking at the all-time chart. It has gotten lower than $2. Been down below $2 for a year or more at one point. I don't want to be holding this for a year. And that's probably usually around probably like recession type time, so I don't know. Can't go to zero. Yeah, true. Morning, Jason. 9.5 times to go. On birds. Yes. Yeah, 47%. That ain't bad. Take a little look-see it in the video. It's just slowly cooling down here. Not much to look at. Very strong. You did have RSI divergences back here, but then you had your little drop, so maybe it already happened. Let's go, SI. Yeah, SI is up 4%. Let's see. Alt immune. Yeah, that might be a nice support. Range bound play. Morning dark. Morning down row. One rallied after Divvy too. Don't see Divvy. Spy kind of coming down here. 4 minutes to open. BBBY is flat. Like we're not gonna. Well, I guess we still could get the T+2 action. Have until what, Wednesday before open. So we'll see if GME gets a little pumpity pump today. Good. Thanks for your likes, guys. Appreciate it. 5, 6, 7, 8, 9. 48% on birds. Kind of hitting the high from. Yeah, that's right. It totally pumped pre-market the other day and basically just sold it all off during the day. It was funny. The news was insiders are buying up a lot of shares, and so the stock's down 10%. Right, where is it? That was great headline. There, motorsport. Oh, Bird Global shares dropped 10% after executive share purchases. What? Okay, 3 minutes to open. Silvergate, I mean, holding up strong. Every morning we're having little gap ups. So we'll see if we're repeating today. So far, yesterday's high is much higher than the gap up. See this? The high and the gap up, we got close to it. This time it's not as high. So we'll see if we break yesterday's high. Might be starting to lose steam up here. We can't break yesterday's high. We sell some more covered calls in this thing. And that's it. Yeah, just sell covered calls and net gas coming down a bit. We're getting like natural gas storage numbers. Got a catalyst to move it. Let's see. Okay, 1 minute. 1 minute. Morning, Gene. You can delete your own comments tree. Entirely unnecessary, though. Moving up a bit. Will BBBY continue to trade flat or new lows or new highs? Given that we're kind of at the bottom of the range here of this channel, hoping for some ups and not downs. There's the market. Okay, putting in order these birds contracts. I don't think it'll fill, but BABA's up 10%. GME, little pop up. Paramount's up 8%. They have earnings. I don't know why BABA's up either. BBY is rallying a little bit. What's the news on BABA? Split into 6 units? Oh, what? Alibaba Group to split into 6 units, explore new IPOs. Oh. I guess that's pretty bullish. It's ripping. SPY's coming down here. I think GME could have a little rally today. Given all the options expired in the money last week. Morning Furs. Morning Ace. Did Al get out of BABA a couple days too early? Lyft. 5.5%. SPY just broke the pre-market low. That was fast. I don't know what that wick was. That was crazy. Levels in here on the SPY. Not a whole lot really there. Morning, human. Morning, Jan. Oh, no way. I sold some of those contracts. Legit. I did it. How many did I sell? Oh, just one? Someone just hit the ask, probably. Just leave it like that for now. SPY flushing through that level. GME is flat. BBY is coming down. Oh, birds, big red candle. BBBY down a little bit. Getty's kind of had a sustained rally here. A little bit. With Paramount. Announces changes to its board of directors. No. Oh, they appointed executive vice president. Guess they like him. GME now green. Stay intense volume on BBY. Not too intense yet. Good luck, BX. Good morning. Thanks, guys, for your likes. All 17 is. Appreciate it. Looks like buys are flooding in. We're looking at the same chart. Birds holding VWAP. I just wicked down on that low, and now it's back up to open. BABA kind of sold off the gains. Silvergate, there it is. Did have this kind of RSI divergence on the hourly, which is bearish, but it's a shorter term deal. Oh, I got 21 filled there. That is neat. And this kind of looks like a bear flag. One of you guys on Discord was talking about gaps down below on SI. Let's see, any gaps? I mean, I guess that's a tiny gap there, but I wouldn't even count that. Yeah, I'm gonna look for another little double top pattern if we get it again today on SI and do some covered calls. SPY's moving down here. According to the Webull order flow chart. Well, it's probably not very good data then. ECT. Pure cycle. Pretty nice looking chart. Watch news about banks at 10? Maybe, yeah. Send me the link. GME rallying up a bit here, up 0.5%. BBBY pretty much flat out open. Really SPY also. Pretty much directionless for everything. Birds is holding above VWAP. Did I sell all of these? Yeah, nice. I sold 20. Sick. Those are, that's 100% on those actually. Bought them for 5 cents, sold them for 10. Yeah, I mean, Silvergate, they said they're basically going to liquidate. But they've had a couple good news catalysts that have helped pump them up. And now there's just some sentiment around them, yeah, getting maybe acquired. Bullish on C. C, like that C? Yeah, their technology got bought out, and then yesterday they had news that there was a loan, 205 million or something, paid off from MicroStrategy, prepayment on a loan. So a couple different bullish news strung together, mixed with crazy high short interest, mixed with how much it's sold off and a small free float, and the volatility in banks, and could be set up for a bit of a short squeeze here. C, is this SeaWorld? No, it's not, it's just C. Bullish on C. Pretty mellow price action, but chart looks nice. Does look bullish. BABA 9%. Bird still 31. See, it holds above VWAP there. SI up 8%, moving up a bit. See if we get some T+2 from GME today. Up almost 1%. BBBY is down to the pre-market low, down 1.23%, 77.84. Silvergate 7.5%, 8%. Breaking that kind of two. Let's see, what level is that? Yeah, 245. Now that 2.5 would be huge. I mean, looked at the options on here. Is there any kind of? Oh, I can't see it there yet. Got a gamma ramp set up. I'm curious on. Let's see, 9 days. There's a break on Silvergate. It's running a bit. 220 was the pre-market high. Getting back up there. Yeah, you do have a bit of a gamma ramp. 2.5, 3. Actually, even just over 2, there's a lot of stuff in the money. Which wasn't in the money. What's today? Today's Tuesday. So I guess at the beginning of the week it was in the money. Or no, it wasn't. Never mind. Close over 2 would be good. There's 10,000 contracts in the money at 2. 7.6 at 2.5. It kind of tapers down though. Does taper down a bit. 4 is kind of a next big level. Above 3 would be big. And then it's kind of weak. GME 0.5% up. BBY did bounce. Wicked on up. Maybe we'll get a good catalyst for BBY. Hopeful. Gamma ramp that actually works. Silvergate 12%. SI better play than BBY. I mean it's moving now, and it's had catalyst, but no, I wouldn't say so. But they are somewhat similar. There are some similarities for sure. They both. Silvergate's probably. I mean, it's more likely to go bankrupt. They've said themselves are going to be liquidating. So, BY has not said that, and they've pushed off bankruptcy for foreseeable future. Birds coming down here a bit. There's lots of catalysts for wide sending higher. And once something starts going, you get momentum. You have a huge amount of shorts in it, so some of them could be closing. So it could be volatile up and down. I mean, a lot of these banks that are potentially going bankrupt have had big rallies. I mean, look at these gated candles; these are huge. Silvergate's at a price now where if it does get bought out, it's probably going to be for quite a bit more than where it is right now, because market cap right now is 71 million. %16 on Silvergate, 16.5. So it broke the pre-market. Again, same thing as the other days. If I said like first hour and a half, 2 hours, you're gonna have, especially if it's doing this, you're gonna have traders pumping it, so it's gonna increase the volatility. It's kind of what it does midday and end of day. So yesterday it didn't hold up as well as the day before. The day before was a little stronger. Well, not a whole lot actually. It's still holding up pretty good levels, really. I might sell a couple cover calls here even. I'm still up on my cover calls, so should have done more yesterday. SPY's moving up here. Birds gave back some of its gains, but it's up 24% still. BUY's moving up. GME's up 0.5%. ABA's come down a little bit, up 7.5. Below VWAP now. Yeah, it's holding $2. That'd be a good it close end of Friday above 2. That'd be pretty solid for the options chain. XXII did rebound. Remember, I jumped out of this once we broke that low. So yeah, it's not looking good. This isn't looking like a false breakout. This is looking like a real breakout to the downside. But I use Fidelity mobile apps sometimes. I like it a lot better than the browser version. Bed Bath even. Silvergate's holding up. See if we can hold some of these pre-market levels. VWAP is volume weighted average price. Regeneron. Is that the ticker? Oh, what's ROIC? Regeneron is RAGN. I don't know what you're talking about. Lithium is up. LAC 6%. This one we've traded all right. Might be at a nice spot. Kind of building an inverted head and shoulders here too. And it bounced on the support back here. GME with a red candle, SPY with a red candle, still both basically same as open. Birds coming down more. Silvergate holding up 2.25, up 12, 13%. Definitely pretty good volume again this morning. In what, 20 minutes? It's already at 9 million volume on a 27 million free float. Regeneron. HRMY. Harmony Biosciences. We had a pretty good bounce from their short and distort campaign against them. And everything's very flat from open still. Looks like Carnival's actually gonna rally on their earnings instead of dump on good earnings. What's this? General Motors is flat. GME is flat. Things that bounced pre-market just basically chilled out. Other than Silvergate, it's actually broken its pre-market high. 14%. Setting up a little bull flag up here. It's looking really bullish. This morning we'll just see what numbers hold up throughout the day. Bank talk at 10. Who is it? I don't even know what's going on. I don't know if it's something I care to listen to, but try it. Data today, we had goods trade balance at 8:30, wholesale inventories. Got this crazy spike at 9, and then our normal 8 o'clock spike we've been having. Is this a sell-off from that data? Yeah, maybe. So 8:30 kind of caused that sell-off. Wholesale inventories, maybe. retail inventories. House price index came out at 9. Oh, so maybe that's what that was from? No. Consumer confidence comes out at 10. Fed bar has a testimony at 10, testifying. Richmond manufacturing index at 10. Richmond manufacturing shipments and Richmond services index all at 10. Dallas Fed services 10:30. Bond auction, 5-year bond auction at 1. Nothing too crazy today. Kinsey starts cutting 1,400 jobs this week in restructuring. The U.S. is at a greater risk of recession because of looming credit crunch for small businesses. GME gave back its little pump, down 0.7%. Get this morning shakeout done and see which direction we're going. BBY is now green. CPI this week. No. We've got PCE at the end of the week. That's the big data. Initial jobless claims on Thursday. That could be a catalyst for some movement. Bird's getting a little bounce here. Up 30%. Still selling these calls on it. Trying to. Got 42 left of the Aprils and 70 left of the Julys. This rally might continue though. So I'll be patient. Viking Therapeutics. Whoa, GME flushed. Low on the day, broke pre-market down 1%. Kind of interesting with SPYs actually rallying. GME is selling off here. 1.3. BBY is moving up. Kind of interesting. VKTX. Viking Therapeutics. Get some good news. Morning Blue Owl. Too bad you didn't stay in BABA just a couple more days. Yeah, it's kind of interesting to sell off on GME this morning. Safety and leverage ban on eToro, but I was seeing something about bans on BBY. Oh, that always is a sign that's gonna run. Not a bad day. Good morning, Owl or Buffalo Man. Guy on a Buffalo. Birds is kind of pumping back up a little bit. Silvergate's still up 13.25. BABA holding up 9%. CFDs are banned, so it's gonna squeeze. Like that, huh? These prices you can make a lot, absolutely. GNS is flat. Hellbiz getting any sympathy? No. Birds is on its own. Good luck. SPY coming down here. Market's still pretty directionless. I don't know what's going on with GME. Yeah, kind of just flushed on its own while the market was rallying there. Broke yesterday's low. Hit a low of 22.51. I don't know, did the 10K come out? Nope. Silvergate coming down a little bit. VWAP bounce, perhaps. Or hops. So guess we'll find out. I have this NACAS futures. They expire today. It's a cash settlement. So I guess I don't know. I don't know if they'll auto roll it or if it'll just close it. Guess it'll maybe just close it. SPY, pretty big red candle there. But just still in the same range from today. Never green days. Jason. Bird's kind of moving up a bit here. Retail traders. Should I close these contracts? Jimmy's kind of getting pretty flushy here. Down 2.25 now. 22.48. It double bottomed on this level down here. 22, 25, 22.16 around there. See if that holds again or not. Takes so much time for them to gain value. Well, GME's hold up really well, so makes sense why your puts wouldn't go up. Shark side is taking possession of you. So before, well, BY's been cyclically had rallies like GME. So without a news catalyst or something, it's quite likely we're just waiting for that. But I think we'll probably get a news catalyst before then. As you can see here, between this pump and this pump, you know, this was 4 months. Between this pump and this pump, another 4 months. So it cyclically has these moves. Pretty evident on the chart. However, now it's at kind of a crux because of everything that's gone on. So I think it will probably be, if it is good news, I think it'll have an effect on the stock price before the next pump. SPY kind of breaking through that low. Silvergate came down a little bit. Let's see. Yeah, Silvergate came down below VWAP. Still didn't get filled on the covered calls. Yeah, not making a new high today wouldn't be great, but Not bad either if we just consolidate. Your emergency tinfoil hat. Break glass. Put hat on in case of emergency. There's no fist strength to do it. Bird's holding right at VWAP there. GME oddly bearish this morning. Maybe it's just getting a little bounce for its big T+2 rally. Silvergate coming down some here. Bird's not going bankrupt. No way. Maybe, but no way. Yeah, it's held up nice levels. It has. Nice consolidation. I just wanted to see new highs. Let's sell some more calls. Volume stayed solid on it. SPY wicked out of that low. If I should close these contracts, I don't know. Let's see if E-Trade rolls these over.
Futures contracts have a limited lifespan. When you trade futures, you need to be aware of expiration dates, as this will influence the outcome of the trades and your exit strategy. There are two expiration-related terms that are particularly important. First is expiration, and the second is rollover. A contract's expiration date is the last day that a trader can trade that contract. This can occur on the third Friday of the expiration month, but varies by contract. Prior to expiration, a futures trader has three options. Offset the position to fully close out the trade, roll the contract from the current or forward month to a future expiration date, or to let the contract expire and take delivery. Offsetting or liquidating a position is the simplest and most common method of exiting a trade. When offsetting a position, a trader is able to realize all profits or losses associated with that position without taking physical or cash delivery on the asset. To offset a position, a trader must make an opposite and equal transaction to offset the trade. For example, a trader who is short 2 contracts of WTI crude oil expiring in September will need to buy 2 contracts of WTI crude oil expiring on the same date. The difference in price between his initial positions and the offset positions will represent the profit or loss on the trade. Rollover is when a trader moves his position from the front month contract to a month further out in the future. Traders will determine when they need to move the new contract by watching the volume of both the expiring contract and the next expiring contract month. A trader who decides to roll their position may do so at any time before expiration, but can risk much lower liquidity as expiration nears. For example, a trader who is long 4 contracts of the E-mini S&P 500 expiring in September will simultaneously sell 4 September ES contracts and buy 4 December ES contracts. If a trader has an offset or rolled his position prior to contract expiration, the contract will expire and proceed to settlement. At this point, a trader with a short position will be obligated to deliver the underlying asset.
Yeah, it doesn't tell me how to roll it. Just manually, I guess. I probably should trade the or close these. I don't want to go to settlement. SPY is moving up a bit. Birds up 27%. Should have closed these yesterday. This spread is getting a little wild. GME still down 1.85. Silvergate below VWAP, up almost 10. Birds, some profit taking going on. All right, close those contracts. See if I have any buying power left over. And Silvergate moving right back up. Sundown ounces earnings 414. The SI moving up here. Bobby giving back some of its gains. NRGV rallying up 7%. SPY waiting on. This thing's so flat. Leave Bobby can touch this guy. Bird 21% still. But coming down. Silvergate pumping back up. Yeah, above VWAP, 13% there. Got an order for 2 more covered calls to sell. Just doing weeklies right now. BBY doesn't have a special meeting date planned. So yesterday was the record date for the shares. So they just took a record of who owned what shares yesterday. And that's it. So in their filing, they said that they might have a meeting to vote on a reverse split. That's it. So there was no date, no definite anything. J-Pong. Things went out on 160, 180. Maybe. Kind of the bottom of this bull flag. Might keep rallying before it does that though. I like the harmonica. Morning, Dennis. I'm moving up here. Jamie not getting the pump with SPY. BBY still basically flat. U.S. home prices fell in January for the 7th consecutive month. According to the Case-Shiller Index, the 5.1% decline over the last 7 months is the largest 7-month decline since 2011-2012, but prices are still 38% higher than they were 3 years ago. Little chart there for you. Oh, did you have a link for that bank meeting, Jason? SPY moving up here more. Got 397.06 for a pre-market high. Like it's gonna make its way up there. GME is finally getting a little green candle from it. But holding up that 8.5% or so. Silvergate still up 10, right at VWAP. Buy is almost green, down 0.03%. About to flip green though, it looks like. VFH. Red Financial. Oh yeah, you got a little island bottom. Yeah, you've got a little island bottom too, sort of. That is neat. Red Financial. Make that bread. That gas getting a little bounce here. I'm out of my contract, so. And I haven't bought into next month's. Gonna wanna sit out for a bit. If breaking this low, could have been a false breakout, but so far it's not looking like it. Third's holding up 24%. SI 9% or so. ACB 25,000 shares. Looks like today it bounced off of this support, which is good. Kind of got a little inverted head and shoulders here on the hourly. Also nice. It's a big red candle this morning though. Kind of rejection on that 50. You do have an RSI divergence here. Or wait. Just real faint. Real subtle one. From 2607 to 2605. So it could be finding a bottom. Your MACD flip bullish on the daily. You want to see it hold this support. Basically that it bounced off today. If it starts to break through that, then probably going to keep coming down. Bullish case would be, of course, breaking kind of this high. Starts breaking these levels up here in the resistance. But yeah, not too bad. Not too bad. Could be at a bottom. I wouldn't sell necessarily if I was trading it unless it broke down here. I broke through here. And if I wanted to add, I wouldn't add unless it broke to the upside, maybe like past 75 cents. But people have different strategies. Oh, cannabis, Roar Cannabis. That's so funny. I haven't seen that one in so long. We've got Sundial earnings coming up, as Don said. That could be a sympathy catalyst, depending on how that one moves. If they come out good and that rips, ACB could also move up. Fundamentally, it's going to be a sketchy stock until it's federally approved, so. Bird's actually holding up pretty well, not too bad. Silvergate right at VWAP. Getty's continuing its climb. Yes. Proterra up 7%. Baba giving back some of it. Still holding up pretty good though. GME's slowly making its climb back out of here. Weird bearishness on it this morning. I continue to climb up. Pre-market 397.06. That next level I've got for it. They got the bill through the House. FDIC banks to handle their funds. That's a good start. Might be good for banks. Banks could use it. Banks could certainly use the help. Any liquidity they can find.
I'm just leaning a little bit bullishly.
Lululemon.
Big pullback we've seen in the stock from the recent highs, towards the 400 area. So I'm going out buying next week 335 calls, selling this week's 335s, paying about $1 for that. More importantly, capturing a big
all right, there you go, GME, getting back up to VWAP.
Able to sell
You saw your
about
puts,
100
Don?
IV this week, hedge with close to a 60 next week.
Energy
so should have
up
a pretty wide
8.5%.
swath of profitability on this one. And given my kind of outlook that I don't think Lulu's going to be rip-roaring to the upside or
I think it's got an RSI divergence in the daily.
I think the stock will be well contained. So I kind of favor it a little bit bullishly here going forward. But, certainly I think more of a neutral trade and vol capture trade with just a slight bullish lean.
All right,
Can you not type weed?
Bullishness here, and I will say that the chart seems like it kind of supports the bull case arguably as we kind of
chicken nickels, yeah.
support. Well,
Yeah, you probably would have been back red on it if you were just barely green.
Not really an obvious bear case. I mean, Lulu's kind of been carving out a sideways range for a while, so
Bird's holding up well. This thing might rally today.
That you're using here, because I mean, it looks like
rally back up.
if you looked at Lulu's
Silvergate also little pump on Silvergate up through VWAP.
80% chance it was between 320 and
holding that
Yeah, and pretty much, I'm just looking for
holding
those
above 2 at
rates
least.
and going back even a little bit further
back up to
on
2
earnings.
1/4.
We have a couple, earnings gaps that are right around that 335 area.
Increase
going
my
back here, and
covered call
certainly it's
order
been
from
grinding,
4
but
to
grinding a little bit
6.
higher here. So I think, post
These aren't going to get filled unless we probably make a new high.
Maybe not, and even if it just stays right here, this trade will profit from the vol reversion. So it's kind of almost more of a IV capture trade as much as a slight bullish trade from the strike perspective. So I'm really not out over the skis too much as far as a rip to the upside. And as you alluded to, it's been kind of stuck here around the 310, 315.
Oh, this guy's Aloha wear.
It stays around there.
These and the white pineapples.
That will work out very nicely for this trade as well.
Okay. All right, I like it. So kind of a
GME
range
bouncing up a
slightly
bit.
bullish trade for Lulu. Collect some premium, fade a little bit of the vol.
Not a whole lot of action yet this morning. It's been almost an hour.
Go bananas
Buy has
on the report. That essentially
slowly
is
grinded back up.
the soft point of this trade, the opening, its vulnerability, as if Lulu goes 10 or 12% in either direction.
Still in a bullish trend, in my
exactly.
opinion, on
We're
SPY.
only paying $1 on this one, and I'm, almost certain that be able to capture something on either the spread or the leftover calls, depending which way the stock moves. So really not risking a lot, but with the potential the stock does move a little bit higher here.
Most sweet stocks are candidate. It seems like it, yeah.
Nice, tripler or even quadrupler. So
it's not legal there yet.
I like using these weeklies.
No, they passed it.
Especially
Didn't Canada pass it?
This big, because I do like the magnitude of the payoff, as well
Morning,
as the
Rob.
slight probability in my favor, I think.
All right, thanks, Tim.
No, I wouldn't expect them their 10K to release it during market hours.
A king of the
They have
Hawaiian shirts in
some
the
kind of
winter of Chicago. Always giving us
something
some
they're
more
releasing
foliage
at
here.
1 though from
Lead
that
off the
tweet.
strategies to Delta derivatives, let's talk some tech and
GME
which
NFT
companies fit
Twitter
into the macro thesis.
said they're
When we
coming
come
out with
back,
something tomorrow at
still
1.
a lot to discuss this morning.
And then I think tomorrow is also the deadline for when they have to release the 10K. Is that right? And so people are just kind of hyping it up together. Let me see the tweet where it's at. Yeah, it's this one. So ready to explore more of G America. Wednesday, March 29th, so tomorrow at 1. Exploration loading. The only thing that we've seen from GameStop with G America was didn't they have like some did they release some NFTs with like just that name on it or something? We haven't seen anything like real yet from it. So it might be more stuff like that, just more NFTs, I'm not sure. But it could have something to do with what's going to be on the 10K also. But I doubt they'll release that during market hours. Silvergate holding up nice. SPY with a red candle. GME following suit. Oh, what? BBY is green 0.5%. Carnival's up 6.5%. Back up to its high from this morning. Ops. This one has been a mover. Might be a nice one. What's Evital doing? Is it still? Yeah. Evital's up 2.25. Eight up 5%. Evital needs volume. Yeah, but it's still interesting to see Evital kind of have a trend and a rally, a trend to the upside, not just some explosive spike with volume and stuff. Maybe it's doing something different. Turned over a new leaf. For explosive GME action, yeah, I think it's got to be forced, rolling over, closing, or whatever they have to do. But not to say we can't get big price action from news, as we saw with earnings, 50% gap. And that could turn into some forced closing or rolling, covering. Depends on margin. BBBY up 1.5%. 80 cents on this old girl. That's good to see. 2% now. Like I was saying this morning, we're at the bottom of this channel, so you really want to see flat or up. You don't want to drop below these levels. The fact that we're rallying is a good indication still that we're consolidating in this channel. Not falling. Not falling is the best thing for it right now. 1.8%, 2% on BBBY. Bit of volume on that push also. Yeah, 80 cents was kind of, yeah, that was kind of the level from back here, so. It blew through that. I think it might be holding that as support now, which would be good. Did that the other day also. Yeah, right here. Kind of sold off in the morning, rallied up, and then used that 80 cents as support. Springboard it. What was the force? No, the earnings was not for that was fundamental news moving the stock. What AC is talking about is when we've seen GME do its pinches, you know, like this volatile stuff, this stuff when they're having to roll over their swaps or whatever they have to do. But I'm not sure we're gonna get those anymore. So might just be a fixed stock now where it actually trades on news and fundamentals. Yeah, I was curious on EVTL just because it's, oh wow, just popped up 6.5%. Just up like 2%. Just because this rally is a little different. It's not just one little pump. It's not even like this really yet. Might turn into that, but maybe at a price where it's just too much buying pressure. Buyers are finally outweighing the sellers. Daily engulfing candle would be nice on there. Silvergate holding up above VWAP. Bird's kind of coming back down. Ops 7.5%. Can't get a good read on this chart. It looks like it could be bullish, but not. I almost want to see a gap for an island. We already got that gap down. Starbucks. Morning, Mohammed. Mahmoud. I was wondering if you were being cheeky. I was wondering. I answered as if you weren't, so I give you the benefit of the doubt. GME rejecting VWAP, coming back down. SPY also coming down with it, but it's above VWAP at least. BBBY ripping 4.5%, 5%. Okay. None of you guys even calling out BBBY. Well, at least you have thumbs up. Thanks for your thumbs up. Got 26 of them. Well done. See if we can get back up to this 88 cents. Pretty good volume there. Little morning liquidity pump on BBBY. Need something to sustain. Get a little spicy. Morning, Julian. Gradient Investments talking about.
Look at the growth rate going forward. For the next
No, there's no
several
news.
years,
There's no
we're
news on
talking
this
high
thing.
teens, so that's
I mean,
grow
maybe there's
2x
news,
the
but
overall market, and yet
this doesn't
valuation
look like
trading
news.
at a discount.
News will
Currently
most
now
likely
it's
come in the
trading
after
around
hours,
16, 17 times
and you'll
next
know
year's
because it'll
earnings,
probably pump like
which is in line with
100%.
the S&P 500, but I'd argue that
Most likely not
grow,
going to come out in the day and start rallying like this.
Rate, so high quality name, good cash flow, good control expenses. I think this is a place you want to invest going forward. Again, for the next 6 to 12 months, the next 3-4 months, yesterday, today, it's going to be choppy, but we think as the year goes along, the stock will grind higher.
Okay. Keith, thanks for the update and the specifics here on the stocks.
Thank you.
Keith Kingle, Portfolio Manager at Gradient Investments, with the bull case here for the big tech story. Alphabet struggling a little bit today. I think it might be related to that rap battle. Check it out, man. It got smoked.
Birds kind of at the lows from today.
Okay, Chartmaster.
Silvergate holding up above VWAP.
Microsoft, Block, and Nike.
13%.
On the list today, all with analyst moves, and the only one
Even
here
at the
higher
lows,
actually
Energy
is
V still
Jack
climbing.
Dorsey's maybe now beleaguered
Lava's still holding up.
payments business. After that Hindenburg report, things haven't quite been the same.
Even told it just gaps around, dude. It's crazy. Now it's up 3%. Goes 3% in like a second. It's kind of like BBY. Being the penny stocks that they are. That gas broke through VWAP. SPY flushing here. Below VWAP, below the support down here. Only wick down below that level. King Julian. GME not getting the flush, but it's already down 2%. Birds at the lows. Silvergate just kind of hanging out around VWAP. There's a little red candle on SI. Mullen? I think they'll be bankrupt at some point. Maybe bought out. But they're due to deliver Friday. They have numbers or something coming out. Jeez. Mullen Automotive files lawsuit against Intersection Media Group and reported for damages sustained from false article. Art looks awful. Five, big red candle. Big order to RM for class 1. Buy at the low. I know you keep saying it, Jay. I know you keep talking about it. New low on SPY there, 394.83, flushing down. Touch it. Ace, thank you, man. Ace just gifted a free membership to any of you grays. That's a pretty big flush on the SPY. Let's see. Oh, Bullard's talking? Maybe that's why. Bullard says financial stress can be contained with macro brew tools. I don't know what that is. Let me see here. Thank you, Ace, for your membership. If you guys aren't a member, click the membership. It's free. See what's going on. That's a big red candle on SPY there. Jamie's getting the flush with it, down 2.8. Oh, is this from the banks? Yeah, maybe. Maybe from that bank hearing. BBBY up 2% still. Looks like it maybe got affected by the SPY there with that red candle. Birds kind of melting down. New lows on it for the day. Starting to fill that gap. Silvergate's still holding up pretty good. 10%. Getting a bit of a bounce. Yeah, I think it might be from that bank hearing going on. Fox D. Yeah. Yeah, the problem was this news was on bankruptcy. According to Donroe, that was the catalyst for that, so eh. SI below VWAP. Still holding about 10%. Birds starting to drop and fill the gap. BBY now holding up above that 80 cent level, similar to what it did this day, where it kind of broke through it and then used it as support. So see if it holds that again, that'd be good. Thanks for your likes, guys. Got 27 of you this morning. It's been about an hour. I think we're hearing from the banks right now, causing maybe some of this sell-off. There's 28 of them. Thank you. Grab luck. Maybe there's some news. I'm listening to the bank testimony. The like record? I mean, it's probably in the mid hundreds, 400 or 500. This time next year, they don't go bankrupt. Yeah, good. If it gets bought or something. I posted that Birds video, yeah, from Zip. He was the sole reason I think for this pump. It says Zip Trader written all over it. Not to say it can't keep going. I mean, insiders have been buying, which is bullish, and it's seen definitely some pre-market moves. 24 cents from right here. That's crazy. 74%. Let me open it up. Yeah, let me see.
Senator Brown, I do agree with that. I think the actions that were taken have been working to stabilize deposits. Had they not been taken, the runs by uninsured depositors from many small and regional-sized banks and mid-sized banks would have intensified and caused serious problems for small banks' liquidity and their ability to support small businesses.
Thank you. And if you can answer this really briefly, because I don't want to go over my 5 minutes. Mr. Gruen, Chair Gruenberg, the FDIC announced the sale of SVB and to First Citizens Bank and Trust from Senator Tillis' North Carolina. Estimated would cost the Deposit Insurance Fund approximately $20 billion. How's that cost covered?
Oh, that is required by law, and I indicated in my opening statement. The FDIC has to impose an assessment on the banking industry to cover the cost of a coverage for any uninsured deposits. And I would note that
GME
the law
being
provides
fixed,
the FDIC authority
it's not going to
in
have crazy
implementing
pullbacks,
that
so
assessment to consider the
Unless
types
there's crazy
of
upside,
entities
so you're not
that
gonna get crazy
benefit
upside.
from any action or assistance provided.
It's
And as I also indicated in my statement,
Good
we
and bad.
expect to issue a notice of proposed rulemaking for public comment in May to implement the assessment.
Thank you. And I would point out in your testimony and your answer, there are no tax dollars, nothing funded through the congressional appropriations process. Senator Scott.
Thank you, Mr. Chairman. What is the future of regional banking? Sure.
I think we have a strong set of regional banks in the United States. I think it was, and as a general matter, their liquidity has remained stable through this episode. And I think it was a good indication, frankly, that in the two failed institutions, in both of those cases, the strongest bids we received to acquire those failed institutions were from two other regional banks that had the capability and strategic business interest to acquire them. So there are a lot of cautionary lessons to be learned from the Senator. I completely agree with that. And we're going to need to carefully review this episode. But as a general proposition, I think the regional banks in the United States remain a source of strength for the system.
I'd say I walked in on the chairman's comments about the actions that were taken the weekend of the March 9th and how important it was and the importance of making sure we get credit for doing something that actually I thought could have been avoided, frankly. I thought it could have been avoided if we had someone in the private sector make the decision to buy the bank, buy the assets. Had that been done on Friday, March the 10th, I think we could have literally eliminated the fiasco that we saw over the weekend. Were there folks interested in buying Silicon Valley Bank on Friday?
Senator, just to be clear, before the bank failed on an open institution basis?
After.
After the failure on a
No,
closed basis.
A's gifted a free membership.
We
Scroll
had
up, click the green
expressions
box.
of interest.
Click receive gift or
Remember, this
accept
was
gift.
a very rushed process, if I may say. The bank failed on Friday morning. We had to, the other institution failed over the weekend. We had to set up two bridge institutions to manage those failed banks. To your point, though, we had expressions of interest. We quickly set up a bidding
Carnival's
process
breaking out.
that we ran on Sunday. We received two bids.
GME wicked down
One
to
wasn't valid because it
the
had not
support
been
level.
approved by the board of the bank.
So I'll see if it
And the
see if
other,
it respects that as a
after
level.
we evaluated it, indicated that
I
it
kind of set up a little
was
bear flag
more
here.
expensive than a liquidation of the institution would have been to the FDIC. So in effect, we did not have an acceptable bid, and it was really a determination that we made to try to set up two bridge institutions to manage for a short period of time these two failed banks, and then to organize a bidding process, an open bidding process for both institutions, which we ultimately were able to implement successfully and sell Signature Bank previous weekend, 2 weekends ago, and then to sell SVB this past weekend.
Are you suggesting that the fact that the board had not approved the decision,
Scroll up
the
in the
offer
chat,
that was on
J-Pong.
the table,
Scroll
was
up to the green
primary
box.
reason why you turned down that offer?
It was one of the
There's gotta
bids.
be a way
As a
that
matter
this
of
is
we were
automatic.
required for a bank to make a valid offer for the
Yes.
board of the bank.
To approve the offer?
Yeah, as a
That
matter
was the
of
primary reason why you did not go
For
that one?
that bid, the other bid did not have that issue, but the other bid was more costly than liquidation would have been.
So you're suggesting that
SI coming down a little bit
private sector
here.
engagement would have increased the cost?
It's up 7
not
1/4.
decreased the cost?
At that point, I think in
Got a
part because
bearish MACD,
it
rev
takes
into
a
the
bit
9,
of
so
time.
if you
for-
find
this is
support
a
at
substantial
$2.
institution. It takes some time for a bank to do appropriate due diligence, to evaluate the assets and liabilities, and to make an informed bid for the institution. And I think as a practical matter, that was difficult to do given the compressed time frame over
moving
that
up
initial
here.
weekend. I think that's why we set up the bridge institutions to try to put in place quickly
Click the
an
box and
orderly
allow
bidding
free gifts.
process where any interested party could submit a
get
bid,
it?
have an opportunity to do due diligence in order to evaluate the institution and to make an informed bid. I think we were ultimately able to do that for both of these failed institutions.
I'll just say with my remaining time that I look forward to the second round of questions, but I will say without
Second,
question
double
that
their
we
market
have
cap
had a better
within 5
private
years.
sector engagement with quicker action from the Feds.
Yeah,
I
yeah, I think
we
they doubled their
could
market
have
cap within 5
avoided
years.
the concept that rushed
I don't know about
us
paying
to
dividends.
a decision, which was a concern of contagion.
That's usually like
in part. That could have been avoided if we had a decision made on
down the
Friday,
road.
if there were private sector folks willing to make a decision. But we'll have an
Way down the
opportunity,
road.
hopefully, on the second round.
maybe like a one-time dividend, but
Thank you, Senator Warner from Virginia. Welcome.
Well, thank you, Mr. Chairman, and thank you for having this hearing. It's good to see all of you. A couple weeks ago, when we were in a Finance Committee hearing, I asked Secretary Yellen that I thought it was very important that we try to get all the facts out about what happened here. I very much appreciate Vice Chairman Barr, you taking on this unenviable task of sorting this out. Because I've got real questions. Was this a regulatory and bank management failure?
I'm moving
Or
back up a
was it,
little bit.
as some on my side of the aisle have indicated, was it a statutory failure? If it was a statutory failure and an additional test or activity was needed,
There you go,
I'm all
you
for
got
putting
it.
in place. But my operating premise at this point is, if this had been not a $200 billion bank, but a $5 billion bank, that management's mistakes, not having a risk officer or other items, and failure of basic prudential regulation should have caught this. We had two chief regulators, a state regulator.
Yeah, Nessie
At
is
some
taking
point,
over.
Mr. Chairman, I hope we would get in front too. Where were they? And obviously the San Francisco Fed. So I'm going to be very interested in making sure we get to the bottom of this. I think some of the things you've already pointed out, Vice Chair Barr, is that the bank's business concentrating in one industry,
holding above
an industry
VWAP,
that I
but it
used to
is
be
just
part
below
of.
that 80-cent level.
But the fact that there was such high
We're listening
concentration
to
of counterparty risk,
bank
my
testimony.
understanding, 10 depositors alone had about $13 billion of deposits. Again, it seems to me interest rate
Senate committee holds
mismanagement
hearing
is
on Silicon
banking
Valley Bank
101.
collapse.
The ego on you.
And again, even at a $5 billion bank, this should have been called out.
You did it, J.
I
Paul.
also
Thanks,
think
Ace.
the
Thank Papa
speed-
Ace for that free
I've often
membership.
cited the fact that the largest bank failure we've seen was WAMU back in the crisis. $16 billion left that bank over a 10-day period. In this case, $42 billion, the equivalent of 25 cents on every deposit, went out in 6 hours. I'm not sure at that point what regulatory structure could have prevented that. And at least from reports, it seems to me that, and I say this as somebody who used to be in the VC industry, some of the very VCs who banked for a long time at SVB may have started this run and demanded all of their ancillary companies all go out at once. So, Vice Chairman Barr, can you take us through with a little more detail, starting Wednesday
He's
night,
proposing it was
Friday
targeted.
afternoon, how this
Sounds
happened,
like.
how we got here, and what you've seen so far?
Thank you very much, Senator. I'll start where you did, which is this is a textbook case of bank mismanagement. The
BBY
risks the
coming
bank
back
face,
down here.
interest rate risk and liquidity risk, those are bread and butter
Liquidity pump
banking
is over,
issues.
maybe.
The firm was quite aware of those issues.
Birds,
They've
a little
been told by
green candle.
regulators. Investors were talking about problems with interest rate and liquidity risk publicly, and they didn't take the action necessary. They were quite vulnerable to risk, to shocks, and they didn't take the actions necessary to meet that. What happened on Wednesday night is they belatedly attempted to improve their liquidity position, and they did it in a way that spooked investors, that spooked depositors, that spooked the market. Nonetheless, on Thursday morning, things appeared calm, according to the bank's report to supervisors. But later Thursday afternoon, deposit outflows started. And by Thursday evening, we learned that more than $42 billion, as you had indicated, had rushed out of the bank. That's an extraordinary pace and scale. Federal Reserve Bank staff worked with the bank
Bounce.
through the afternoon, evening, and overnight to try and find enough collateral that the Federal Reserve could continue discount window lending against. On Friday morning, it appeared that it might be possible to meet the outflow that was expected the day before. But that morning, the bank let us know that they expected the outflow to be vastly larger based on client requests and what was in the queue. A total of $100 billion was scheduled to go out the door that day. The bank did not have enough collateral to meet that, and therefore they were not able to actually meet their obligations to pay their depositors over the course of that day, and they were shut down.
Senator Crapo is recognized from Idaho.
Thank you very much, Mr. Chairman. In your testimony, Mr. Barr, you indicated that you were going to be, in one of the aspects of what you're working on, you're going to be looking at whether more stringent standards are needed. And I want to follow up on Senator Warner's questions relating to this argument that has been put out there, I think, as a part of the blame-shifting game, and there's a lot of that going on right now, that it was a statutory failure. That brings us to the 2018 reforms, Senate Bill 2155. And I just want to read to you a couple of sentences out of Senate Bill 2155 with regard to the question of whether that legislation prohibited our federal regulators, and particularly the Fed, from doing anything they needed to do with regard to applying the appropriate strict standards. And to start out with, I will read what Senate Bill 2155 did was to stop a one-size-fits-all system and mandate, by changing the word may to shall, mandate that the Federal Reserve tailor its regulations to the risk and so forth. I want to read the language. It mandates that the Federal Reserve differentiate, as it tailors, differentiate among companies on an individual basis or by category, taking into consideration their capital structure, riskiness, complexity, financial activities, including financial activities of their subsidiaries, size, and any other risk-related factors that the Board of Governors deems appropriate. And then at the conclusion of the statute, that section of the statute,
gas is moving up, of course.
It makes it crystal clear, and this is the statutory language. Nothing in subsection A shall be construed to limit the authority of the Board of Governors of the Federal Reserve System in prescribing prudential standards under this section, or any other law, to tailor or differentiate among companies on an individual basis or by category, taking into consideration their capital structure, riskiness, complexity, financial activities, including financial activities of their subsidiaries, size, and any other risk-related factors that the Board of Governors deems appropriate. And I could go on with multiple times that language was repeated. My question to you is, was there any statutory restriction faced by the Federal Board of Reserves as it issued its regulations on tailoring that would have prohibited them from applying the strictest standards they could to address the prudential needs of our banking system?
Thank you, Senator Crapo. I agree with you. There was substantial discretion under that act for the Federal Reserve to put in place tailoring rules that were different from the tailoring rules that it put in place in 2019. I think there is still to this day a substantial discretion in changing those by notice and comment rulemaking. That's one of the areas that we'll be looking at in our review, whether there should be appropriate changes. There are some areas for, particularly for smaller firms, firms between 50 and 100 billion, where the act is more prescriptive. But for the firms of the category that we're addressing today, there's substantial discretion for the Federal Reserve to change those rules in a way that is supportive of safety and soundness and financial stability.
Thank you, and I appreciate your answer. You said recently that the bank failed, referring to SVB, as the public began to focus on changes in values of securities in the bank's held-to-maturity account. That's correct, right? My question to you there is, did the standards on that risk that are used for supervision, were those changed at all in Senate Bill 2155 in 2018?
The standards for capital rules are determined by the bank agencies. The bank agencies made a decision to for smaller categories of these large banks to not require the pass-through of AOCI into the capital structure. But that was a decision that is available to be altered by the discretion of the bank agencies.
And was not mandated by 2155.
No, it was not mandated by 2155.
Last question is, under the current standards that are applied with regard to capital, was SVB adequately capitalized?
Prior to its failure, it was categorized under current capital rules as well capitalized.
All right, thank you very much.
Thanks, Senator Crapos. Senator Cortez Masto from Nevada is recognized.
Thank you, Mr. Chair. Thank you, all three of you, for being here. Vice Chairman Barr, let me start with you. You've talked about how the Federal Reserve is undergoing an investigation to determine whether the Federal Reserve actually failed in this instance. Is the Federal Reserve the appropriate body to conduct this investigation, or should we have an independent investigation?
Thank you, Senator. It's a terrific question. We describe what we're doing as a review. We're reviewing our own practices. I think it's an important part of risk management to do self-assessment. I think it would be irresponsible and imprudent of us not to do self-assessment. We're going to take that very seriously. We're going to be thorough. We're going to be transparent. And we're going to be far-reaching in that self-assessment. I also think it's appropriate for outsiders to have independent reviews, and we expect and welcome independent reviews of our actions.
And if you uncover in your investigation that the Federal Reserve failed here in some of its supervisory roles, will you make that public?
Yes, we intend to make our report fully public on May 1st, and that report will include normally it's not our practice to include, but that report will include confidential supervisory information such as the exam reports.
And in the scope of your review, you identify the scope of that review in your written testimony. Is there anything in addition that's not in your written testimony that you will be reviewing here in that scope?
Thank you, Senator. I've asked the staff to be far-reaching. So if they determine that an issue should be in scope, they have full discretion to put that issue in scope and to address it in the review. So there are no limitations on their ability to review how the Federal Reserve conducted its supervision and the regulatory oversight of the firm.
Thank you. And then one final thing, because there's been a lot of discussion about the previous rollback of some of the regulation in votes in this body just recently. If you find that that change in the law impacted the Federal Reserve's ability to conduct the appropriate tests based on the tiering of the bank's assets, would you be forthcoming with that and say so?
Yes, we intend to describe where we think supervisory and regulatory failings occurred. If changing those to make them what we think is the right standard would require an act of Congress, we will say so in that review.
And then Chairman Gruenberg, same to you. You're conducting a scope of the FDIC. Are you comfortable that you can conduct that and be transparent and accountable, or should there be an independent body looking at this?
I think
kind
there's
of
room
look like
for
a bear
both.
flag
As Michael
here.
indicated, I think it's important for each of our agencies to look internally at our supervision of
That
these
gas
institutions.
moving up 1.5%.
And draw lessons from it. In our case, we've asked our chief risk officer, who's not directly involved
Would've been
in the
happy just to
supervision
roll it, but to
process
close
has-
it and
whose
reopen
role is
it.
to evaluate risk
Just couldn't
at
do
the
it.
FDIC to undertake this internal review of our supervision of Signature Bank.
Thank you. And then there's been a lot of talk in the media
NRGV is just
about
branded up
the
today,
executive,
13%.
Salaries, about the executive bonuses, about the sale of stock. Let me ask the three of you. My first question is, what
Donroe
authority
always-
do you have to claw
He's
back
trying to run like
any of
many
those
tickers as he can at once.
bonuses or the executive pay, or even deal with the
Crazy.
sale of the stock? And maybe Mr. Gruenberg, let's
Crazy
start with
town.
you, and then we'll go down.
Thank you, Senator. You know, as I indicated in my opening statement, the FDIC, for every failed institution, is required to undertake an investigation of the conduct of the members of the board, the management of the institution, as well as professional service providers and other institution-affiliated parties. We've already begun that investigation, and we have significant authority under the law, depending on the findings of the investigation, to impose civil money penalties, restitution, and as well bar individuals from the business of banking. So the authorities are substantial, and we're going to pursue this as expeditiously as we can. I know there's interest. We do not have, under the Federal Deposit Insurance Act, explicit authority for clawback of compensation. We can get to some of that with our other authorities. We have that specific authority under Title II of the Dodd-Frank Act. If you were looking for an additional authority, specific authority under the FDI
Brought up
Act
the other day, was that by you?
for clawbacks, probably would have some value here.
Thank you. Mr. Barr?
Thank you. The board does have authority to pursue actions against individuals who engage in violations of the law, who engage in unsafe or unsound practices, who have engaged in breaches of fiduciary duty. We retain this authority even after
right near that level, basically.
Fails. And we stand ready to use this authority to the fullest extent based on the facts and circumstances. And as with Chair Grunberg, potential consequences include a prohibition from banking, civil money penalties, or the payment of restitution. We intend to use these authorities to the fullest extent we are able.
Thank you. Ms. Lang, and I know, with the chairman's indulgence.
Yeah, briefly, Ms. Lang.
Yes, I defer to the FDIC and Federal Reserve on this.
Thank you. Thank you, Mr. Chairman.
That was brief. Thank you, Madam Undersecretary. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. First of all, thank you to all of you for appearing before our committee today. Vice Chair Barr, in your testimony, you said that in November, the Fed supervisors delivered a supervisory finding on interest rate risk management to Silicon Valley Bank. As you know, the communication of supervisory findings must be focused on significant matters that require attention. Matters requiring immediate attention, or MRIAs, are matters of significant importance that the Fed believes need to be resolved right away, including matters that have the potential to pose significant risk to the safety and soundness of the banking organization.
Yeah, Jimmy popped a bit with
my
SPY
question, Vice Chair Barr, was managing interest rate risk listed in the MRIA section of the supervisory finding issued to SVB? And if it was not, why not?
Yeah.
Senator, we're still reconstructing
on
the supervisory
that level
record
again on GME, which is
but my
good sign of
understanding
support.
is that they were issued a matter requiring immediate attention based on the inaccuracy of their interest rate risk modeling. Essentially, the risk model was not at all aligned with reality.
A pretty interesting statement.
SPY all the way back to VWAP.
Aligned with reality. I recognize that you're going to have a complete report, and I'm not going to try to push you too far into this, but I'm really curious. What's the time frame that's expected for a response for an MRIA, one that requires immediate attention?
You've been told
Senator,
10%
there's
now.
not a fixed amount of time. It depends on the issue, the scope of the issue, the complexity of resolving the issue. So I don't have a way of
engulfing candle
giving you
potentially for
a
the
firm
day.
baseline on the action, but they're expected to be a top priority for management to address.
Reality.
And particularly in the interest rate environment that we're in, and knowing that the firm had been cited previously for other problems with liquidity risk management and interest rate risk management, supervisors would expect that would take a high priority attention by top management. The supervisors met with the CFO of the firm in the fall, in October of 2021, to convey the seriousness of the findings directly.
During this time period,
15%
perhaps
now.
for as much as 6 months during that previous
Birds
year,
kind of climbing back
bank
up to
was without
BBBY.
a risk management officer. Is that correct?
That's my understanding. I think it's terrible risk management, obviously, not to have a CRO at the firm. You need an effective CRO as part of risk management of the firm.
BBBY
And
below
as I
BBBY,
indicated previously,
up 0.5%.
the
Didn't hold that
supervisors
80
had
cent level
told
yet.
the firm in the summer that they had deficiencies in governance and controls at the management level
Yeah, I
and
was
the board
looking at
level, and that was
CRNT.
related to their failure
interesting.
to appropriately manage risk.
My understanding is that there was a period of time there in which they were without a CFO as well. Is that correct?
I don't have the
Did triple
details
bottom this time,
of
though.
that, but I'm happy to get back to you.
Okay. and I recognize that there is a difference between a matter requiring immediate attention and a matter requiring attention. Can you kind of share with us the difference? I mean, there clearly is a defined difference between a matter of such importance that it requires immediate attention versus one where it requires attention. Can you talk a little bit about what the expectations are between the two?
They both really signal that
Overgate
bank
moving back up
management
a little
should pay
bit.
attention to what's in front of them. They're not issued
Waking up through
lightly.
VWAP.
Matter require immediate attention is, as its name suggested,
SI also bouncing
telling
pretty heavy
managers that
there.
they should place a priority on fixing this issue over other issues. But the exercise of the line between the two is a matter of supervisory judgment.
Just
BBBY also getting a bounce over
recognizing
VWAP.
once again that we'll get a full report in the next couple of weeks, but it seems to me that when it turns into an MRIA, there is an expectation that the board or the executive officers would respond fairly quickly. To your knowledge at this point, was that expectation met?
Well, I think the fundamental fact is, the firm failed because of its interest rate risk and its liquidity risk, and that is, I think, evidence of the fact that they didn't respond strongly enough and promptly enough.
In other words, with the information that you had and that the regulators had, they were able to determine that there was a problem at the bank, and they directed that there be a response immediately, an immediate response, based upon the data that they were able to gather at that time. That's a reasonable assumption, is it not?
I don't know what the time frame set out in each of the individual orders were, so I'm not able to answer your question with precision, and I want to be very careful to be able to do that.
That's fair.
And not go beyond the record.
Let me just finish with this, though, but we will receive that information when the full report comes out.
Yes, on May 1st, we'll release the full report, and it will include the reports of examination, and so people will be able to see what's in the record.
Very good. Thank you. Thank you, Mr. Chairman.
Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. In 2018, Congress passed a bill which was signed into law by President Trump that relaxed regulation for institutions like Silicon Valley Bank. That law, which I opposed, exempted those banks from enhanced prudential standards, stress tests, raised the threshold at which a bank would be considered systemically important. But even as that law kept Silicon Valley Bank off the list of systemically important institutions, the Fed and the FDIC rightly cited systemic risk to justify their actions to prevent runs on other banks. So, Mr. Barr, Mr. Gruenberg, each of you voted to invoke what is known as the quote, systemic risk exception. So with a simple yes or no, can you tell me that the situation at Silicon Valley Bank posed systemic risk?
A week before.
Thank you, Senator. I think it's an absolutely crucial question. The invocation of the systemic risk exception required judgment as well as incoming data. Our best assessment, the assessment of a unanimous Federal Reserve Board and a unanimous board of the FDIC and the Treasury Secretary, was that we were seeing signs of contagion in the banking system that threatened to put at risk depositors and banks across the country. And to make sure that banks could continue to lend in their communities, to make sure that depositors were safe, to make sure that businesses could pay payroll, well, we thought it was important to invoke that systemic risk determination and prevent that.
Because you felt that Silicon Valley Bank was a systemic risk at that point in time?
The judgment was really broadly about the risk that the failures of these institutions and other stresses in the system were posing as a whole, as opposed to a particular decision
only about... It seems to me that sounds like a distinction without a difference. If any single bank's failure can cause contagion, that threatens the system, then it seems that the bank should be considered systemically important. And so we need, you all need to have an obligation to be clear with us and with the American people when you took extraordinary steps to protect uninsured depositors that could very well lead to increased fees charged to banks and ultimately to consumers. So I think we need to be clear about what is a systemic risk. And so I'm looking forward to a more crystallized version of that. I was here in 2008. I don't want to live through it again. Do you agree with President Biden's statement 2 weeks ago that Congress should strengthen rules for banks to make it less likely that we will see another failure similar to that of Silicon Valley Bank?
Thank you, Senator. I think it's important for us to strengthen capital and liquidity rules. We're working on strengthening them as part of our Basel III reforms and our holistic review of capital. And I think we need to move forward with that. And as both Chair Grunberg and I suggested, with a long-term debt requirement that would provide an additional cushion in addition to capital for large institutions. That work will need to go through notice and comment rulemaking. There will be transition periods for it, but I think that is really important work for us to do, and I'm committed to doing it.
13.5.
Well, let me ask you, Mr. Barr. This morning, I, along with Senator Rounds,
It's gone up 10% since we started watching it.
a letter to Chairman Powell asking him to explain whether the Feds applied enhanced supervision or prudential standards to Silicon Valley Bank or any similar sized bank using the Fed's existing authority. We've also learned from public reporting that Fed supervisors began flagging problems as a SVB as far back as 2021. Now, I understand we have a lot more to learn about the facts of what transpired, both at the bank with any management failures, but I expect that we're going to see that all factored in as part of a review. So as you begin that review, let me ask you, do you agree with Chairman Powell's statement last week that from what we know, it is, quote, clear that we do need to strengthen supervision and regulation?
Yes, I absolutely agree with that statement.
Thank you for that. Now, lastly, what I would love to know, Mr. Greenberg, about as we think about should we raise the federal deposit insurance, what percentage of account holders does that account for, how much is private versus business, and what are the costs that are associated with it. So I'll just put that out there for you to submit an answer to the record because it will take more time than what I have. But the last point I want to make is we have seen a flight from regional and community banks to quote-unquote too big to fail banks. And a concentration of deposits at a select few institutions also brings about its own risks to the financial system. At the end of the day, it seems that we are incentivizing entities to go to too big to fail banks. It only makes it even more consequential in terms of too big to fail. Is that what we want to ultimately achieve in this process?
Senator, I think that the goal of the actions that we took are to make sure that we have a thriving and diverse system of banking in the United States, including community banks and regional banks that are the lifeblood of many communities all across the country.
Thank you, Senator. And Senator Kennedy, Louisiana, is recognized.
Thank you, Mr. Chairman. Thank you all for being here today. Chairman Barr, we, the Federal Reserve, rather, stress tested 34 banks in 2022. Is that correct?
Senator, I don't have the exact number in front of me, but that
well,
sounds,
I have your report.
I
have your
correct.
report. It says 34.
You mean moving back
and
up
the
to
cutoff
VWAP?
was $100 billion. Is that right?
Yes.
Okay. You didn't stress test Silicon Valley Bank, did you?
No, under the Federal Reserve Board's rules that were put in place for transition into the stress testing, it takes a while for a firm to be considered above the threshold. Yeah. They need to have a rolling four-quarter average.
Did you stress test Silicon Valley Bank in 2022?
No.
Okay. Silicon Valley Bank had $100 billion, more than $100 billion in assets at the end of
Evatol,
14%. Did it not?
By breaking up their VWAP.
As I was explaining, the transition rules in place at the time require a rolling four-quarter average to be above that amount.
Okay.
And then if the firm happens to be in a year that isn't the year that, since it's an every other year test, that a test is running, then it waits till the next year. So for Silicon Valley Bank, that would have meant 2024 would be its first stress test.
But the point is, you didn't test Silicon Valley Bank.
We did not apply a stress test to Silicon Valley Bank. It was, of course, using its own stress test.
Did you have the authority to do it?
Under our existing regulations, no. We would have to change our regulations to have that authority.
Under the Congress's
14.29%.
amendment to Dodd-Frank, Senator Crapo talked about it, 2155, Section 252.3. Isn't it a fact that we gave the Federal Reserve the authority to stress test Silicon Valley Bank?
GME breaking through BBBY.
Under that legislation, the Federal Reserve could have put in place a rule defining the word periodic in a different way than was done.
Right, but you didn't, did you?
The Federal Reserve did not do that.
Okay. If you had stress tests, well, let me put it this way. If you had stress tested Silicon Valley Bank in 2022, it wouldn't have made any difference, would it?
I don't know the answer to that question.
Well, you didn't test for Silicon Valley Bank's problem. I've read your report. Your stress test, you stress tested these 34 banks for falling GDP, spike in unemployment, and defaults in commercial real estate. Isn't that correct?
Yes, in a typical adverse scenario for banks, we're testing falling interest rate
But that wasn't our problem in 2022.
I completely agree with you.
It's not our problem today. The problem is inflation, high interest rate, and loss of value in government bonds, isn't it?
I completely agree with you.
So you stress tested
Yeah,
in
I said a small bank.
2022 for the wrong thing.
The stress test is not the primary way that the Federal Reserve or other regulators test for interest rate risk.
But you stress tested for the wrong thing.
BBBY.
As I said, Senator, I agree with you that it would be useful to test for higher rising interest
you
rates.
look at, if you're looking
That's
for
why
another
in
SI.
our alternative
SI's only had
scenario,
like 100% run.
scenario that we put in place
100% on
for this
BBY
year's
is
stress test, we do that.
$1.40.
These decisions were made before I arrived, but I agree with you that
But it's like
better to
somebody
do that.
going in for a test for COVID and getting a test for cholera, isn't it?
I don't know enough about either of those tests to know.
Yeah. Well, they're different. So all this business about, well, the amendment to Dodd-Frank kept them from stress testing. The way I see it, you chose not to stress test, and if you had stress test Silicon Valley Bank, you wouldn't have caught the problem.
As I said, Senator, I agree with you that the statute requires periodic stress testing. The Federal Reserve made a decision about how to implement that in 2019.
Right.
That resulted in SVB not being tested planned to be tested until 2024. Well, but as I said, the stress test requirements.
You knew from I'm sorry to cut you off, but the chairman's going to cut me off in a second. But you knew, the Federal Reserve knew well in advance that Silicon Valley Bank had a problem with holding too much of its money in interest rate sensitive long government bonds, didn't you?
I think the investing public and the Federal Reserve, which cited it for interest rate risk problems, knew that it had interest rate risk. I think
the Federal
nobody
Reserve didn't do
anticipated
anything about it, did it?
I'm sorry, I couldn't hear you.
The Federal Reserve didn't do anything about it, did it?
I disagree with that, Senator, respectfully. The Federal Reserve did cite these problems to the bank and require them to take action. Bank management failed to act on those.
You didn't follow up, did you?
Senator's time has expired. I think that I sit here and watch Mr. Barr reluctant to criticize some of the moves of his predecessors at the Federal Reserve. I'll leave it at that. Senator Smith from Minnesota is recognized.
Thank you, Mr. Chair, and thanks to our folks for being here today. Really very much appreciate it. So I want to just start by reiterating what I know some of my colleagues have said, which was that as these two banks collapsed, I heard you say very clearly, Vice Chair Barr, the Silicon Valley Bank in particular collapsed because of what looks like gross mismanagement and failure to manage even the most basic of risks, liquidity and interest rate risks. The Biden administration and regulators took strong and decisive action to protect people and to keep our banking system safe and secure. And the reality is that that action that you took was necessary But it was also extraordinary actions were called for in the moment. And you, of course, don't want to have to use extraordinary actions. You want to be able to rely on banks to make good decisions and to protect their shareholders and to protect their depositors. But let me just clarify one thing before I want to follow up a little bit on Senator Kennedy's questions. The Fed, under the previous Vice Chair of Supervision, put into place rules that I think there's a question about whether those rules, I mean, I think even in the moment, you were critical of those rules, is that right?
Rumble making a move.
Yes, that's correct.
And so your review will take a look at what would have happened if those rules hadn't been in place, and then you can make decisions about what new rules need to be in place to protect from this kind of extraordinary situation that we saw with these two banks. Is that correct?
Yes, that's correct, Senator.
So I think that's just important for us all to understand here as we think about what has happened. The Silicon Valley Bank's failure was the result, it appears, of management failures at many levels, all coming together at the worst possible time. And I'm particularly struck by the bank's failure to manage interest rate risk. You and I talked about this last week, which is basic bank management. It's not rocket science to manage interest rate risks. And, you know, interest rates, were near zero for more than a decade, and a lot of business models, it appears, including Silicon Valley Bank's business model, was predicated on basically free money. And that obviously presents risks when that changes. So I'm concerned, Vice Chair Barr, about other institutions, banks and non-banks alike, how they are managing what must be similar interest rate risks. Could you just address that and talk about how the Fed right now and others are monitoring that interest rate risk and what that tells you about where we need to do differently?
Thank you, Senator. Let me just start with the basic point, which is the banking system is sound and resilient. Most banks are highly effective in managing interest rate risk and liquidity risk. It is the bread and butter kind of work of bank management. So we are monitoring the financial system, monitoring the banking system. We're looking at interest rate risk and liquidity risk across the banking system to assess that. Where banks need to do better at interest rate risk and liquidity risk management, we're pointing that out. But I think the fundamental point is the banking system is sound and resilient.
I might have mentioned to you when we spoke that I had a chance to meet with a group of Minnesota bankers, including Minnesota has more community bankers, I think, per capita than any state in the country, and they were eager to point out to me that their business models are very different from the business models of highly risky enterprises like Silicon Valley Bank. And so I appreciate you raising that. In fact, I've been getting texts from some of my bankers today watching this hearing and wanting to point out that difference. Mr. Barr, can you talk about the risks of interest rate, sort of this interest rate risk as it might affect non-banking institutions, as, for example, mortgage loan companies?
Thank you. First, let me just say, as you indicated, I hear from community bankers as well, and I know many other senators have in your home states.
I got buying power now that I closed my net gas.
And the health of that community banking sector, and we see that too. We are obviously looking at interest rate risk as it affects not only banks but also the non-bank sector. We look at, of course, at non-bank mortgage servicers, we're looking at hedge funds, we're looking broadly across the financial landscape to see where those risks might arise and how those might propagate in other ways into the banking system. So we're highly attuned to that. But again, I think the basic point is that the banking system is sound and resilient. Depositors are safe.
Volume,
and we've, through our actions,
demonstrated that. Bull flag.
Thank you very much. Thank you, Mr. Chair.
Senator Smith, Senator Wallace of Wyoming is recognized.
Daily, we've got a bullish
MACD
crossover.
Thank you, panel.
Going on 3 days
I
now.
want to follow up a little bit on
Green candle
Senator
over the 9-moving
Kennedy's
average.
line of
Wolfen candle back
questioning.
here.
As I read
I'm good as far as TA is concerned.
Statute 5365, Section C, risks to financial stability, safety, and soundness, the Board of Governors may order or rule The Board of Governors may, by order or rule promulgated pursuant to Section 553, apply any prudential standard established under this section to any bank holding company with consolidated assets equal to or greater than $100 billion. So that was Silicon Valley Bank. Then you've got Statute 2155, that when it was changed from may to shall, made mandatory a new duty on the Federal Reserve to take into account higher risk profiles presented by certain banks and to strengthen supervision of those banks. So you look at Silicon Valley Bank. They had a number of activities with above average risk profiles.
Busting through a little bit.
Concentration of deposits. The quantity of uninsured deposits, 94% uninsured deposits. Then you look at Federal Reserve
94% uninsured.
Authority under Regulation YY to impose additional risk-based or leverage capital or liquidity requirements or other requirements the board deems necessary to carry out the purposes of Dodd-Frank. I look at all this and I think that among all these statutes and regulations, the Fed had plenty of authority to prevent Silicon Valley Bank and the problems it encountered, and was aware pretty early on that there were unique problems there and that it was a very, very unique financial institution because of its risk profile, but didn't do it. As I look at what authority you've been given, I can't think of another additional rule or regulation or law that you needed. Tell me whether you agree with that or not.
Senator, I agree that the Federal Reserve has substantial discretion to alter through notice and comment rulemaking the rules that were put in place in 2019 with respect to firms over $100 billion. There are some areas that the statute would provide some limitation to, but there is substantial discretion for the Federal Reserve to change its rules for firms in the $100 to $250 billion range.
Change its rules, what would it have to do?
We would have to go through a notice and comment rulemaking process.
I don't mean the procedure for changing a rule. I mean, what changes would you make to the rule?
Senator, we haven't made a definitive conclusion on that. We're undertaking this review of SVB's failure in order to better assess whether it would be appropriate to change capital rules and liquidity rules for this size firm, for firms more generally. We're looking at that right now.
Is fractional reserve banking overly risky in this age of online banking?
Senator, let me just say, repeat what I said before, which is that overall the safety and soundness of the banking system is strong. Banks are safe and sound. Depositors should feel assured that their deposits are safe.
Well, here's the problem, though. As I see it, the way that these banks have been managed, Wyoming's community banks may end up paying for this through higher
moving up,
assessments
up
from
through
the
VWAP now.
FDIC. Am I correct, Mr.
High on the day was
Greenberg?
2015,
As I indicated, Senator,
28%.
In regard to these two institutions, any cost to the deposit insurance fund from covering uninsured deposits
above that $2 level
is required by law to be recovered through an assessment on the banking industry.
Exactly.
If I make just one additional point, the law does give the FDIC authority in implementing that assessment to consider the types of entities that benefit from any action taken or assistance provided.
So are you saying that you're able to exempt Wyoming's community banks
bounce off the bottom of that bull flag range?
I'm suggesting we have some discretion there, and we're going to
moving up.
Consider that issue carefully.
Will you exempt community banks from having to pay for this?
That's a judgment our board is going to have to make. And as I indicated, we anticipate going out for notice and comment public rulemaking in May to implement the assessment. And as I indicated, we have discretion here under the law.
Do you have to go through APA rulemaking to assess?
That's the law. That's a legal requirement.
Thank you, Mr. Chairman.
Thank you, Senator Lummis. Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. So we just experienced the second and third largest bank failures in American history. Executives at SVB and Signature took wild risks and must be held accountable for exploding their banks. And I'll soon introduce a bipartisan bill to do exactly that. But let's be clear, these collapses also represent a massive failure in supervision over our nation's banks. So coming out of the 2008 crisis, Congress put tough banking rules in place. Now, big banks hated them, and their CEOs lobbied hard to weaken those rules. Ultimately, Congress signed off, and then it got bad, really bad. Regulators burned down dozens of safeguards that were meant to stop banks from making risky bets. Now, the three of you here today represent the U.S. Treasury and two of our top banking regulators. I'd like to know if you believe that we need to strengthen our banking rules going forward to ensure the safety of our financial system. Vice Chair Barr, let me start with you. Do you believe we should strengthen our financial rules going forward?
Yes, I do, Senator.
Thank you. President Biden agrees with you as well. 2 weeks ago, he stated that we must, quote, strengthen the rules for banks to make it less likely that this kind of bank failure would happen.
Yeah, I mean, it's probably pretty choppy,
Chairman
but
Gruenberg, what about you?
I see the trend is up still.
Do you agree with President Biden that we need to strengthen our banking rules?
That could change once we
do agree, Senator.
hit that 400 or 403
and now,
area.
under Secretary Liang,
It starts to reject, but so far the momentum's still all there for me. Bullish MACD, green over the 9, inverted head and shoulders.
To prevent these types of bank failures.
Well, I'm asking you, of course we need to prevent them,
supervision
but that's not by simply wishing it. It's by stronger regulation, is that right?
I agree, Senator.
Okay, good. Now, we need better laws here in Congress, but let's also talk about how we can strengthen the rules today, even before Congress acts. Under current law, the Federal Reserve has the discretion to apply stronger prudential standards on banks with assets between $100 billion and $250 billion, exactly the size of Silicon Valley Bank. That authority is not being used right now. Vice Chair Barr, will you use your authority to strengthen rules for the largest banks in this country? As you use your authority to strengthen the rules for the largest banks in this country, will you be reaching banks with assets of at least $100 billion?
Senator, we, of course, would need to go through a notice and comment rulemaking
I understand.
In this process, but I anticipate the need to strengthen capital and liquidity standards for firms over $100 billion.
Okay, so this is the area we're looking at. We're going to push down further in terms of the greater scrutiny. Chairman Gruenberg, let me turn to you. Once the Fed began torching rule after rule in 2018 for big banks, the FDIC, under your predecessor, joined in on the fun and also started weakening FDIC rules across the board. Capital and liquidity requirements, stress tests, you name it. In fact, your predecessor explicitly told these banks that if
you're figuring it out now,
FDIC
Jane.
bank examiners were
starting to
asking
learn.
too many questions, that they should, quote,
Birds
let
back
us
way
know,
overview up 35%.
end quote. Now, there's a banking
Back up at the
regulator
highs.
who makes it clear that she is there to serve the big banks instead of the American public. Chairman Gruenberg, will you commit to using your authority to undo the rollbacks that your predecessor initiated and to strengthen the rules and supervision for banks with greater than $100 billion in assets?
Senators, I think you know I was a member of the board at that time and voted against those measures. And I certainly think it's appropriate for us to go back and review those actions in light of the recent episode and consider what changes should be
Well, I have to say, review sounds a little wishy here. You didn't think they were good rules to begin with.
My views haven't changed, Senator.
All right, so you still think they were a bad idea?
I do.
Got it. You know, each of you at this table has authority that you could exercise right now to strengthen rules for big banks and to ensure that our banking system and our economy are safer. I urge you to use that authority, and I urge my colleagues here in Congress to do our part to protect American families and small businesses from yet another banking
Which one's
crisis.
sold?
Thank you. Thank you, Mr. Chairman.
Thank you, Senator.
Octobers are selling.
Tennessee is recognized.
Thank you, Mr. Chairman. If you would allow me just a moment to speak to the tragedy that occurred at the Covenant School in Nashville, Tennessee yesterday. A depraved person, a sick person, executed a tragic act and yielded a terrible result. And my entire community is mourning. We're mourning for the families, for the victims, for everybody concerned.
That's so weird when it rallies.
I also
it lets
want
me
to acknowledge
buy
the bravery of the Nashville Police Department.
Yeah, I'm buying
They
some
stepped into
October
harm's
calls.
way and within 14 minutes,
Weird.
brought the situation
Even though
under
it's going in the wrong direction.
Tremendous bravery at a time
Just
when it's called
liquidity,
for, and I want to acknowledge
whatever
their
moves options.
sacrifices. Now let's turn to the matter at hand. And I know that politics in Washington always seizes upon any crisis as an opportunity to achieve whatever regulatory or legislative opportunity or goal that may be in front of them. But I'd like to talk about managerial execution here. Specifically, I'd like to start with you, Chairman Grunberg. I'd like to talk through a series of events that followed SVB's failure 2 weeks ago.
I sold calls for
As
July,
you know, Silicon Valley Bank was taken into
strike
receivership on a Friday
for
morning.
10 cents.
That gave the FDIC 3 days to find a buyer before markets opened
this
on
morning.
Sunday night.
And I just bought calls
You had
on this
tremendous
pump
resources
for some
at your
reason
disposal.
for October,
18 years of
so the next
experience on
month.
the FDIC board yourself.
2.5 strikes, same strike for 5 cents.
Detailed resolution plans. Over 5,000 employees and interest from a number of banks to bid, including at least one formal offer, as I understand it. Instead of successfully executing this process, however, the FDIC used the systemic risk exemption to guarantee all deposits at SVB, creating tremendous uncertainty across our economy. And now, 2 weeks later, the FDIC has announced the sale of less than half the failed bank's assets at a loss of $16.5 billion. So my first question, in the joint statement released on March 12th, you said, quote, no losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. Is that still your position?
This week we have
Senator,
pending home sales, initial jobless claims is on Thursday,
Well, the problem
and then
is,
Friday's
with
PCE.
2 partial sales completed and over $22 billion in losses already accrued, that position just doesn't square with reality. These losses are borne by the Deposit Insurance Fund. That fund is going to be replenished by banks across the nation that had nothing to do with the mismanagement at Silicon Valley Bank or the failure of supervision here. In fact, that's going to be addressed by a special assessment to those banks. And as we all know, these banks will have to pass these costs along. Last time I checked, those costs that get passed along to the consumer, those consumers are American taxpayers. Chairman Grunberg, invoking the systemic risk exemption is a last resort emergency option to the typical methods of resolution. And it begs the question of why you had to invoke that extraordinary exception.
Entries for SI?
Just this past Sunday's announcement of a new purchaser of part of
video
SVB,
and stream,
not only were serious losses incurred, but the FDIC entered into a loss-sharing agreement with the acquiring bank.
About $1,000 worth.
A $70 billion line of credit was extended to the
averaged up on
That's
this
a pretty sweet
move
deal.
to VWAP right here.
This makes me wonder what prevented the FDIC from coming to a deal like this.
So my average cost is somewhere around here.
You told Ranking Member Scott that you received bids for SVB
and
over
then
the
I've got some
weekend
covered
following
calls
its
on it.
collapse, but that they were insufficient. What was your
open up more covered
counteroffer?
calls.
And did you engage with the board of the
Bird's
bank
up
that didn't approve
40%.
this to get them to step up and approve it?
We received one offer that was frankly
Market
more
high is
expensive than the cost of liquidation.
2075.
Didn't appear to be a viable offer at that moment.
Was there a counteroffer to that?
I would have to check with our staff in terms of how much of a back and forth occurred.
Let's talk about the bidding process itself.
BBY is actually
Were certain banks
down a little bit,
dissuaded by you or anyone else associated with this from bidding on SVB, either before
holding
or
well,
after the bank was taken into
17.25%.
receivership?
No, Senator.
Throughout the course of that weekend, I was inundated with phone calls telling me that legitimate bidders were being waved off of the process. It's one thing to reject a bid if it's bad, but if ideology had anything to do with this entire committee is going to be deeply concerned about that. I look forward to the GAO's report on this because the result of this failure places the banking sector in a state of disarray that we've never seen before. In spite of all the preparation and tools at your disposal, the FDIC failed to do its job. There was obviously enough demand to orchestrate a sale. What it looks like to the American people is that you simply didn't feel the incentive to execute and leaned on the systemic risk exemption to buy time, and in doing so, have placed the entire U.S. banking sector into uncharted waters. I don't see any apparent improvement in outcome, and this is a disgrace. I look forward to the GO review, and I hope that we get to the bottom of this. Vice Chair Barr, very quickly, I'd like
GME
to come
popping
to you.
up here above VWAP. EVTOL 19%.
In response to the 2008 financial crisis, the size and scope of the regulatory regime was dramatically expanded by Congress.
And we even
Regulators
looked at the last
like
couple
yourselves
days,
given
it's
powers, not
had
to
a nice
mention
reversal.
hundreds of academics at your disposal, with the sole job of monitoring and
triggers go
addressing
along, I
risk
just
to the
didn't do
financial
it.
system. All of this was in hopes of
Well, I didn't have
identifying
buying power
and preventing
anyways
bank
until
failures
today.
that pose systemic risk. And in
There's
spite of all these
$2
tools,
on
we
EVTL,
find ourselves in a
up
situation
22%
today
now.
that is unprecedented.
23%.
It's pretty clear that Silicon Valley Bank was woefully mismanaged. Their management team, which didn't have a chief risk officer for 8 months last year, yet created and maintained a chief diversity, equity, and inclusion officer, allowed their bank to accumulate truly shocking levels of risk. And while this was occurring, the San Francisco Fed was focused on researching left-wing policies that they had absolutely no expertise in, ignoring one of the most basic risks in banking, interest rate risks. Perhaps most damning of all, until the day of their failure, SVB's CEO sat on the board of the San Francisco Fed. So, Mr. Barr, in your review of what went
GME
wrong in
moving
your,
up,
in your
only down
supervision,
0.72%
do
now.
you consider the level of managerial distraction that was
But
evident at
that's
the San
still
Francisco Fed?
right below 80 cents.
Senator, the staff have
Birds with a red
free
candle.
rein to examine any issue that might have addressed supervision. I think the core issues are the ones I suggested at the outside, and they're really basic. Interest rate risk mismanagement by the bank, liquidity risk mismanagement by the bank. The San Francisco examiners, the examiners at the San Francisco Federal Reserve Bank called those issues out to the board, called them out to the bank, and those actions were not acted upon in a timely way. And so I think,
I hope you'll
in a way, the
dig
issue is
into
pretty
the urgency,
straightforward.
the sense of
Down here with
urgency
the red
that was
candle.
brought to bear on this,
He's just
and the
getting
sense of
traded a
pressure
lot.
and of every
I
tool
know
at their
Don had been
disposal.
watching
They
EVTOL.
certainly were doing other things well beyond their remit. Thank you, Mr. Chairman.
Been watching it since it was 3%
Absolutely.
this morning.
Thank you for your questions. I'm
The
gonna
last
ask
few
the
days
questions
where we
now,
saw
if
the
I might.
reversal. I
In
didn't jump in on
2008,
it.
I voted against the bailouts of the big banks because
Like
I
to
don't
hear.
support
Green over the 9,
taxpayer
bullish
bailouts.
MACD.
We do need to protect American
didn't have buying power till
consumers
today,
and
though,
small
so-
business folks.
Oh, well.
We need to hold bank executives accountable when they screw up. And if the regulators are asleep at the wheel, we
23%
need to hold
EVTL.
them accountable.
Big volume pop there too,
Look,
303,000.
the correlation I would say is when I run my farm, if I look at the price of diesel fuel and seed, and that's all I look at, I don't get the whole picture. And quite frankly, I won't be in business long. If regulators are only looking at capital, that isn't everything that's going on. At Silicon Bank, they had a concentration in a highly
4% on
volatile industry.
EVTOL calls?
They had grown
No way.
rapidly. Had
How is this
mostly
even
uninsured
liquid enough to
deposits. Their
facilitate those
investments
kind
were
of
poorly
trades?
timed with interest rate increases that were clearly forecasted, all setting the conditions for
What,
a
April
classic bank
contracts?
run, one that happened quickly due to new technologies that are out there. So Vice Chair Barr, from 2020 to 2022, the
25%
Silicon Valley
on
Bank
it.
grew from 71
Jeez,
billion to
30%.
more
Just
than
popped 5%
200
there.
billion. This was a very
Oh my
rapid
gosh.
growth. It was heavily
This thing's gotten
concentrated
crazy.
with techs and startups.
It really just
industries
woke
that have
up in the
always
last
been
5
volatile.
minutes.
Then the bank took those
32%.
mostly uninsured deposits and invested them in long-term U.S. Treasuries when the Fed had been clearly forecasting that rates were going to go up, which the bank executives should have known because their
We saw it
CEO was a director
30%
at the
ago.
San Francisco Fed.
Considered.
And for 2 years, it
We haven't seen a
seems
pop
that
like this on
federal
EVTOL in a while,
regulators
though.
were flagging concerns about this situation.
And it's been a while.
Is that a fair statement that for 2 years that the Fed was flagging concerns about this bank's financial viability?
Senator,
What'd you get him
the
at, just the minimum?
examiners were focused on interest rate risk and liquidity risk at the beginning in November 2021.
How did you make 400%?
At least as
Doesn't
far
make
as I know
sense.
from the supervisory record thus far, I have not seen something that said that the supervisors were focused
Was it
on
5
whether
to
the
20?
firm was viable. But our review is
Not
underway.
400%.
But doesn't that impact the viability?
Yes, Senator, is a core safety and soundness risk. A liquidity risk and interest rate risk are core risks that the bank mismanaged.
So were the regulators physically in the bank? So I've talked to a lot of intermediate-sized banks. They
36%,
tell me that the regulators are
39%.
right there 5 days a week, 7 days a week if they're open 7 days a week. Were the regulators
Roll
in
for
that
25.
bank?
Nice exit.
Physically speaking, I actually don't know. The
don't even
part of the
see that on here.
supervisory period is during the pandemic when activities were happening
I've got you.
in part remote. So
Okay.
I don't have yet,
the
but
world
we
should
will
be
have.
25% fill.
I just want to point out the fact that the pandemic's been over for quite a bit, and the opportunity for those regulators to be in there would have been long before a month ago.
Yes, Senator, I don't have the full supervisory record. We've just begun our review, and I want to be very careful to answer only questions I know.
Do you know if the,
Little cup and handle
Fed
here.
supervisors met with the board of directors of Silicon Valley Bank?
I don't know that yet. I know they met with senior management, but I'm still reviewing
So
the
you
record.
wouldn't know if Silicon Valley Bank had a risk committee and if in fact the Fed supervisors met with the risk committee?
I will know that by the May 1st report.
So were they warned about potential fines?
I was considering
I'm
shares.
sorry, could you say that again?
So, I mean, look, they had some problems. Were they warned to either fix them or they were going to get fined?
The matters requiring attention and matters requiring immediate attention, to my understanding, require the fixing of the problem, but I don't know whether they've highlighted any additional steps that might be taken. Certainly, the firm was on notice that they needed to fix those problems
Energy
quite
coming
clearly
down a
since
bit.
November
Baba
of
actually
2021.
making new highs there almost.
But yet they didn't.
They did not.
So what point in time does the Fed
This high
regulators
still at
drop
4%, but has given
on
back
this
quite a
outfit?
bit.
I mean, I don't even
Looking
need
for
to
a
get
hold,
going
maybe
on
$2.
the bank CEO taking a ton of money right before this thing went belly up. As it was
Huge red
going
candle on
belly up.
EV2L. Oh my
At
gosh,
what point in
just gave up
time-
that whole
We can
pump.
have all the regulations on the book. I've talked
That's
to a lot
crazy.
of bankers who said if this had happened before Dodd-Frank, the regulations were there to stop this to happening.
That's what these
And
candles
we
end up
have
looking like.
Dodd-Frank, and we did make 2155 to tailor the regulations.
Might
to
still
fit
be a
the
good
risk.
entry,
That
though.
was a big part
This
of it.
seems like it might have a
on the
sustained rally this
intermediate banks,
time.
and in fact on the small banks too. But yet, for over a year,
Nice exit.
correct me if I'm wrong, Mr. Barr, for over a year, regulators were saying to this bank, straighten up and fly right,
Nice.
and they never did a damn thing about it. And the regulators didn't make it so damn miserable, which my understanding is regulators are pretty good at that when they want to be, make it so damn miserable that these folks would adjust their business plan to take care of the risks that was in their bank.
Senator, I agree that the risks were there, that the regulators were pointing them out, and the bank didn't take action. It's ultimately, in the first instance, the bank management responsibility to fix these problems, and they failed to do it. Where we didn't take enough action, if the Federal Reserve supervisors didn't take enough action, we're going to be talking about that in our review, and we expect to be held accountable for it.
So I got to tell you, Michael Barr, I am not a banker. I ain't even close to being a banker. I'm a dirt farmer, and I'm going to tell you, when they laid out what this bank had happened over the last 2 years, you did not have to be an accountant to figure out what the hell was going on here.
I agree.
And all I've got to say is, as you do your look back into what transpired, it better be fixed. If it's the regulator's fault, it better be fixed. If it's the regulation fault, it better be fixed. If it's something else, I hope there's a report to this committee saying, you know what, guys, this can happen again unless this happens. But it looks to me like, I'll just tell you this, and I'm looking out from the outside in, it looks to me like the regulators knew the problem, but nobody dropped the hammer.
Thank you, Senator Tester. As I said, our review is going to be thorough, it's going to be open, and if we find problems like the ones that you just described, we're going to say it clearly and describe what we think should be done.
When do you think that report will be done? And I'm way over time, sorry. When do you think that report will be
May
done?
1st.
May 1st, so we got a month.
We should have them back after the report is done.
We look forward to that. Thank you.
Senator Vance.
Thank you, Mr. Chair, and thanks to the three of you for being here. I want to talk just a little bit about the inherent unfairness and what I think transpired with Silicon Valley Bank. And you know, I come from the venture capital industry, and this is a statement against interests, and certainly a statement against the interests of some of my friends. But the business model of Silicon Valley Bank was to provide banking services to venture capital firms and to venture-backed companies. And if you think about
Morning,
the
Jonathan.
fundamental trade that was implied, and I would even say explicit in their business model, what they did is they offered
Birds kinda
highly
consolidating up
beneficial
here.
financial products to venture-backed companies and venture capitalists in exchange for having a
Oh, yeah, I didn't
large
realize that
number
daily
of
volume is
deposits
big.
in your Silicon Valley bank account,
Not even noon
sometimes
yet.
often exclusively. So a common practice, for example,
great
was to
sign.
say that you would provide a line of credit to a venture capital
This is what you
firm,
always want.
but only if
2
that
million
firm
volume.
put all of its
No, you
money,
said, what, 4
100%
million?
of its deposits in Silicon Valley Bank. Or they would offer private jet
73
financing
million,
and
I
other
said.
goodies that are basically beneficial only to the very wealthy in exchange for having all of your deposits at Silicon Valley Bank. Now,
Might grab
given
some
that
shares
that was
of it, honestly.
implied in the business model of the bank, I think it's important that we use the term bailout,
I'm gonna
and I
get
know
some
that some of
shares.
you don't like that term, but I think it's the only term that applies fairly here because we, using excess fees on community banks all across the country, effectively chose to bail out the uninsured depositors of Silicon Valley Bank. Now, there are some outrageous examples there. I think, one firm had deposits over $3 billion. Another, I think Roku had deposits of $500 million. But there were a lot of people, a lot of firms at Silicon Valley Bank that had deposits well over $1 million, well over $5 million. And what we did in practice do was bail them out. I guess my first question, I'd put this to all three of you, and because time is limited, I'd like you to answer quickly, is what is the threshold? Whether you guys meant to or
Scaling into
not,
some
I
shares
think
here on
the
Evital.
implication of what happened with Silicon Valley Bank is that there are a lot of people who expect that their uninsured deposits are effectively insured at an unlimited level. Or if you're a banker,
I know, that shutdown
there's
was
an
gnarly.
assumption from a lot of people that at a certain level, if you're systemically important enough, your uninsured depositors are going to get bailed out. Maybe just go from left to right, starting with Mr. Greenberg, but at what level do you
BBBY
think
flushing down there.
uninsured deposits
Still
in
green.
theory are
Hopefully that little
effectively
support it was building.
unlimited insured in our banking system today?
Birds getting close
If I
to the
may
high
say,
of the day.
Senator, you're asking important questions. I think we have a lot of lessons to learn from this episode. The decision to cover uninsured depositors at these two institutions was a highly consequential one.
Yes.
That has implications for the system. I think we need, and I indicated in my statement earlier, we need to do a comprehensive review of our deposit insurance system and consider the questions that you raised. The FDIC is going to undertake that, and by May 1, we'll deliver a report including policy considerations to take into account. So we want to try to be responsive on that.
Thank you. Mr. Barr.
I also think you raise important questions. When we were looking at the systemic risk determination with respect to these institutions, we were thinking about the risk to the broader financial system, not the particular depositors at one or two institutions. We're thinking about and concerned about the extent to which that could impact regional banks across the country, community banks across the country. We were hearing concerns from bankers and from depositors, from businesses around the country. It's a difficult judgment, but one that at the end of the day, a unanimous FDIC board and a unanimous Federal
Birds
Reserve
moving
Board
up.
of the Treasury Secretary
For whatever
agreed
reason, it's easier to
that
buy calls
risk to the system
when it's rallying
was not a risk that was
than to sell them.
worth
When it drops is
taking.
when you start getting
And so, today I
calls
think
getting
we can,
sold.
say that the banking
my
system is sound
my
and
open orders to
resilient,
sell
and the
starts
steps
filling
we
on the
took
drops. It's the
demonstrated
strangest thing.
that resilience and the safety of
Yeah,
deposits
Jamie's
around
from
the
the bottom
country.
of the pool.
So I'm less concerned with the decision itself, though
doing
obviously
well,
I have a lot of
strong
questions there.
energy, B.
I think there's an open question about whether
Close.
we could have provided
Big
the
red killing time
confidence
if
to
you
the
want.
banking system and the liquidity that was needed in case
Birds
of a
about
bank
to
run
break
without
out.
bailing out the uninsured Silicon Valley Bank depositors. I think that's maybe a topic for a follow-on hearing. But what I worry about is the fundamental unfairness here, that we've drawn a line, and I don't know whether the line stops at Silicon Valley Bank, maybe it goes much further, maybe it stops there, where if you're systemically important, which is a term that's impossible for anybody here to define with confidence, if you're systemically important, your uninsured deposits are effectively unlimited in their insurance, whereas if you're not systemically important, if you're a regional bank in Ohio, there's a very good chance that your uninsured depositors will not receive that bailout. And I think that uncertainty is a really, really big problem with what you guys have done. I'm not saying that in an accusatory way. I understand that there were reasons to do what you did, even though I don't think it was the right decision. I'm just saying I think it has some real moral hazard here. I know I'm over time here, so the one thing I'd ask here is just unanimous consent to introduce a letter to the record from American Share Insurance. This company provides private deposit insurance to most state-chartered credit unions, including the 43 in Ohio. And just on this point of moral hazard and on this point of unfairness, what I'd like you guys to consider doing is extending the same implied offer that you gave to the Silicon Valley Bank uninsured depositors to do it a little bit further down the banking ladder so that everybody benefits from the rule that you guys have created for Silicon Valley Bank.
Look at this guy that got screwed on Bird's options.
Without objection.
Watching Zip Trader and just getting hyped.
Senator.
Thank you, Mr.
He
Chairman.
went all the
Thank
way
all of
out,
you,
which was
for your service
a good
and
start. He went all the way out
testimony today.
for this date,
Mr.
but then he got all the way out of the
Gruenberger,
money and
you're
didn't look at
aware,
any of
are
the
you not,
pricing of anything
of
else.
the fact that the CEO of SVB sold
I don't know how he
$3.6
was even
million
able to get filled so
in
high.
company stock just 10 days
Market maker just totally
before the
screwed him
bank
on this.
collapsed and the
Maybe market ordered it.
FDIC
I'm not
took over
sure.
his deposit. So you're aware of that, right?
Luckily, he only got one of them.
And
but he
are
got
you aware of the fact
one call
that
contract for
other
75.
executives of the bank
Or no,
and
maybe not. Maybe
employees
it's 10.
of the bank received
Thought I saw
bonuses
it for
literally
7.5.
hours before
25 cents.
SVB collapsed?
Yes, Senator.
Oh, I guess
Now,
not. Maybe it was 10.
I believe we need
Market
to
maker just putting
have
75 there.
an independent
Never mind.
investigation into any criminal culpability, possibility of insider trading in this case. But regardless of any criminal culpability
I can
that may
leave it
be
till on
there,
the Daily Candle,
I
though,
think
too.
it's
It's got
simply wrong.
nice engulfing.
And I think almost
See if
every
that holds. I'm
American
assuming
would
it will.
agree it's
Good
simply
volume.
wrong for the
I mean, the
CEO and top executives
signals
to
we had back
profit,
here are just
from their
confirmed
own
with today's move. I was
mismanagement
just late.
and then leave
pull the trigger.
FDIC to be holding the bag. Would you agree with that
Eyebrows down?
proposition that that would be wrong?
Yes, Senator.
Now, Dodd-Frank provides clawback
It's
authority
always devaluing.
that applies to the biggest banks under the Orderly Liquidation Authority,
Just
under
devalues
OLA.
fast.
But
Very
as
fast.
I understand it, that authority does not apply to SVB Bank. Am I right about that?
That is correct, Senator. Could I elaborate on that briefly?
If you could briefly, just
Very
J-Pong.
briefly. We do not have explicit
Your
clawback
harmonica
authority.
is not
We
the
do have
only
an
instrument
obligation
in the
to
band.
investigate any
And
misconduct
it's not always right.
by the
So,
board.
I'm happy for
and
you. You've got an
management
indicator
of the
used.
institution, and we do have
coming out
authorities
here just
to
making
impose
claims on everything.
consequences, including civil
Just
money
lose
penalties,
credibility, so
restitution, and
pump the
barring
brakes.
individuals from the business of banking.
Chill out.
So we can get at some of the issues raised, but
And when you don't
it's
give any
true we
time
do
frames
not
on
have
your price
explicit
targets,
clawback
they
authority.
hold no merit.
And I indicated earlier, it would be reasonable to create parity between the Dodd-Frank Act and the Federal Deposit Insurance Act in that regard.
Well, I'm glad you raised that. I heard your response earlier, and Senator Kennedy, a member of this committee, and I are working right now on bipartisan legislation to accomplish exactly what you said. I hope we can introduce it this week, and I know the chairman of the committee is interested as well in pursuing that. I asked Secretary Yellen in another hearing last week whether she and the Biden administration fully supported it. The answer was yes. So I hope we can move forward on that piece as quickly as possible because there does seem to be a hole in your authority. You have some authorities you indicated, but there is a hole in that authority that we have to plug, and you agree with that.
I do, Senator.
So, Vice Chair Barr, I wanted to ask you about some guidance, in fact, a rule that was issued by your predecessor, former Vice Chair of Supervision, Quarles, shortly before his departure in March 2021. And this rule established that supervisory guidance does not have the force of law, and it cannot be used in the event where it would halt banks' abilities to conduct mergers and acquisitions and that sort of thing. I fully understand the distinction between supervisory guidance and black-letter law, but I think it's important to note that this request for this rule, according to the Fed's staff memo, that this guidance was issued upon industry request. and they specifically
see if it breaks out here.
The
Real
Bank
close to
Policy
that high.
Institute and the American Bankers Association is submitting a petition asking for this rule to provide guidance to try to weaken the punch of the supervisory rules. Are you aware of that?
Yes, Senator.
This goes into the frame that the chairman of the committee made earlier on, where we've got a lot of folks that had been saying for months and years, let's rein in the bank supervisors, and now all of a sudden it's like, where were the supervisors? Why weren't they being more aggressive? Do you agree that that guidance, putting that into rule, sent a message that you don't have to listen to supervisors' guidance that much? And would you be willing to take a look at whether or not that should be repealed?
Senator, I'm not sure of the impact of that guidance. I think it's an appropriate area for us to be looking at. I know that staff are going to be thinking about that with respect to the SVB case, whether it mattered or it didn't matter. I do think it's an appropriate area to look at, but I do not have a firm conclusion about it.
Well, I hope you'll take a look at it, because it was done at the behest of the industry, and clearly the intent was to undermine
getting real close to that support. Hopefully it bounces on here, or we could see some
of the
big moves back down to fill this gap.
Regulators. So it seems to be part of a pattern of an effort to push back on regulators' authority, and then
got an order to pick up some more
back and do
Evital
the Monday
shares.
morning quarterbacking and saying, where were they? Thank you, Mr. Chairman.
Thank you, Senator.
Birds, almost a new high there.
Daines,
Creeping up on 20 cents.
Right?
There's
Senator
20
Brett's recognized
cents.
from Alabama.
Thank you,
So
Mr.
weird how these
Chairman.
options only
Daines.
fill
I
the opposite
appreciate
way.
the opportunity to be able to ask you all a few questions. I want to start by saying I am proud to be from the great state of Alabama, where our financial institutions are strong. Our regional banks, our community banks, our credit unions, and the critical role they play from our main streets to our rural roads could not be understated. So I am proud of the work they do and proud of the strength they continue to exhibit. Mr. Barr, I want to follow up on a question that one of my colleagues brought up. You keep talking about the Fed focusing on the size of SVB and banks. However, 2155 also requires the Fed to take into consideration riskiness, complexity, financial activities, along with other risk-related factors.
Birds
Tailored
might be
supervision
rejecting here.
ensures that the Fed focuses on the most risky banks. You've said repeatedly that bank mismanagement led to SVB's failure. The whole point of 2155 was so that you could tailor your regs and your supervision to risk. So why did you not require definitive corrective action based on the flaws that you saw?
Thank you very much, Senator Britt, and I appreciate your comments about the Alabama banking sector, which I think is a thriving sector and is contributing to its communities. And like bankers across the country, is strong and vibrant. You should be very proud.
Thank you. We are.
We are looking at the range of tailoring approaches the Federal Reserve took. The decision to set those lines by asset size and other risk factors was made back in 2019. I joined the board in July of 2022 and began looking at that approach.
Okay.
I expect to continue to review it as part of the SVB review, and I believe we have substantial discretion to alter that framework.
Excellent. So you've talked about your review, which is ongoing. In that review, will you take a look at if you used all of the tools in your toolbox to prevent this, both before and after? Will that be part of your review?
Yes, Senator. The staff are reviewing the steps that supervisors took and whether they should have taken more aggressive action.
So at current rate, though, you can't speak to whether or not you utilized all of the powers that were given to you.
I really would like to wait for the formal review for the staff to come evaluate the full supervisory record to make an assessment.
Absolutely.
But we're certainly very focused on that question, and if we didn't do the right steps, we're going to say that.
Yes. Well, I find it concerning, though, when you all were asked, each one of you were asked, Would you like to see more powers, more strength in this? Every single one of you said yes, when you don't actually know if you utilize the tools in your toolbox correctly, or if the people that were under your supervision were supervising appropriately. I think that's what people hate about Washington. We have a crisis, and you come in here without knowing whether or not you did your job. You say you want more.
Preach.
That's not the way this works. You need to be held accountable, each and every one of you. I'm a big believer you got to own your own space. And speaking of, Mr. Grudenberg, I want to talk about yours. So you are not the primary supervisor here. Obviously, that's the Fed, but you are the non-primary supervisor for SVB, or were. Is that correct?
Yes, we have backup supervision.
You have backup supervision. You had that before Dodd-Frank, correct?
Yes.
You had it after Dodd-Frank, correct?
Yes.
And 2155 did not change that responsibility that you had.
That's correct.
Right. So in that role, what did you do prior to the bank's failure to exercise that power?
Yeah, in this instance, we were working with the Fed as the institution was experiencing difficulties, but I think it's fair to say that it was in a supportive role with the primary regulator.
Okay, but you did raise this to the primary regulator. You did exercise
We were
that
working with the
authority.
primary regulator in regard to the institution.
Excellent. I am so glad to hear that. We have to make sure that we are working together and doing our job in order to prevent these things from happening in the future. One of the things I also want to talk about is just the different responsibilities that each of you have and whether they were executed. And then additionally, we'll move into the FDIC's bank auction process for just a minute, although I only have 30
You put
seconds
GME on accident?
left. It seems that you failed to put the bank in receivership, and the
You were trying to buy
FDIC
GME?
passed on allowing the Silicon Valley Bank to be purchased. Is that a correct assessment, or do you
What?
feel like
You were
that's
gonna buy
been
more GME?
incorrectly identified throughout the news cycles?
Yes, Senator. The bank
GNS,
was
that's
placed in
right.
receivership on Friday.
Yeah, I mean, the
morning,
monkey that picks
and,
stocks is
we
they outperform what?
endeavored to
Most
solicit
retail,
bids over
most
the weekend.
individuals.
As I indicated previously, it was a rapid
Just throwing
failure,
darts on a
so
wall?
There was no opportunity prior to failure to prepare
Yeah,
for a
things ripped,
resolution. We
Jeannie.
tried to market it. We got two bids.
Light coming down here, kind of a little double
would have
top here,
been,
maybe.
Less costly than liquidation. So we then proceeded to put in place a process.
Bird
where
just
we
kinda
were
hanging out
able
at the
to
high.
buy.
Yes, and I am out of time, but I will say, in 6 months prior, JP Morgan noticed that there was a problem, their equity research team, and then Moody's obviously met with SVB prior to saying that they were going to downgrade. So I've heard you all say this was a rushed process. If the outside sector knew this was happening, you and the Fed and the 4,000 examinators should have known that this was coming as well.
Senator Warnock of Georgia is recognized.
Keep it tall. Looks like it
Thank
might
you
be coming
very
down.
much,
It's below
Mr.
VWAP.
Chairman.
Got a bearish
Many
MACD.
Americans,
Still
and
up
in fact all of us,
15%.
would remember the unfairness
Like to see an
of the
engulfing candle today on the daily.
2008 and that crisis.
Volume's definitely there.
When bankers who made bad decisions, who played games with our economy, not only did they not go to jail,
Thanks, Weeble.
they got to keep their jobs and their multi-million-dollar salaries. I feel that in a particular way as someone who pastors and moves in communities where poor and marginalized people have the weight of the law come down upon them for the smallest of infractions. Not one
So
banker went to
confused.
jail that kept their multi-million-dollar salaries. When bankers made risky bets that threaten our
Hopefully
entire
GNS
economy,
holds
they
this
got to
because
cash in.
that's going to be a pretty big level to
They
hold.
should
I
be
think.
held accountable. We discovered shortly after regulators took control of Silicon Valley Bank
This
that
is the
top executives at the bank
banks testifying.
offloaded millions of
Recalled.
dollars worth of
Senate
stock
committee holds
in
hearing
the
on
weeks
Silicon Valley
leading
Bank
up
collapse.
to the collapse. Very convenient. Including their former CEO who sold $3.6 million worth of stock 2 weeks before the bank
There's
crashed.
birds rejecting a new high.
The Dodd-Frank banking reform law included a compensation clawback provision for executives identified as excessive risk takers.
Even
In other
told
words,
moving
those who put their
down.
banks and
See if
the
it bounces
entire
on that 50
economy
moving average.
in jeopardy.
1.8, maybe a support.
The FDIC, in conjunction with the other financial regulators, began working on a rule
Crazy how
to
things got shut
implement
down up
this
there.
provision in Dodd-Frank in 2011 and then again in 2016.
Thank you, Ace. Appreciate it, man.
The final rule was never issued.
Ace
Does
just
the
giving a
FDIC
membership.
have
Whoever
plans
wants it
to
can claim it.
revisit this rule?
If you're not a member, if
It
you're
has been
Greg, click on
discussed,
it.
Senator, and it seems to me appropriate.
It's appropriate and I would say urgent. And I know that the Justice Department and the SEC are looking
Legendary
closely
indeed.
into this matter. And I would encourage them to include any evidence of insider trading. That seems only appropriate, given the circumstances. That should be a part of the scope of their probe. But there is a scenario where these executives not only get away scot-free, but also with sizable paydays. And the FDIC should use every tool it has at its disposal to prevent it. We certainly don't want to incentivize this kind of behavior. So again, Mr. Gruenberg, outside of this rule, tell me, where can Congress step in to stop incentivizing this type of high-risk behavior? Does the FDIC need additional legal tools to hold excessive risk takers accountable?
Thank you, Senator. First, as a matter of law, whenever a bank fails, the FDIC is required to conduct an investigation of the conduct of the board and the executives of the institution, and we have authorities under the law to impose accountability, including civil money penalties, restitution, and barring individuals from the business of banking. So we have significant civil authorities under the law now. It was mentioned earlier, and I think it's appropriate, that we do not have explicit clawback authority in regard to compensation. We can get at that issue through our existing authorities, but certainly providing explicit clawback authority under the Federal Deposit Insurance Act, as the FDIC has under the Dodd-Frank Act, would be appropriate, in addition to completing the rulemaking that you raised previously.
Now, both of these things are important. We've got to complete the rulemaking and look at and see whatever additional tools may be necessary. Certainly, as the ship is sinking, we don't want bankers to be able to move all of their products on a lifeboat.
I agree, Senator.
And so we've got to address this. I want to switch to a related topic. For several days, payroll providers banking with SVB or Signature Bank had no way to access their deposits. Everyday folks, leading to many Americans receiving their paychecks late or having missing paychecks. Too many Americans live paycheck to paycheck, and in this case, they got it late. And as a result, some of the 64 million Americans living paycheck to paycheck were hit with overdraft fees, non-sufficient fund fees due to the disruption, something I've addressed in other settings. And that's why I sent a letter with Senator Booker urging regulators to impose a temporary moratorium on overdraft and non-sufficient fund fees for folks who incurred these fees at no fault of their own. Mr. Gruenberg, does the FDIC have a plan surrounding overdraft and non-sufficient fund fee protections in the event that we experience broader systemic issues?
Senator, you raise an important question. We received your letter. As a starting point, we know there were delays. We really want to get the facts in terms of if overdraft fees were really imposed.
You told getting Poppy up to view up.
As a result of those delays, if we can confirm that information,
still have like 2 or 3 buys I'd like to make on that at
actions
least.
to undertake, and we're glad
I
to
see
work
great
with you
people.
and your staff as we follow up on that.
I look forward to working with you on this. Here's the bottom line. Ordinary folks
Amy
who
came back down
just
to view
showed
up.
put their deposits, they shouldn't have to.
Had a good bounce though on this
bear the
support
brunt
so far
and
today.
burden of these bad decisions made by bank executives.
Thanks, Senator Warnock. Senator Daines from Montana is recognized.
Mr. Chairman, thank you. The failures of Silicon Valley Bank, Signature Bank, and the general turmoil in the banking sector are the direct result of the failures of regulators, including the agencies we have before us today, also the executive teams of these financial institutions, and the inflationary environment sparked in no small part by the Biden administration's reckless spending. I remember having debates right here with the Banking Committee about these massive stimulus bills, that $1.9 trillion spending bill that even Lawrence Summers said was inflationary. On a purely partisan vote, it passed with Democrats supporting and Republicans opposing. But each of these groups, back to Silicon Valley Bank and Signature Bank, failed to prioritize properly clear and present risks of the inflationary environment, rising interest rates, what it did to bond values, instead opting to focus on climate change, equity, and other factors that did not contribute in any way to the crisis we have before us. I raised these issues of misaligned priorities with Secretary Yellen during a Finance Committee hearing back in June of 21, when she identified climate change, non-bank financial intermediation, and Treasury market resilience as the key priorities for FSOC. Now, we're facing a situation where responsible banks in my home state of Montana and elsewhere will be on the hook for providing tens of billions of dollars and potentially more to bail out irresponsible coastal banks for risk-taking that regulators failed to act upon despite first noticing as far back as 2019. Turning to my question, Vice Chair Barr, you state in your testimony that your review is, quote, focusing on whether the Federal Reserve's supervision was appropriate for the rapid growth and vulnerabilities of the bank, end quote. The question is, if you find as part of your review that certain individuals were clearly negligent in the performance of their duties, are you willing to recommend they be fired?
Senator, I don't want to prejudge in any way the review. I'm going to get that evidence back. I'm going to understand it fully. And
I said, but if part of your review you find they're negligent, would you recommend they be fired?
It's hard for me to answer in the abstract, sir. I believe we'll take appropriate action with respect to the supervisory structure as a whole, whether with respect to
are you willing to, is termination one of the options?
I don't know.
That's an easy question. I just said an option. I'm going to say if you exercise, is that an option? Could somebody be fired for this?
I would have to understand the basis in our human resources law.
The bank executives lost their jobs, as should some of these regulators. Shouldn't that be the case if they're asleep at the wheel?
Senator, I want to be very careful. There are laws and procedures with respect to how you treat employees.
You can make a recommendation to HR, and they can tell you whether or not that's allowed or not. I've been in the corporate world for most of my career. I've worked at HR, as is true within the federal government. You can make a recommendation if somebody's asleep at the wheel and negligent.
I would be happy to follow up with you, Senator. I promise we'll take appropriate action based on the review, but I don't have a definitive answer for you at this moment.
I do find it ridiculous.
He's not even willing to say he might.
That
that's an option.
Responsibilities that you might recommend they be fired. Vice Chair Barr, did you visit the San Francisco Fed in October of last year?
October last year? What year? I mean, in
2022.
I don't believe so.
Okay. Well, the San Francisco Fed published a supervision and brief memo stating the top priorities that you outlined with that visit aligned with their top priorities.
It may be that I did a virtual seminar for a range of supervisors, and so the San Francisco Fed folks were in attendance for that, but I don't believe I was in San Francisco.
So the regulator's perspective that came out from the 12th District, the San Francisco Fed, said they were aligned with what was top of mind for the work being done in the 12th District. The first thing it says is financial risks from climate change. This is at a time back in October 22 when you saw the discount rate was always up to 3%. We were seeing those 3/4 point increases coming out of the Federal Reserve over and over, and they were communicating that it was going to probably continue. And that was about the time that
straight
also
to Yale.
The Richmond Fed
right away.
in the 5th District, they had a little different view in terms of prioritizing risks, and they thought perhaps a rising rate environment might be the highest risk in terms of priority to look at, versus the San Francisco Fed says it's about climate change was their #1 priority listed, stacked ranked of the 3 that they placed out. It's clear in hindsight that the Richmond Fed was focused on the clear and present risks of rising interest rates, while the San Francisco Fed was not. My question is, since you were confirmed in July, what percentage of your time have you spent focusing on climate policy and financial inclusion versus how the Federal Reserve's monetary policy might impact banks like Silicon Valley Bank?
Be as brief as you can in that answer. Thank you.
Senator, I've been focused on risk throughout the system, both short-term and long-term risks, and interest rate risk is a bread and butter issue in banking. It's what our supervisors do all the time.
Thank you. What the San Francisco Fed said, it was climate change risk. And by the way,
Senator Sinema is recognized.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today.
Wow.
You know, today's hearing is
Wow,
about
bro, man.
trust. Whose trust has been broken, who broke that trust, and how all of us work together to reaffirm and rebuild that trust.
Broke down through
Trust
view
is a
ups, spied it
key
also. I don't know
principle
if
that the
that's
modern
based
banking
on
system is built on.
bank hearing going on or
Families
what,
trust
but
that their hard-earned savings
not
are
sure.
safe in the
That
U.S.
wasn't a huge
banking
move, but
system.
Bird's holding
Congress
up well here.
entrusts our federal banking regulators with the power to
Evatol's
supervise,
still holding up pretty
regulate,
good. It
and
did
examine
get shut
banks.
down pretty heavy
We
there.
trust you to be the cops on the
That was
beat
starting to get out of
and
control.
have given you the tools to do that job. The failure of
Didn't get
Silicon
halted or
Valley
anything,
Bank
but
on the Federal Reserve's watch very
shut down.
clearly calls into question whether or not some of that trust was misplaced. Make no mistake, the lion's share of the blame is on incompetent bank executives. And it's outrageous that these people took bonuses and sold stock in the days leading up to the bank's failure.
I think I'm gonna get some
We
more
should hold
shares
these
here.
executives accountable for the fullest extent of the law and claw back those bonuses and stock sales. I'm co-sponsoring a bill to do just that. But as I laid out in a letter to you, Vice Chair Barr, that, by the way, was signed by 11 other senators spanning the ideological spectrum, it's gravely concerning that retail participants, literally just regular everyday people, were able to figure out that something was wrong with Silicon Valley Bank before your regulators took appropriate action. Now, these folks don't have access to non-public information like the bank examiners do, but when people on Reddit and Twitter can spot bank mismanagement before the regulators, something is terribly wrong. So my questions today are for you, Vice Chair Barr. I have lots of questions, so I'd like concise answers,
Calling
and
out
we'll
the
follow up
people.
in writing. You were sworn in as Vice Chair for Supervision on July 19th.
That's like a straight shot to
2022.
Superstar.
Your testimony indicates that due to ongoing
sure there's other
review,
threads too,
you'll
but-
focus on what you know. So let's start there. The Fed knew of problems at the bank dating back to 2019. Were you personally made aware of major deficiencies at Silicon Valley Bank prior to the collapse? And if so, which ones and when were you notified?
Thank you, Senator. The staff made a presentation to the Board of Governors in the middle of February of this year that was focused on interest rate risk broadly in the banking system and how banks and managers and supervisors were addressing those risks. And as part of that presentation, the staff highlighted the interest rate risk that was present at Silicon Valley Bank and indicated that they were in the middle of a further review and expected to be basically coming back to the bank shortly with further information about their status. I believe that is the first time that I was told about interest rate risk at Silicon Valley Bank.
So you were first notified shortly after folks on your staff learned about these deficiencies.
Senator, the supervisors began highlighting these deficiencies at the firm in interest rate risk management and liquidity risk management in a serious way in November of 2021, as far as I know, so about a little bit more than a year prior to that. They intensified that supervisory review as part of its full scope exam in the summer of 2022 when the firm was
Looks like it might want
downgraded
to break. I don't
for
know.
deficiencies
It's
in
definitely
its
like a
risk
cup and handle
management
here.
practices. And they brought those issues again, according to the record, to the CFO of the firm in October and issued additional findings in November of 2022. So that, as far as we know from the current supervisory record, is the picture.
And that's when you were first notified in October and November of 2022?
No, Senator. To the best of my knowledge, I first learned about the issues at Silicon Valley Bank with respect to interest rate risk in mid-February of 2023. So several weeks before the bank failed, staff made a presentation to the board about interest rate risk broadly and with a particular a highlight, if you will,
This dude needs to just get on
Silicon
Reddit.
Valley Bank, and
Go
indicated
cruise
that
for
they were
Twitter.
following up with the bank with further measures.
Let's see what you can
Your
find.
testimony says that asset size is not necessarily an indicator of complexity, and I agree, which is why Section 401 of S 2155 gives the Fed explicit authority to impose the regulations and enhance supervision normally reserved for the largest institutions. And you can do that on any bank between 100 and 250 billion in assets, like SVB. The Fed is given this authority to prevent or mitigate risks to the financial stability of the U.S. We both agree that this is existing authority that the Fed has had since the enactment of S2155 in 2018, correct?
Yes, the Fed has broad authority to change the rules it uses for different approaches to supervision of firms. Under the rules that were put in place in 2019, the firm was bucketed by a set of categories. I think that it is important to revisit those, as I have been doing since arriving at the Federal Reserve in July.
So given the documented issues that...
You're over time. We'll wrap up if you can. One more
This will be my last question. Thank you, Mr. Chairman. So given the documented issues that your supervisors found with the SVB that we
gives
just
her
went
extra
over,
time.
did the Fed ever consider using its existing Section 401 authority before the failure to more aggressively regulate the bank?
Based on the current supervisory record, it looked like the escalations that had occurred were in the format of MRAs and matters requiring attention and matters requiring immediate attention. And the supervisors also put in place what's called a 4M agreement, which is a limitation on the firm's ability to engage in merger transactions with financial companies.
Thank you, Senator. Senator Tillis.
Thank you, Mr. Chair. Thank you all for being here. I want to start maybe with a question that I think, Vice Chair Barr, you answered Senator Warren saying that you thought banks over $100 billion should have additional prudential requirements.
Oh,
Did I
BY
hear
got
that
a little
correctly?
pop there through VWAP.
I think it's important for us to strengthen capital and liquidity requirements for large banks, really up the spectrum.
Birds was about to break out.
Tools, just going back, Mr. Chair, I'd like, without objection, to submit this to the record. This is the regulatory regimen that applies to banks of certain categories. And so I'm curious. I always worry about when we create an arbitrary asset limit for doing something, because it was the activities of Silicon Valley that got them in trouble. And so I just want to ask briefly, I got a lot of questions and I will get them done on time. You've mentioned a couple of times, Vice Chair Barr, that the 2019, I guess, implementation
about to make a new
of
high
Senate Bill
also.
2155, I'm inferring that, bucket at Silicon Valley in a certain regulatory regimen. Did that mean that it restricted it from having supervisors make the judgment that the increased prudential regulations or supervisory functions could not occur?
Senator, we're bound by the rules we put out. So if we want a new framework, we need to change.
2019, different administration, predates your tenure. Are you saying that
Bob was thinking about
promulgation and the implementation of 2155 took certain supervisory or regulatory regimens off the table for Silicon Valley Bank?
The Federal Reserve's implementation in 2019 set basically the standard for how that firm would apply.
Yep.
I think that regulators, supervisors do have judgment.
That's my
organization.
Can put in place
That's
mitigating
my point,
matters.
because when I hear bucketing, I think about ring fencing, and I wonder if that meant that a supervisor,
new high birds.
in my opinion, if you take a look at the matters requiring immediate attention attention and immediate attention.
I don't know why the market's so slow.
Do you know yet? I know
Waiting
we'll get
on
reported
PCE
May,
end of
but
week,
do you know
maybe.
yet how many of those MRAs
I think some of this volatility is
were
from
followed by
what
an
we're hearing
MRI?
right
In
now.
other words, the 6 that were issued
This candle.
over the course of a year and a half or 2 years.
2075 is the pre-market high on
an
birds,
escalation of the matter
and
requiring attention to immediate attention, if any?
it's broken.
And if you don't know that, you can submit it, actually, if you will, just submit it for the record. Look,
Couple more
we've
levels
got a
up here
CEO of Silicon Valley Bank that is a Class A member of the board of the San Francisco Federal Reserve, who got summarily terminated on the day of the bank's collapse. In your review, will we also have insight into California's role in regulating this bank, or will this be purely federal jurisdiction?
We're looking only at the Federal Reserve. The state of California is initiating its own review.
Well, I think that's
going to
be very helpful, because in my opinion, I agree with former Fed Torrillo that he sees this as a regulatory lapse. Torrillo was never complimentary of Senate Bill 2155. He was implementing Dodd-Frank when we were doing it. He was hammering it. He's made the statement, and Mr. Chair, I'd also like to submit for the record an article interview with Mr. Torrillo
Yeah, SI's holding up really well.
Marketplace that
I
he
mean, it
specifically
did launch
says in
way
here,
more market cap.
you know,
Holy pop on
2155
FRC.
is likely or
Right, we
impossible
said
to be
that.
a root cause of the problem. I'm paraphrasing. He was saying it looks
See
like a
that spike?
regulatory and supervisory lapse. And I think we're going to find that that lapse
Just disappeared.
is not only with the Fed, but more likely even the supervision that the state of California
Without objection, so ordered.
was involved in. So I'm also kind of curious in the report, are we going to
This
see any
doesn't show any
movement,
signs of
and I'm not
a
a
reversal yet.
conspiracy theorist, but there is one question.
consolidating.
Do we have a level of comfort with this bank among some of the supervisors? Do we know or have any insight over the past
Birds.
few years if anybody who had worked for the Fed works for this bank? We know that the CEO was on the Fed board, but are on a board at the Fed. Senator, just with respect to the Class A directors that you mentioned, Class A directors are prohibited from participating in any way in supervision. Yeah. Oh no, I get that. But it's just people in proximity. Maybe people call them balls and strikes. The supervisors didn't get that quite right. But you know, I think that there are some people who, and I want to find the root cause of the problem. And I think that you all will find a lot of information when you issue your report. I don't think that we're doing the banking industry any service going forward if we talk about now we just got to rein in the small banks. We've got to increase by default, regardless of the activities of the bank. We've got to increase by default their prudential
kind of broke down
requirements
that level.
and with your holistic review, capital requirements, a number of other things.
Buyer moving down here still.
When you have a run on a
Low
bank
VWAP.
like you did with Silicon Valley, could any bank possibly have enough to cover the run? Any bank?
You know, Senator, the particular bank in question is quite unique in its structure, its liability approach, and its interest rate risk management. I can just speak to that particular bank. That particular bank had.
If you look at their bank, if you looked at their internal liquidity stress
No
testing,
bank,
if you
dude.
took a look at their contracts on an interest rate exposure,
moving down,
this
BY
does not
back to VWAP.
take a highly sophisticated person to understand the risk, and it damn sure had to be known months before the chickens came home to roost. And I wish that we could just focus on that problem. And not use the red herring of some lapse in regulatory oversight that was the root cause of this bank collapse. It simply was not, and I'd love to find anybody to prove it wrong. I don't care how you feel about regulatory tailoring, but use a valid argument to fight against it. Do not use Silicon Valley Bank as an example. Not suggesting that you have, but there are many people that sit up here who have, at the expense of looking at how we can prevent this in the future. And I do have questions for the record that I'll submit. Thank you all.
Thank you, Senator Tillis. Thanks all of the
I'll
three
drop
of you
the
for your
2 minutes or
testimony, your
less.
public service.
Dun, dun.
I look forward to the reviews on these bank failures, and thank
Amy
you
coming
for
down.
helping start that process. It's interesting. Many of my
Mine's also
Republican
moving down with
colleagues
it.
are now
Bears
so
might be on
eager
the
for
5
bank
minute below
regulators to
VWAP.
crack down on banks for
They'll probably be retesting these lows here on
too
SPY.
many risks. I hope they remember that when it comes time to
might get,
empower
some long
regulators and strengthen
micro yeses
guardrails,
there.
including protecting the independent funding of financial regulators. The events of the last month have shown why we need independent regulators, funding, and stability for all of our financial watchdogs. But now, as the Supreme Court considers whether the CFPB's independent funding is constitutional, these independent watchdogs' ability to keep our financial system stable faces an existential threat. U.S. financial regulators, as we know, are independently funded so they can quickly respond when crises happen. On this and every issue, I'll continue to fight to protect American workers from Wall Street arrogance and greed. Thank you for joining us. The meeting's adjourned.
Oh, that was it. Broadcast has concluded. Interesting. I think that did cause some of the market volatility earlier on. Maybe nothing after that, though.
This is a company, but your data, for the first time that I remember in you coming to us with Lululemon data, is a bit alarming. When you're losing to Under Armour, Under Armour used to be the darling, and then they went to the trash bin in terms of apparel. Now Under Armour is better than
Good to see though, a lot of strength today
I
on
see
it.
Nike
Wasn't just complete profit
regaining
taking
its
all day.
leadership. I get that.
Definitely caught some
Lori
buyers
is one
here.
of those new companies that's probably very small, but what do you make of the fact that Lululemon's numbers are actually lower.
Yeah, just to be clear on this chart, to make sure everybody understands, this is the change in consumer happiness over the past year. So Lulu was really starting from a very, very high starting point.
Okay.
But the fact is they have dropped off in terms of consumer happiness fairly considerably. I'm not sure I used the word alarming, but it is troubling, to say the least, that their competitors are catching up to them. The other thing that we're really seeing is a lot of chatter, a lot of search around, getting Lululemon duplicates or Lululemon knockoffs. So I think people are looking for the same style, quality, and look at a potentially cheaper price, which again is another pressure point on Lululemon's margins as they report this quarter and look forward to 2023.
Yeah, Gap and Abercrombie and Fitch are coming out with Lululemon knockoffs.
Yeah, well, Athleta brand is one of their competitors at a lower price entry point. Maybe the quality's not as good either, but this has kind of been that retail theme that we've seen over the last several months, Andy, is the fact that people are trading down, and that hurts Lululemon because it's such a premium priced product. But when you look at this company, just moving forward, in your trends that you guys have seen and covered in the apparel industry here, as far as your data goes, things change relatively quickly. Could this be the start?
Moving
do you
average
think?
crossover
or
like
is
we were
this
talking
just maybe
about?
a blip that, hey, maybe people are
Outside
turning
bar.
away from wearing, leggings everywhere they go anymore.
Yeah, just those few that we
people
mentioned
are going
also.
back into the office more. Could this be a
Doesn't
trend
mention that volume, though.
or just maybe a blip
Boom.
for Lulu?
Yeah, it's really difficult to
Super League,
separate what is a
4.25.
blip from the beginning of a new trend, and I think you hit on something really important there. So we're going to continue to watch the data on this very closely. I do think going into this report, we have to be concerned about the company's ability to have a truly optimistic outlook, and the fact that their consumer happiness is sliding is definitely troubling as well.
All right. Do you have an earnings score on this one? You said your data is relatively negative at this point.
Yeah, we're bearish on this going into this report. It doesn't help, that the stock has rallied 10% in the last 13 days. We think there's probably just some to come off there. But, long term, this is one of the best companies in the world. If you're a long-term Lululemon investor, I'm not throwing up any big red flags. I just think that the risk on this report is probably to the downside.
Yeah, and
It's like a little inverted head and shoulders actually really on SPY now.
Relatively higher
Holding this
compared
level.
to peers in this space due to that margin.
Break through and
that they have.
retest
All right,
here.
great
It looks
stuff
pretty
as
bullish.
always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio.
Stop looking at me,
Schwan. Kev, I got
also an RSI divergence
I liked
there in
his
the
data
5-minute
point
though.
where he said last quarter they saw a jump. That was holiday shopping season, right? And I went by a couple Lululemons. They were packed,
decision
right?
time for today on
But he said they saw that trend turning in February, where they've seen a drop off in sales.
Well, they should see a drop off from holiday shopping to
Said it
after.
stretched.
I mean, that shouldn't surprise anybody.
Yeah.
The question is, was it lower
What's the
than
decision?
before and lower than, the numbers coming down, as long as they're settling at higher levels, I'm okay with that. But you shouldn't expect the first quarter to be as good as the holiday shopping season.
Yeah, option market's pricing about a plus or minus $23 move in the shares post
moving
earnings
up
for
here
that
a
one
bit.
standard deviation
might be getting
based
that.
on the pricing now.
Yeah.
How do you want to
Inverse.
look at this from an example trade?
Guys, follow me. Guys in the room, follow me to the chart here on the Thinkorswim platform, because here's the genesis for my
I'll
trade,
follow.
Tom. And look at how many times it's held this 290 level on the chart. So you can be bearish,
I'm not following.
but look at the 290
I'm
level
following.
on this chart and the straight line across. It's broken it a couple times, but it's really firmed up around that
UVTL moving back
290
up a little bit.
level, right around 288.
What
Look
is
at
Birds
right
doing?
there. It is right
Birds
on
just
the
hanging
nose,
out at the
Tom.
high here.
And that is, I'm not overly sensitive of charts, but you can't argue with that picture. So, Tom, here's what I did. I don't know. Surely you can do bullish or
Quit
bearish
calling
plays.
me
You can do
Shirley.
counter spreads. You can do a lot of things. But, Tom, what I did, because of that chart, I kept it real simple. I sold the 290,
My name's not
285 put vertical right on that strike where it firms up. And that's where, with a high probability short put vertical that is pretty much as well in line with the expected move, takes you down pretty close to there. So if I can get right there and get a high probability trade as well, Tom, that's what I did. There's a lot of different trades you can make here in Lululemon, but I think in terms of a safe one, do I know for sure? No, of course I don't. But this one is, I think, based on the chart, gives me a good chance to be successful.
Yeah, let's break this down. March 31st weekly series, so expires in just 3 days at expiration. You have that earnings event today. Selling the 290 put, buying the 285 strike put, $5 wide short, neutral to bullish put vertical, collecting roughly about, we've got $1 credit on there. Might be a couple
little bit lower than that.
Yeah,
now.
It might be a couple pennies lower than that. But if you collect $1 credit on it, then your risk is $400 per spread if it goes below 285 at expiration. Now, that 290 strike, $25 out of the money to the
Overnight
downside.
play on PayPal, you're going long?
Outside that one standard deviation
It could still
move.
be a disappointing earnings announcement.
PayPal's not
and
like
you could still be
historically a big
successful.
mover.
Yeah, it's a 79% probability of finishing out of the money. And that kind of, Kevin, equates to why you're only collecting $1 and having $400 at risk, because you've increased your probability of success using technicals that might, parlay into the fact that, hey, if that 290 level holds once again at this point. Final thoughts here on the short put
Birds
vertical
might be
to
rejecting
take,
the breakout.
Hey, you want to take a bullish
Turn
stance
this
on
into
it,
a double
right?
top.
If that's your assumption, this might be one way to play it.
Yeah, it's 4 deltas. It's a relatively
wick, this
passive
double
way
doji.
to play this to the upside. Remember, if it goes up, you do well. If it stays here, you do well. If it goes down small, you do well. It's the catastrophic move through the one-day expected move that would hurt this spread.
Yep.
The risk, like I said, you mentioned, if it's 90 cents or $1, it's about 4 or 4.10 in risk.
Yep, and you've got assignment risk on that into expiration, also on that short 290 strike put. But a good look at an example trade in here, based on the fact that Lightfolio's data pretty negative at this point, but this still gives you that cushion to the downside on a bullish example here. All right, that's going to do it for this block, Kev. But coming up after the break, we're going to take a look at Disney, which has begun its previously announced.
Remains a beautiful day. It is clear that risks to financial stability have increased. At a time of higher debt levels, the rapid transition from a prolonged period of low interest rates to much higher rates inevitably generates stresses and vulnerabilities. U.S. won't share data on nuclear forces with Moscow. U.S. move follows Russia's decision to suspend participation in New START treaty. Looks like Birds wants to come down now. Not doing the break. Well, tomorrow might be exciting. BBY pop through VWAP. But now it's a red candle. Kind of barcoding today. Back to the barcode. Commercial real estate is widely seen as next shoe to drop as lending standards for CRE loans to tighten further. Bank of America says. Let's go. Fubo? Yeah, Fubo is pretty heavily shorted. It's been squeezy before. Buy? Let's check it out. Take a little look. Look. Crazy, it's a penny stock now. You'd be really buying it here. Not a reversal sign yet, but consolidation, which is the first step of reversing direction. I would wait for more momentum before going long. But yeah, this might be the bottom. Its bottom looks somewhat similar to BBBY, where it just basically slowed its downtrend, it's flattening out. So, waiting for confirmation of the upside before going long. Similar to here. high moving up here. Yeah, a little inverted head and shoulders I think will play out. So maybe a move back to pre-market high, 397. And I might do a couple little trades. Big 25% gap down after hours? I wouldn't imagine that unless they had earnings or something. Sold GME. Birds hanging out at the high. I did go along on the micro ES. It's kind of conflicting. Maybe we'll just consolidate because you have this RSI divergence, but also this inverted head and shoulders. So when in doubt, go along on SPY. Nice, GME, well done. 8%. Yeah, it just depends on how you like to trade it. Do you like to just always try and time the bottom perfectly and fail more often than you succeed, or do you like to wait for momentum and not try and catch bottoms, but catch the momentum once it started, like here or even here? If you're a dip buyer, then yeah, do it. But that dip might be right here. This might be this right here. Then I guess stop losses if it makes new lows. One way to do it.
We saw it back down to 64.36. Now, we were talking about crude. It attracted some attention down there, right, at those November 2021 levels. But, you know, if you're looking for prices at the pump to come off,
it's still rallying.
You're going to have to wait a little while because RBOB never took out the December 2022 low, while crude, again, was trading back down to Nov 2021 levels. We saw RBOB recently back down to 240, but that 2022 low is around $2.02. So now, if we were to see RBOB back to the November 2021 level time.
No, smart you didn't follow Jason. He's
so
calling out all
again,
sorts of stuff.
Prices
So
the pump feed into that narrative in terms of inflation, the Fed, ultimately, again, just pointing out crude oil prices
again, you don't have to time the
after
bottom.
Recently dipping, but we never really saw that in terms
Perfect
of
timing,
RBOB,
and
so
you're
I'm
just
not surprised that
you're
we
gonna
didn't
get
see a lot of
squashed.
follow through there.
Yeah, we'll
You're trying to
continue
be
to
perfect.
watch that
You just
as
gotta be
far as the
good,
inflation
not
data
perfect,
goes.
and
Also,
survive.
that impact
and
that
make
crude
money.
has on inflation, pretty substantial.
Uh,
All
this-
right, thanks to Ben Lichtenstein, host of the Future Show here on the network.
Yeah, I felt like I was late on it, of course,
but now
too.
let's bring
But
in George Tillis, senior markets correspondent here on the network.
I wasn't looking
George,
for an
we're
entry on
talking
SI.
Disney today. After their last
But the
earnings,
bank's
they
having this
announced
big
their
volatile move to the upside and
restructuring into three
downside,
different,
and I haven't actually had a good
silos
exposure to any of
here,
it, and I
and
felt
it seems like
stupid
they've
that I
gotten
haven't.
some of the
It's been a
activist
great trade. I
investors
just, for whatever
off of their
reason, have
backs
just
for
been
the
watching
time
it.
being. But
When I saw this one start to rally, and I saw the big volume,
Well, I think they're
and
doing
how cheap
what they
it was
need
and
to
how much
do.
it
I
come
think
down,
if you
it's
look
like-
at the stock over the last 5
it
years,
was definitely a
it's
risk.
actually down.
Again, I
and,
wasn't
they
watching
need
this
to
one
start
waiting
paying
for an
their
entry.
dividend again, and I
So,
think that's what their plan
but that
is
being said,
after they cut expenses.
I
They're
didn't get
expected to
until
cut
like
an
$1.50.
additional 7,000 jobs. They're parsing through that. It really
So you
comes
can
down to
always wait for
reduction of
momentum.
operating
You're not gonna get the perfect
expenses,
bottom,
and
but
I think the company really
again,
needs it from the standpoint
timing
of
the
them
tops and bottoms.
not producing as much profit
fool's errand.
as they did, let's say, about 5 years ago. I mean,
That's
if
why-
you look at their
that's why I'm
profitability
stuck in
profile,
BBY
their net income margin,
with
that's
the
after
amount that I
everything's
have
about
right now. I'm trying to
4%.
time it
That's
too
about
much.
4% lower
Not
than
waiting
their
for
5-year
momentum.
average. So profitability has been
I
a
could just wait
challenge.
this all
I
out, sit
think
down cash.
the Parks division
Waited
is
for the
another
reversal
thing that was
signals.
overlooked. When you look at their earnings back in February, their operating income that was generated from their Parks division beat the estimate by $1.1 billion, so $1.1 billion. So they actually got a lot of price increases. There's a lot of traffic
jump
and
in
guests
full court.
that are going
Yeah,
to
look
the
at stuff
parks.
hindsight, man. That's
And
stupid.
at the same time, the Disney Plus numbers in terms of new subscribers grew to over 11 million for the quarter versus the 7 million estimate.
No, I
And
mean,
that was
the
certainly
reason why I
better
bought in
than the
is
2
still
million
there on
attrition
BBY.
or
I'm just saying I could
loss
have got a
that
better
the company
entry.
had on the previous quarter for Q3. The ad spend model for the Disney Plus program is actually
I'm
taking
moving
off
up
as
here.
well. People are still paying. That's, again, about 83% of the total revenues for Disney Plus are the paying users. But at the same time, they have assets. You know, the Hulu division
Hulu.
of Disney. That is two-third owned by Disney. That's a way for them to raise cash. But I think that they do something with the ESPN, their broadcast division, ESPN, the ABC, the traditional linear and cable TV network. That's another way to raise money as well. So this may be an opportunistic look at Disney.
I don't know.
If you consider, again, looking
Maybe.
at a 5-year
I don't know if
chart,
that'll
it's
happen
actually
today, Mr. Invest.
some of those 5-year lows. And, of course, you
Thought
know
you were
Wall Street
bearish
loves
on SPY.
turnaround stories. I mean, you saw Alibaba today based on a breakup, moving higher by a double-digit % move. And a change at the helm, you know, with Bob Iger back, cutting expenses, recalibrating and refocusing
Oh, did
the
not
business
play out?
for
Oh my
optimal
gosh, no
profitability.
way.
This is a media company that's
Overconfident
got a global
predictions
brand.
didn't happen.
And it's kind of a shame that they haven't
Imagine
actually been able
that.
to utilize that in the last 5 years. But things may turn around here with this, with these expense reductions, but also the expectations for EBITDA growth, at least in the next 4 quarters.
There's another one, Mr.
are in that
Invest. He throws
14%
out
range on about 12%
overconfident
sales
predictions.
growth. So it looks like the expectations by analysts are starting to see things turn around.
George, I have a history of trading a company with
I read a few up. I did go long.
big conglomerates
I like
with
that inverted head and
many
shoulders.
different silos
We'll see though.
of
If
income.
it comes down and
And you know what
rebounces
you
here, I might
find?
add to it.
There's always something struggling, right? There's always part of the company doing well and part of the company struggling. And during the pandemic, you saw streaming doing well, but the parks obviously were shut down and the cruise lines. Now the parks, experiences, products, they're all doing extremely well, but as you know, Disney Plus, ESPN Plus, Hulu, that entertainment segment is just doing horribly. Now, they're cutting expenses, they're cutting staff, they're doing the right things long term. But
You've been trading stocks that long and you're hanging out on YouTube chats? So you suck at it or why?
Disney that's struggling. A company this big, there's always something doing well, always something struggling.
I think you make a good point. There's always been a good point to Disney's company. I think at the end of the day, just looking at the profit margin, it's about 4% lower than its 5-year average. That's telling. So somewhere in the company, without having digging through like analysts do specifically, they're losing money somewhere, and it may be based on higher expenses from their parks division or even Disney Plus. But I think it has to do really with their broadcast division, ESPN, ABC. That's really been a thorn in their side for quite some time. So if they spin that off, that might be value accretive to Disney as a whole. It might also allow them to reinstate their dividend as well.
That media entertainment, Tom,
if GME gets another bounce on this level,
$800 million in income a year ago to a $10 million loss this past year.
Yeah, and ESPN's actually been making inroads.
ESPN's not the problem. I think it's Disney Plus, and I don't know if it's Hulu, but it's Disney Plus.
Yeah.
They said that segment, those three, $1.1 billion in losses.
All right, great stuff, George. Appreciate it. That's George Tillis breaking down Disney for us. Yep, thanks, George. And Kevin, they're trying to possibly they're exploring dumping their 67% majority stake in Hulu.
That's the first to go, you got to think.
But they also did say that they're going to cut back
on just hanging out up here.
Creating more content,
I saw that, yes.
And relying more on live sports because ESPN turned it around the last couple
years
because they were on a down.
And they've fought all
I didn't like it breaking that level.
Spin off ESPN because
you get a lot of false breaks, but
that's the free cash flow animal that they have. So I think they need ESPN in the whole picture, but you're right. I think Hulu is the one.
Yeah. Okay, so we'll take a look at the stocks.
Moving
basically
down
about
here.
10% this year, but still down significantly from
I guess
year-ago levels. So I wanted to look at a strategy, maybe a little bit more long-term. They've got earnings at beginning of May. I think that first or second week of May on this stock. So that could possibly be an event risk. So I looked at a strategy that takes advantage
it's holding up really well.
Look at this. If you think the stock's going to rebound without maybe having to buy the shares, George mentioned they did suspend their dividend.
Nice bull flag.
Also looking to try to get that back, but trying to right the ship. So I looked out in the May cycle here, a couple months till expiration, just buying a simple call vertical for a directional bias while giving yourself some duration in this type of trade. So we looked at the May, buying the 95 strike call in that. This is actually the May 5th weekly series. Sorry about that. And that avoids the earnings event, which is on the 10th. So that's a good point. I think maybe if you think the stock might rise into that earnings event while avoiding it, using that May 5th weekly series may make sense for some people. Buying the 95 strike call, selling the 103 strike call on that one. You're paying roughly about a $3.10 debit for that. That's going to be your risk, $310 per spread. But if it goes above 103, that thing can expand to $8 wide. It's purely directional, Kevin. 98.10 break even on this one. Pretty good risk reward setup. And on a dollar basis, you don't need that big of a move.
32 deltas is what you're getting, Tom. But interesting, you're buying a vertical where it's an at the money and an out of the money, right? You're buying the strike $95 right at the strike. So you get that for a little cheaper. You get it a little more return if you're correct, but you do need this to move. Your break even is about 98.10, let's call it, if you do it for 310. So you do need some movement here, but this is one that you have that exponential winner if you're correct.
Right, and this is a spread that, you know, time decay, because you're buying it, you're buying it at the
came
money.
down quite a bit below
kind of
VWAP
works
now.
against you a little bit, but at the same time, that break
That gas
even of
also went back down, so I don't feel so
over
bad.
the next basically 2 months in this trade. May 5th weekly is 38 days, so about a month in a week
looking at
here.
an oil short at some
It's only
point.
about 3.1% above the current share price, and this is a type of trade, Kev, when I look at a vertical like this is, well, why don't you just buy the 95 call? Well, it's going to cost you more.
Retest on 72.
To get above that break
Like
even,
it's got
you're
enough
going to need a
momentum to
bigger
probably make
percentage
it.
move over the next 38
Keep
days.
going, maybe.
But if you sell something against your long option, you're reducing your cost with the expectations, yeah, I'd like to see it go above, way above 103, but the probability of that is less than if it just goes up to 103, right?
Yeah, the 103 call is trading about
moving
48
down
cents
here.
right now. So you're trimming about almost 50 cents.
All right,
off
now
that,
Birds is
the
finally rejecting
the
it.
price.
Coming down.
But you know, between the straight long call and
VWAP
the
set.
Yeah, and if you look at just the
1815.
options on the put side, say selling
levels that thing
like
can
your
hold.
example in Lululemon, selling it
Evital
out of
also
many
moving down
vertical,
a bit.
There's not a lot of option premium out there to collect.
in Disney.
Yeah, so
different animal.
Yeah, different animal, but this is definitely a trade that if you think the stock is going to grind higher over the next 38 days, this may take advantage of it. You don't need a massive move to the upside to get even full profitability on this type of trade up to that 103 level. Stock is below three moving averages, the 50, 100, and 200-day moving averages also. So it needs to make some inroads to the upside for that trade as an example to work. All right, Kev, that's going to do it for you and I today here on Fast
Still
Market.
going for HST.
Stick
Did
around
move
right
back
here
up
on
into the
TD
range.
Trade Network. Next Gen Investing's coming up.
This isn't a fast mover. I don't know if I'd say it's going to rip. But it's looking better. Got that engulfing candle today. And it looks like this day it did actually confirm a bounce on that support. So at least it's not breaking through there yet. Yeah, you have a little RSI divergence there too on the daily. Yeah, that could do well. Agree. That might have some merit for the long. The rate of U.S. home price appreciation continues to slow, up 3.8% year-over-year nationally, according to the Case-Shiller Index. This is the lowest year-over-year increase since December 2019, but is only as of January. Real-time data shows a 1.7% year-over-year decline in home prices, the first decline in over a decade. Yeah, what is the dividend on here? 32 cents. Kind of interesting, this thing rallies after the dividend. Usually the opposite of that, so yeah, maybe it's good. Maybe it'll rally after the divvy. That's so weird. Great dividend arbitrage play. If it continues to repeat this pattern. Bullard says financial stress can be contained with macro tools. Already read that, I don't understand it. Stock market rally is over as commercial real estate risks begin to compound. JP Morgan chief market strategist says college graduates in 1970 had an average of $1,000 in student debt. Today that number is more than 31,000. FDIC's Grunberg says regional bank liquidity has remained stable. Sam Bankman-Fried has been charged with bribing at least 40 million of cryptocurrency to benefit Chinese government officials. Canada's population grows 2.7% to 39.6 million, the fastest expansion among advanced economies and on par with many African nations. Already heard about that last week. Gen Z saw their average debt balloon to $16,283 in the final quarter of last year, up 3.1% compared to 3 months ago. New York Fed survey expected home price increase over next year at 2.6% versus 7% a year ago. Expected home price increase stands at lowest in survey history. Expected rent price increase for next year at 8.2% versus 11.5% last year. Jenny!
Quite some big moves, at least across the 4 major indices.
Yeah, I think that's well put and exactly right. We're watching, I don't want to say the dust settle, but we're watching the banking fears start to dissipate a little bit, but we're also watching alongside that, as those fears start to moderate, kind of those fears that the Federal Reserve will stay on its path start to uptick. So it's this paradox, and we're watching it in real time, Jenny, where it's like either things get a little bit worse on the economic front, possibly on the banking side, and then the Fed stops, or they improve and the economy stays where it is, and then the Fed doesn't stop. And so it's like in both scenarios, the market is sort of stuck in sort of this holding pattern, if you will. But I would say on the trading activity and this stuff that we'll get into throughout the show with some of the more stock-specific conversation is we're actually seeing some of these mega cap names that have been the leaders start to give back some of those gains the last couple of days. To me, that's a reflection of confidence coming back into the market as money's finding a different home elsewhere outside of those big companies.
Right, I think that's really well put. What has been a pretty risk-on market as of late. Actually, I would say even over the last several months. But as always on this show, we will focus on the individual movers. Actually, some earnings to get through today. Thank goodness. We'll kick things off with our upvote and downvote segment. Following that, we will chart and trade our upvotes. Our FOMO discussion is Lululemon. We'll be previewing their earnings as well as Micron after that. Both expected today after the close.
GME giving us the front run on the SPY, starting to bounce.
Getting some news from an analyst.
GME will pull up the SPY watch.
But a name that has been an outperformer this year, Alex. So I'm excited we get to talk some earnings today because it's been a pretty earnings light season.
Yeah, no doubt, and we'll there's plenty to get through on that front, no doubt about it. Obviously, some corporate shakeup as well in some of these names, but really looking forward to the preview for Lululemon. And to me, this is almost the new, and you kind of said it's almost this like bridge between one earnings season to the next, but it's almost like the new real end of an earnings season. When we start getting into this last week, you get Micron, you get Lulu. You're basically on fumes at that point for an earnings season. So we'll be wrapping this one up, putting the bow on it, and then looking ahead to the banks for the next one. But we'll talk some para as well towards the end of the show. That'll be fun with George. But let's start with upvote, downvote, not endorsements, not recommendations. And as promised, a little bit of a corporate shakeup here to kick things off. Lyft, the leadership transition is really front and center for this company. Talk to me about what we learned.
Yeah, so we did hear from Lyft today that their co-founders, who are CEO Logan Green as well as President John Zimmer, have decided to transition from their full-time executive management positions into non-executive roles. Now, David Reischer, who was a previous technology executive who served as Amazon's actually first head of product and retail in the U.S., as well as a general manager at Microsoft, will then take over as CEO effective April 17th. I actually thought that some of these street remarks were more interesting even than the news here, as Wedbush's Dan Ives said Lyft has been a train wreck the last 6 months, and management essentially lost all street credibility after a massively disappointing 2023 guidance on its fourth quarter earnings call, which then ultimately catalyzed the CEO change. They believe this was the right strategic move that should have happened actually a year ago, but the street will loudly applaud both Green and Zimmer moving stage left, running the Lyft story here. They do maintain a neutral rating and a $13 price target. We also saw Deutsche Bank today maintain its hold rating with a $12 price target, also agreeing that this is the right strategic move. It just might be a little bit too late, especially when comparing Lyft to Uber, which has been somewhat of a strong performer, at least relatively speaking. Uber shares are up about 12% this year. Lyft down about 15% this year, and now down about 77% from its yearly high. So Lyft needs, I'd say, some change, which is perhaps why we're seeing a positive reaction, because investors are growing impatient with this name, Alex.
Yeah, and I think this is the natural progression. So obviously you never, hope for these type of changes to be made, but sometimes they have to be, and it's the only really thing left to do to try to shake things up and, hopefully turn this company around. Obviously, it's been a downward spiral, really almost from the day that this company was public, straight downwards. And it's obviously been a multi-year path, but essentially, basically coming to a point now where, we're not on the lows, the all-time lows, but we're not far from them. And of course, you mentioned sort of that gap seemingly widening between Lyft and Uber. Going to say upvote though, this shakeup, not enough though to spark confidence here today, in spite of the analysts kind of talking about how this may be being necessary, but maybe a little bit too late. We'll talk about this one more. Maybe there'll be something on the technicals to spark some confidence, because that's really something's got to change the sentiment around Lyft. Otherwise, this seems like a kind of a sad story when it comes to a name that's still, I think, a pretty integral part of many people's lives. Although Uber might get most of the business.
And unfortunately for Lyft, they take too long. I always find the Lyft time is like twice as much as the Uber time, at least in the city of Chicago. Our next name today, though, is Walgreens. And now Walgreens is actually getting a nice lift despite some negative commentary we heard from their leadership following their second quarter earnings. They did post a beat on their top and bottom line in the second quarter, but this was still weighed down pretty substantially by a decline in their COVID-19 vaccines and tests. They did say they're slowly restoring their full operations to all of their pharmacies, but hundreds continue to operate at these reduced hours because of a continuing staff shortage. The CEO said the expectation should be they will still have a subset of stores that are still on these shortened pharmacy hours. They said that 500 stores did resume their normal operating hours, while 1,900 still do have these shortened schedules. Their expenses did rise about 6% to about $5.5 billion in the period. This included a $306 million pre-tax charge for some opioid-related claims,
not sure how that was helpful,
litigation in different states across the U.S.
Thanks for your participation.
The company did book a $6.5 billion charge in the prior quarter, so it was less damaging to the company, but still something to consider when looking at Walgreens. A name that's fallen about 8.5% from this year, and down about 29% from their yearly high.
Yeah, this is a tough one. Obviously, you read a lot of things in terms of commentary around this, and a lot of it wasn't good, yet they still posted top and bottom line beats, and were able to offset some of those headwinds from staff issues to hours, and of course the COVID traffic not really being there. But I think some of this has to do with the fact that this stock's been under tremendous pressure too. So you see a nice move here today, but that I don't think tells the full story. You got to look at this chart. It's been a pretty brutal go at it for the better part of a year and a half. Gonna say downvote though, Jenny, just solely because we just got the news. We're getting the reaction. Positive step. Still a lot to go though, I would say, in terms of a true turnaround at Walgreens.
I completely agree. And now our next name also getting a nice lift. One of our strongest outperformers of the day, that is PVH, which is the parent company of Tommy Hilfiger, as well as Calvin Klein, getting a nice near 20% rally, pacing actually for now its best day since November of 2020. After they did report fiscal fourth quarter adjusted earnings that came in around $2.38 per share. This was down from a year earlier, but well ahead of forecasts on revenue of about $2.5 billion. This also did decline year-over-year, but also exceeded the street's estimates. Now, PVH said that they expect their first quarter earnings to be around $190 a share, their revenue to be flat. They do also now expect their fiscal 2023 earnings to come in around $10 a share. This was ahead of what the street had been expecting, and we saw some bullish analyst activity today following this report. Credit Suisse did raise its price target to $93 a share from $87.
Evital continuing
with an
to melt
outperform
down
rating.
here.
Telsey also with a $90 price
see what
target
kind of
today. So
support
implying
gets
some
at
upside from current
$1.80 or
levels, not a
so.
ton because we're already at about $88 now with this
Slides
nice move
moving
higher
down.
today. And now this name is up a whopping 101% from its yearly low.
Yeah, I think that's a really key piece to underscore, highlight, and bold there as just the real. This has been a nice move to start the year, but even to get to that 93 price target, it's really not that hard to imagine. It was just there back in February. It did start to turn sour over the last month as kind of concerns around inflation ramped back up, financial conditions potentially tightening, what that may mean for consumers. But all in all, we talked about this, Jenny. I mean, there's winners
no, I'm not
within this space
direct
and there's
registered any
losers.
shares.
Calvin Klein, Tommy Hilfiger, we'll see where they ultimately fall on that, but this is certainly a really positive update. Analysts really liked the outlook as well as, of course, the report.
Really strong today.
If the news wasn't out already, maybe this would be one that we'd say we pull in Rick here for the chart. But I'm going to say downvote just simply because the last one on the list, I think, is one that garners a little bit more attention at least today, and that, of course, is Alibaba.
Alibaba splitting into 6 different business units. Now, this is key because this will dismantle the empire that Jack Ma has built over the last 2 decades. And under the restructuring, their various businesses will be split into these 6 major areas like cloud computing, Chinese e-commerce, global e-commerce, digital mapping, and food delivery, logistics, as well as
average
media
down.
and
Maybe
entertainment.
here I'll average down a bit.
Each business group
if
and
it
investments will
shows sign
retain their
reversal.
flexibility to raise outside capital and seek an IPO when ready. Their domestic business will still remain wholly owned by Alibaba, as well as led by their CEO Daniel Zhang, but each of the 6 business groups will then have their own respective leadership. And this is a name that I think the longer term chart is better
this guy, he said Tommy Hilfiger?
Faced in the Chinese scrutiny
That guy used to do that as a kid also.
Faced from really the government overseas. For the better part of the last several years, they were hit with
I wasn't listening.
$8 billion
Tommy Hilfiger
fine
still
just several years back. So I did think it was interesting the CEO said regarding this shakeup that if you don't change yourself, you will be defeated by the times. So attempting to reshape the company, and shares are getting a nice lift in reaction, up almost 14%, Alex.
Yeah, I like this story, and I wonder if this will be a greater trend that we see beyond just Alibaba. Of course, we've read about GE doing this, which is sort of a legacy conglomerate of a hodgepodge of unrelated businesses, trying to split them off so that investors who are being selective with their investment capital can put their money to work in places that they want to invest in. For example, I think, Amazon is oftentimes the U.S.
Another prediction, 166 for low, then bounce upwards.
Say you wanted to just invest in AWS, you can't really do that. You have to get the e-commerce from Amazon as well.
So
Alibaba are able to split these off into separate business units, into separate silos that allows for more targeted investment. I think will potentially unlock additional shareholder value, and I think we're seeing that today in the reaction from Alibaba. My biggest question is going to be, what do the technicals have to say as we say upvote for this one, but does this start a broader trend? Do we see this from something like an Amazon or an Alphabet down the line that just have so many different businesses, especially in the case of Amazon, where the e-commerce and the cloud business have sort of that defensive aspect where maybe one can offset weakness in the other if you're an investor. There's no synergy between them as far as I can tell. How fast you can deliver packages doesn't increase cloud computing as far as I can tell. So if you wanted to split those off into 2 different companies,
this thing might
to me
keep
that would
going
make a lot
on
of
that
sense
news.
as well.
Yeah, I think regulators have been calling for that for quite some time. It would be an interesting move by some of these U.S. companies. But we'll be moving forward with our 2 upvotes today. Those being Lyft as well as Alibaba. We'll be diving into the technicals as well as looking at some example trades coming up next.
Sales of luxury homes dropped 45% during the 3 months ended January 31, compared to the same period the year before. SPY moving down. U.S. judge approves revised bail conditions for FTX founder Sam Bankman-Fried. %80 of employers said they plan on raising workers' base pay in 2023, down from 92% last year. Fed's bar. Most banks are highly effective in managing interest rate risk, liquidity risk. The Case-Shiller 20-city home price index moved down for a 7th straight month, the longest down streak since 2011-2012. San Francisco, Seattle. San Diego and Portland. Home prices were all negative year over year for the first time. 4 major cities in the index were down year over year since 2012. .44% of Americans say they have a side hustle in addition to full-time jobs, up 13% from 2020 with inflation as the biggest motivating factor. Tradable for me. With that small of an account, how are you able to trade so often? Gerbad jeans. Remember Gerbad. Oh, you don't day trade them at all? Wave trade it. Alright, it's buy moving back down. See if we get a bounce here, the 394.5. We start to flush. Birds moving back down a little bit to VWAP. EBTL still coming down. BY's been selling off too. It's down 0.9%, 78.10. The low over here is 77.66.
Mostly, unfortunately, for the bulls in this one. So we can see here that since we had earnings, this gives us a new downward sloping trend line to keep an eye on, this white dashed line here.
Skip Tuesdays
and
and
we can see that we touched
Tuesdays
it
and
this
Wednesdays
morning,
are crazy.
but we are seeing a bit of a rejection here.
Those are
kind of
GME's most exciting days
move
historically.
downward here. And the $10 mark, this red dashed line, was an area that I thought looked
breaking out, man.
worth
New highs
noting
up
because it was
14%.
around where we bottomed out here. And also here,
dropping.
and that was
dropping now a little bit.
Point that it was worth looking for in terms of some potential support and resistance here. We were above it earlier today, flirting with that downward sloping trend line, but it seems
really
like it's not in the cards for the bulls here today.
or so.
So I struggled with this one a little bit, trying to figure out where we might find a good source of support here beyond these lows that we just put in recently during the past couple of weeks here. So I put up a linear regression line, a line of best fit based on closing prices for the whole year, and that comes in around the 740 mark. So right around 740 is where you might expect to find some further support based on this particular indicator. And the momentum is also trending downward still. We were in that oversold area. We failed to crack above the 50 midline, so things are still trending lower and favoring the bears at this point here. So usually when I have a linear regression line, I also have our standard deviation channels up because they're derived from this linear regression line. today I noticed that the
we should
minus
get a good
one
entry this
standard
week.
deviation channel is coming in roughly at the
Maybe
zero
today,
level.
maybe tomorrow.
So that's kind of speaks to how far we've fallen
Either try and
down in
time
this
the
name
bottom
and
or
how,
wait for the momentum,
how poor
but,
things are looking for the
I would
bulls
wait at
right
least
now
till
here. So
shows
if you're
momentum.
looking for optimism, unfortunately, I can't really
Upside, so.
provide that at this
Something
time.
like this. Yeah,
So
iron
technical
hit,
is
and
not
then you got
giving us
this.
any sign of
It's a
relief
gap
here,
up,
but we did get some price
this momentum
targets
started
today from
holding.
Wedbush as well as Deutsche Bank
And
that did
volume.
imply some
We'll grab it right
upside,
there.
hitting $12,
It happens again up here
$13
somewhere.
above what we're seeing from a technical front. So maybe with that attitude in mind, Alex,
Over
walk
something.
us through what you're thinking for example trades today, leaning more bullish in nature, ignoring the technicals. Sorry, Rick, but we're hoping for some optimism and lift after what has been a pretty brutal
You
year.
mean not moving down
well,
with
I
the
think
SPY
the
here? It's had
bearish
enough.
case is laid out, but unfortunately, you're talking about a $9 stock. And so at some point, risk and reward becomes a difficult equation when you're betting against a stock that is at such a low price. It can only go to zero. And at one point, this stock was almost $90 a share. So you're looking at a pretty wide range of potential risks to the upside versus the downside. But just for those who are seeing potential value in this name, seeing that this shakeup in the leadership roles could bring optimism for Lyft in spite of the fact that it isn't today. And maybe the summer months, you get a little bit more people queuing up
That was
for
what you were
Lyft,
trying to think of?
and less so for Uber. Only time will tell. Whatever it may be, potentially trying to take advantage of a bounce back in Lyft. I looked at a strategy that would benefit from that. Given the fact that it's a lower price stock, though, I didn't want to necessarily do something that capped the upside. One of the
bouncing right on that level we
advantages,
have
I
drawn.
think,
Not sure if that'll
of these
hold or
lower
not.
price stocks and the reason investors find themselves there is they want that potentially outsized return potential if they're going to take what they perceive as maybe outsized risk buying into a name that's
not
struggling.
averaging
And
down
so I
on it
looked at
yet.
buying a call zebra in this one, Jenny,
Well, that's stayed
in which
engulfing.
essentially we're looking to replicate a theoretical exposure
Yeah,
of
I'll get
100
more.
shares of stock, but do so in a risk-defined way and a slightly more capital-efficient way. And so looking at this,
Like that
it's essentially a
engulfing
2-by-1 call ratio in which we're looking to buy 2 in the money, near 75 delta calls, and then sell a near at the money or 50-ish delta call in order to create a spread that has a theoretical delta of around 100. And so with this, because we're buying 2 calls, only selling 1, there is no cap to the upside. It will go off into infinity with an unlimited profit potential, assuming the stock can get its legs under it and lift here a little bit, pun intended on that. But Jenny, with this, so the debit spent is the risk on this particular trade. So while if you were to buy 100 shares of stock, you'd have that risk fully down to zero. In this case, at a $2 debit, it only has $200 in risk. Break even is around 9.5, so that was near where this stock was trading at the time.
AMC,
When
a
I
little
looked at
poppy,
this
huh?
prior to the show,
Yeah,
it has sold
poppy.
off a little bit since then, so these prices may be slightly different. However, there's always a trade-off. So, of course, if you bought stock shares, there's no expiration date. This, of course, has an expiration date, and that expiration date is in April. But also, at 8.5, right at the money here, if you were just to buy 100 shares of stock at 9.5, you'd be out $100. You know, stock's down $1 full, you have 100 shares. In this case, that's our max loss potential. So it's twice as much risk for that first dollar, and then no additional risk where, of course, stock.
I don't know if I'd get out of Barrett. I mean, it depends on your plan with it when you opened it, I guess.
Here, but for someone looking for a capital, maybe efficient way, risk-defined way to get that unlimited
I think
upside
they're all could definitely keep going.
without the time value of just
So
simply
when you got
buying a
in,
call,
when you were planning on
this
getting
might be the
out,
way
what was
to
your
do it.
plan?
I think that's really well put. And now to shift gears here to a name that is objectively more optimistic, at least on the session today. That is Alibaba, which is only continuing to build on its strength, now up over 14%, Rick. And now we see shares up over 65% from their yearly low. So while this name does have its own set of issues, we are getting a nice move higher today.
Yeah, kind of a reversal of fortunes recently for this company here. We had this shorter-term downtrend, which was nonetheless quite steep going from these highs over here. So roughly we're down about 21% or so from that point here. Things started to change once we hit this point, though. We broke through that downward sloping trend line. We're up about 17% from that point. Actually, probably a little bit more now because the stock is seeing a bit of a rally here as the day has gone on now. So the move up recently took us through our 2 shorter-term moving averages, our yellow 21-day exponential moving average, and our orange 63-day EMA. And the 63-day EMA looked important today because that's right about where price found some support. And it's ticked up a little bit since that point. It was pretty close to being on the money earlier today. We also went through our volume profile point of control near the $90 mark. So that was the area of heaviest trading that can often be a source of support or resistance, and we just kind of cruised and gapped through that area pretty cleanly there. Speaking of gaps, a lot of gaps on this chart because it's an ADR, so it can be kind of difficult to assess in some situations here. The closest gap that I thought looked relatively important was around here because we had some bottoming action in the very short term right around this 102 level. And that's also the point right here where we've got our purple 252-day exponential moving average. So that could be a source of resistance in this name if we keep trending upward over the next few days or so. Momentum looking relatively strong here. We had quite once again, a steep departure from where we were before. We were in the oversold area for quite a while here during this decline that we saw. Now we're rocketing back up above the 50 midline. Momentum back in the hands of the bulls here, but we're not quite at that overbought area. That would be another bullish sign for this company. It would be especially bullish if we were able to break above that 102 level, this red dashed line, and break into the overbought area concurrently. So that would be something to note. So 102 to the upside. To the downside, around 93. That's our orange 63-day EMA. Below that, the $90 mark would be our volume profile point of control. So a few key areas to watch here on this chart.
So 102 to the upside, and thankfully we are seeing momentum now match at least its price activity today, with seeing a lot of optimism, at least if you're a bull in this name. But appreciate all of your thoughts, as always, our chart master, Nick Ducat. And Alex, looking at this name, we will follow the technicals here. Looking at example trade today, also leaning more
AMC did too?
Yeah, and obviously the reaction by the market in this name is much more positive than the reaction in Lyft. And so with that in mind, I looked at something that was more neutral to bullish. The stock's making a nice move here today. Wanted to look at something that wasn't necessarily just chasing the upside.
That bounce out of 4 that you guys were calling out.
Be misguided as well. And so I wanted to look at something that sells some downside essentially here in this particular name. Looked at selling a put vertical below the market going out to April. Risk defined. And a theme you're going to see throughout our trade illustrations here today, Jenny, is that all of them have the same amount of risk, but all of them have very different risk profiles. So you can look at a situation, 13%. Assess it, apply a different trade strategy, and all these different strategies have $200 in risk today.
Yeah,
so looking at this particular strategy,
12.75 halted. GME's going now.
Put, that is the crux of this trade. That's where it all starts.
Waking them all up.
Then I went to the 88
that was that move
to
on
define
AMC.
the risk. We're able to collect $1 on that. That is 1/3 the width of the strikes, creates a 2-to-1 risk reward ratio, and it also creates a situation where there's $100 in max profit potential while there's $200.
Jimmy fill gap 18.
The break even is exactly at 90.
I don't,
because
it's
accounting for transaction
held
fees,
support nicely here. It's bouncing this level twice
of course,
now.
Theoretically at expiration. But pretty straightforward. I would say the risk profile does a almost better
good
job
earnings.
than I can in showing you
I think we'll see an earnings continuation, unless if the market just crashes.
Happen with this type of a trade. Anything above 91.
Yeah, Jimmy's moving because of AMC.
The anticipation would be that this would
AMC's up
worthless.
12.5%, just halted.
That's where you would keep that credit, and of course a sell-off.
I said Tuesdays are fun, guys.
All the strikes where these
Tuesdays and Wednesdays are the days.
And then potentially
That's
offset
most
the
exciting.
assignment and exercise. That's the worst case scenario, which in this case, Jenny, is a $200 maximum.
GME we're kind of expecting, or I was, a move today just from T+2, but this isn't looking like that. This is just looking like AMC's pulling it up. Even woke Bed Bath up a little bit.
Exercise or assignment. Now coming up next, it's time for FOMO. We are looking at Lululemon ahead of their
I have so many AMC. Yeah, look, it woke up BBY too. Anything else? We've seen Carvana move with it. No. Anything else tied? You guys see any other movers in the same time frame? Here's what else is getting squeezy in this basket. Cost, no. Express. Express had to move up with it. This might be from it. That's volume also. I had earnings. GME's going more. It's almost green. ADP, nope, not part of it. Only 4% halted. It's because it went so quick. It's not 4%. 12 and almost 13%. It's at 12.75% when it halted. Has to do with the velocity and the percent. But I woke up GME. Jeez, look at this thing. More options? I don't know. I don't know if I want to try and jump in right now or not. How sustained this is. Really don't know. Did say I wanted to get more options on it though. %1 to the upside now on GME. Never mind, 0.5%. You're selling your 0.024. Think about the decision before you make it. Think long and hard. No, AMC is still halted. Yeah, it's still halted. When it resumes, if it sells off, the pump is over. For all these. It's waking up Bed Bath & Beyond. This is the one I really wanted to wake up. You guys see any other ones on your screeners, tickers, alerts? Remember last time we had a pretty big move. It was Carvana. Oh, Carvana. It's happening again with Carvana, I think. That's so weird Carvana's in here. If it moves enough, we'll probably wake up Express and costs. Yep, Express got a candle on volume 2. Ross one, no Express. Costs. Naked was in there at one point. I got delisted. Well, yeah, Ape's gonna crank too with AMC, right? So that one makes sense. Ape's not halted though. That's kind of funny to think about. Express a clothing store, yes sir. NCMI, interesting. Never seen this one. I don't know if this is related or not. We'll see once AMC gets resumed. AMC is resumed. Big red candle. Oh. Oh, back up to the green. AMC is ripping again. Wow. Pulling GME. Hopefully one of these other ones that have true fundamental value can outpace AMC. That's the problem. Cost isn't getting anything. Express to get that volume. Carvana. AMC ripping still. It's gonna get halted again. 17%. If it slows down, it won't get halted. Today's amount. AMC was up 12.5% before it got halted. It wasn't 4. You can look at all the criteria for limit halts and volatility halts. They do have rules, albeit it's subjective. They basically do it when they want, but that one looked legitimate to me. Yeah, 4 million volume in the last 5 minutes. GME is not moving with it anymore. Neither is BBY. Yep, the $4 AMC buyers, they were right. You guys on Discord are saying it. Making AMC back up at $4. GAIA. No. Yeah, I think this little pump on Carvana was from it. Yep. BBBY got shut back down. Low of a whop. AMC's still kind of going 15% or so. It is just the things you're done on, that's correct. But given if you owned it here, you're still down. Down, 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 down. So buying at that 4 level would have been the way to make money on that. There you go. Still going, 16%. %. Got some resistance here at like 5.5. 18%. Well, AMC still looks broken. I guess GME too, it just doesn't do it on its own anymore. Hey, Emperor, what's up? Yeah, it's not even pulling BBY anymore. The juke. Whoa, spy flush through the floor there. Not good for my longs. Alright, Spy did make a new low there. Not sure if it's a little false break or if I should cut. Might be legitimate.
Back it up, and of course that not only shows that it's grown, Lululemon has grown relative to itself in terms of traffic, but it's outperforming its peers, and that's another thing I think is important to note.
AMC wasn't real play. I don't know what to say. Should have followed Citadel.
Actual demand for the products. Typically, you would think that those two would be correlated, but we'll have to see when this report comes out. But this is going to be inventory,
are they really starting up the live streams?
When it comes to what the street will be focused on. Of course, there'll be industry read-throughs as well on demand for this space, particularly within athleisure. But inventory management has been the tough part for all of these companies. And, the bigger you are, of which Lululemon is really an impressively sized company at this point.
Yeah, they halted on the way up.
The scale just makes that inventory management so much more important.
Woke up the rest of them.
That, at least for the bulls and Lululemon,
that
BBBY, increased traffic will help alleviate some of those inventory problems. It'll increase demand and sales and ultimately potentially increase the stock price in reaction. But A lot of question marks still, nothing promised here for the company, but I love that you had those numbers to back up something that we kept saying.
It's fine,
really
you're low on the
weren't able
day.
to prove it other than, we see it.
I know, and I do feel like sometimes my read on retail isn't necessarily the most accurate because we live in an urban area, but that was at least what we got from Placer ACI for the month of February. Now, Lululemon is down about 1.5% year to date into this report, Alex. So down about 23% from their high, having a decent month, up about 2%, not necessarily anything wild, but when trading this name, I do think that perhaps for the bulls at least, we are seeing some weakness, which could perhaps be that a buying opportunity, obviously depending on your stance. But walk us through what you're thinking for an example trade today.
Yeah, of course, it's earnings related, so there's this potential for volatility in either direction. And with that, I wanted to structure something that would be a little bit more on the high probability side. It is neutral to bullish, though. You talked about some of those numbers and reasons to think that Lulu could kind of defy the industry trends and be an outperformer relative to its peers. And I think that traffic indication is an important theme that could indicate ultimately whether or not it does do that. But I looked at selling a skewed put butterfly below the market here, in which
I don't know if this one woke up from it. That'd be interesting.
Of the 300 puts, buying one of the 302.5 puts, and then of course defining the risk by buying the 295. So again, I said throughout the show today, at least today, that all the trade illustrations would be a little bit different, but they would all have that same risk. So we're talking about now a stock that trades at $3.15. We talked about a stock that traded at $9.20. Yet they both have
back over
$200
2.
risk. Of course, the risk profiles look way different here.
Moving up here, pretty good too.
Does a lot of the work for me to explain kind of what happens. Since this is done for a credit, if we're able to fill this, if you were looking at this type of a strategy for a 50-cent credit, let's say, it's going to perform like a short put vertical when all of these options are out of the money. If they all expired, you would simply just keep the credit. So in this case, that would be a $50 max profit on that $200 in risk. But because there is that added component, which there's a long debit spread,
what kind of market are we trading in?
That short credit spread, if it perfectly pinned at 300, this one can actually expand to as much as $300 in max profit. We talk about it every time we look at this type of a strategy. That's not the highest probability of events, but it is a possible
Anybody that thinks
outcome.
they buy a stock and it goes up, they sell it goes down, it's just
to me about that
sorely
kicker is really what it
mistaken,
does to the break even, brings that break even price down to 297 theoretically, and it lowers the overall risk down to 200. That takes place below 295 if all these options were in the money and they all offset each other through assignment and exercise.
Sort of,
you
not
know
really.
The max loss going in. $200 in max loss to
but
make
yeah, we'll see.
somewhere
See if it bounces on
between
VWAP.
potentially, of course, 50 if they all
pulling
expired
these other ones down
as
further
much
than
as
they were.
300 in the event that it perfectly pinned at $300.
And I'm excited for this report. I
Jimmy's
think that
still holding
Lululemon is
up
always
there.
one
That's
that is
nice.
very interesting and, of course, very close to
Rule
my
said
heart.
5 minutes,
as
more
it
than
is
7%
a
more
place
than it
that
gets
I
halted.
frequent
That's
far
the
too
rule.
often. But now, coming up next, we'll not be straying too far away from our earnings preview conversation. We'll be looking at now Micron ahead of
It's more than that. Are you looking at it right now? There's like a lot of different criteria for
what we can expect
volatility halts.
coming up next.
It's not that simple. So yeah, but I agree. It is. They do it subjectively though. Eyes flushing down here. BBY is going to be back to where it was before it started this little AMC pump. Oh, yeah, I did see your question. No, they never react to E3 events. If there was news or something they released there, then maybe, but I've never seen GameStop react to it. Oh, AMC bouncing up off of VWAP here. That ain't bad. It's holding up pretty well. Holding up pretty well so far. Now it's lost the velocity though, so it's not going to pull up the others. Really has to get out of control, and then it'll mess with their margins and cause forced covering or rolling over or whatever on the other ones. When it's slow, they can manage it. I bounce call time? Maybe. I closed out of my shorts when it broke this low. So yeah, I'd be flying blind just buying calls here. Not to say this might not be the low, but I'm not liking it. Jenny.
You know, and I would say there's some concern here with their earnings, at least from the previews that I was seeing. Their second quarter is expected out today after the closing bell, but their revenue is expected to be cut nearly in half from year-ago levels on adjusted losses that are much steeper than the profit they posted a year ago. But here to tell us more on these results, I'd like to welcome in Jeff Pierce, contributor across the TD Ameritrade network. So Jeff, I'm a little bit concerned when looking at what the street is pricing in here for this report, but is this weakness expected? I mean, is this something to be concerned about?
Unfortunately, it's something that investors are a little bit used to now with Micron and with a lot of the tech stocks, especially in the chip segment. You know, this is the last 2 quarters in a row that we saw Micron report slowing revenue. That comes after 9 quarters of revenue gains in a row. As you pointed out, earnings per share expected a loss of 67 cents. Revenue coming in about half of what it was at $3.76 billion. You look at last year, earnings per share, they gained $2.14 so we're far distance from that as well. Some of the headwinds that I think investors are going to be focusing on are certainly the weak memory chip market, as we continue to see low PC, low smartphone.
You can see the velocity right here when it got halted.
Also,
like, round where it got halted, that's what really turned on the other stocks.
Rising rates,
GME and BBBY.
Some of the concerns over a recession have
actually
really
got
slowed
halted
down
and this one
consumers
started moving.
On purchasing those PCs and smartphones
and now that's
after we
consolidating
saw
up
that
there.
big push during COVID.
This isn't consolidating at the highs at GameC. This is coming
Another
down.
big issue is going to be China, right? A lot of their sales were derived from China.
The BBY
You know that there's some restrictions in sales to China now, and the U.S. is really trying to focus on their chip production.
If this starts ripping again, it'll probably pull those up. But if this just
I think investors
moves without velocity,
are now trying to decide whether or not the
not a
second
risk,
half
and
of
they can
2023 is
short
really
them
where we're going
individually.
to see a turnaround. This could be an important report if we start to see the company show a little bit of a bottoming out in terms of these slowdowns we're seeing in their specific segments.
Good stuff. Any final thoughts here? I'm seeing about a 5% market maker move. Looks like there is an anticipation for a little bit of volatility, but I guess in semiconductors, 5% sort of muted.
Yeah, it's, you know, volatility is typically expected in these types of stocks. I would say, you know, looking out to see what the cost-cutting measures have done. We know they cut about 10% of
it was you gillied up, huh? You were the one trying to buy it at $4.
They're also suspending some of their bonuses. And
It's
looking
holding
at
up
the
good.
automotive side, if you
saw
look
your
at
calls
the
up
EV
here.
side of the business,
But it
that's
might
where
keep
we've
moving.
actually seen a little bit of growth. Maybe they
Holding
highlight
up
that
at a high
section.
level could
And if we see any
rally, it's
positivity in the
bull-flagging.
data centers, that could certainly be a big deal for investors.
Yeah, Jeff, and they did say on their previous earnings call they do expect improvements in these inventory levels. So I think any update on that would be welcome.
Down
This name has fared
0.6%.
quite well, relatively speaking, this year. But I just think this disappointment overall with their lack of growth, their lack of earnings, is
Just
something
wait, it might get more
at least that I
expensive.
was paying attention to. We'll obviously get
You
more
could sell some
clarity
here,
on that
but
today after the
this
close.
is
But we'll leave it
consolidating
there.
at a
Appreciate
high
all of
level,
your
so
insight
momentum's up.
previewing Micron ahead of
I feel
earnings.
like we'll
Jeff
probably get
Pierce,
another breakout.
contributor across the network. Now
Got
coming
about
up
10
next,
minutes till 2.
it's time for Under 30. We are looking looking at Paramount actually getting a nice lift today on the back of BBBY upgrading shares. We'll dive into that with George Schultz coming up next.
Basically right to that 394 level that I have going there. OpenAI CEO Sam Altman said AI could pose economic shocks or disinformation problems at a level far beyond anything we're prepared for. Great. SI up 2.25, still above $2. GME is actually holding up pretty well after that drop on AMC. Consumers on both sides of the transaction appear to be feeling cautious about the housing market. Goldman Sachs predicts the commodities will return 28% in 12 months. Affirm Holdings down 7% after Apple launches Buy Now Pay Later service in US. Buy new low. Goldman Sachs scraps plan to buy a third corporate jet amid scrutiny of CEO's plane use and cost cutting. Uber Kareem is in advanced talks with UAE's EN for investment in super app expansion. Don't know what that means. Prosecutors raided several of France's biggest banks as part of an investigation into what authorities say is one of Europe's largest tax thefts. Cox Automotive forecast an upside surprise expected for the U.S. auto sales in Q1. GME is moving back up here a little bit. Yep, so is AMC. But Bat's not getting it yet. U.S. money supply has fallen 2.4% over the last 12 months, the largest year-over-year decline on record. Largest decline on record. This goes back to 1959. No, SPY puts were smart. I thought about going short at the break here, but decided just to not take more losses and cut the longs. EU patent body to set up manage database on text standard patents. If there's a news. Just a late reaction to the banking hearing thing. All right, SPY getting back to this level, 394. gonna get some more GameStop calls. Buy new low 394 even. Interesting. GME is trying to climb up here, and AMC is just kind of hanging out. That seems like it's something GME is doing on its own. Maybe some T+2 action we're getting. Someone close? I don't know, Jonathan. I don't think so. Having plans and sticking to it is the way you win, Gene. You're doing good. Need space to make another space run? I haven't looked at space in so long. $3. That's gonna keep coming down. See if he bounces here at this level. 3245 area. Buys, hanging out the lows. All right, now AMC is kind of giving it back up. Going back down to view up. I don't think the G-America announcement is going to have any move on the stock price. Their 10K might, and it might be bearish for the stock short term. Could be bullish, but just as easily, or maybe more likely, would be bearish. Or maybe no effect at all. Maybe it's just late because it took longer. It had to get audited because it was a yearly one, and because their earnings beat by so much, and all this new profits from their marketplace, the audits may be taking longer. Buy flushing down now. Glad I closed my long. Not really any big levels until quite a ways down, actually. I have a big move coming up. Buy down 0.7%. It's not affected GME yet. In inverse, after an AMC halt, that's like MOAS recipe right there. Start getting some inverse action. NFT dividend definitely would, I think, cause some price action. But that probably won't come out midday from the G-America announcement. That'll be in the filing, I would imagine. I mean, could be wrong, but gonna be a ruling on the AMC case after close? Oh, you think that's what the pump was from? them getting in trouble with the SEC? That thing? Eyes flushing here. GME is not moving at all. BBY even had a little bounce up. Making the short at the break of the support, I guess, would have been a good play. Too late now. No idea why it's ripping. The bigger question is, why does GME go when it does, and BBBY and Carvana and Express? John Wick is coming. He's coming for the shorts. This relative strength on GME is pretty solid. Bird selling off below VWAP. Got support here at 155 or so. It's at 167. Executives that truly believe in it, etc. Mess with his dog. That GME, dude. Do it. The daily chart, the candles are kind of ugly, but zoom in a little bit. It's nice consolidation at this high on GME. Solid support line. Eyes getting a green candle. I see your grandpa. Awesome. Felt all the nostalgia. Bob is still grinding up, man. SI holding above 2 for now. Pretty good, pretty solid.
5 of the 6 separate companies the ability to go on ahead and do their own IPO. So let's take a look at some of the details. It'll have a cloud intelligence sector. It'll also have a commerce group,
holding up very well for that
be
being
the company
such a
that
pump.
will stay underneath Alibaba as its control company. Likely because the e-commerce sector is the most productive sector when it comes to its domestic sales.
More calls.
Local services group will include the food, grocery, and delivery services that already exist locally, and then smart logistics and a digital commerce group for global, as well as a digital media and entertainment group. The company says that it's a move designed to unlock shareholder value and foster market competitiveness. And we know that Alibaba has gotten a lot of criticism for having such huge chunks of the market share in many different areas, and so this may be one way to try to break that up.
is pretty amazing to see the move that we are seeing today. And then we turn our attention now, moving over to Lyft. You have the co-founders
market makers are
really moving aside here. Big news. Your thoughts?
Huge news about Lyft. So huge that
23.50 is a strike, 23 is a strike, 23.75
of a sale. But the new CEO really did
IV's low.
Knock those thoughts down. Lyft's co-founders are leaving the company as executives.
IV's back into the 80s.
But Logan Green, CEO, and President John Zimmer will be transitioning to non-executive roles as chair and vice chair of the Lyft board. This will happen April 17th and June 30th. Now, the new CEO, David Risher, he's a tech executive, but he also just recently founded a nonprofit company called World Reader, and he's going to become CEO on April 17th of Lyft. Now, earlier in the session, investors liked this news. They thought that it sparked some speculation that Lyft was preparing itself for a sale. That happened all up until midday trading when the new CEO said to Bloomberg, Lyft is not for sale. But why would they think that? One reason is because Lyft has seen nearly 90% decline in market value since it went public in 2019. That's pretty huge. And so analysts are giving their thoughts as well. Wedbush Securities says that Lyft had been a train wreck in the last 6 months. And management has essentially lost all Wall Street credibility after that disappointing 2023 guidance.
Can't believe how many strikes they have.
He maintained a neutral rating and a $13 price target on Lyft. And then Deutsche Bank said that Lyft is going to keep a hold rating at the bank, but
maybe
gave it a $12 price target.
2-year rollover we're hearing on the swaps?
Yeah, really interesting here. I mean, obviously the market, it's selling off now, down 3.6%. We spoke to Angelo Zeno earlier in the shows, I spoke to him on Trading 360, and he basically said maybe they'll really seek some strategic partnerships. He didn't necessarily see the buyout like
I got January's, and then I got a few April monthlies.
Uber over Lyft at this
got 25s in there. I don't have any buying power, so I had to go out of the money.
Thank you so much, Renita Young. Nice to see you. Thank you.
Up experience.
Now let's take a look at the bigger picture. Stephen Colano is with us, CFA Managing Director of Investments at Integrated Partners. We've taken a leg down here. Of course, we've been watching the hearings pertaining to the bank failures.
Moving up on its own there.
Rates have crept back higher, and the Nasdaq has sold off. You can see the Nasdaq's down 1%.
Kind of showing some strength here. Now
your
green
thoughts
again.
on this market action, the rally that just fizzled?
Yeah, Nicole, thanks for having me on.
Lewis is laying off 18% of the workforce.
As we wait to get on the screen here, and what I think actually is happening is, as the banking stresses, as the banking concerns start to move further into the rearview mirror, despite the congressional testimonies taking place today, I think there's a sense of in the markets, okay, the worst is maybe behind us in terms of concern over the banking system. Profitability different from solvency, so to speak, despite the inverted yield curve. And so the market's now turning its attention back to the original concern, which was inflationary pressures and what policymakers going to do going forward in relation to interest rates and how that plays out. And I think that starts to explain why small caps have actually outperformed in the last 2 days, despite the market selling today, and even continuing to do so today. And the Nasdaq, as you say, and a lot of tech names that have been outperforming in the banking concerns are starting to roll over.
Happy that you've got a front row here, Tom, if we see something exciting.
You know, the other conversation I heard pertaining to that, the economy and rates and all that, is that now the Fed may lower rates once again, and that necessarily wouldn't mean a good thing, because that could indicate that we're in some trouble, and that would be bad for the market.
Yeah, it's a total coin toss right now. If we're looking at in the Fed Fund futures market, it's for the May meeting, it's about a coin toss between a 25 basis point hike and a pause. So to your point, there's definitely some concern
says Amazon likes AMC's distressed asset.
I actually look at how resilient the economy's been. Thursday of this week, we'll get Q4 GDP as a final number. We're looking at 2.7% for Q4 GDP. And then, as you know, I've mentioned a couple times in the show, I'm a big fan of the Atlanta Fed real GDP estimate. If I look at that even just a couple of minutes ago, it's at 3.2% real GDP for Q1. So
Gasparino only has 167,000 followers.
Accelerating into the
first quarter. It is interesting, though, the timing, though. He literally tweeted that right here.
The National Bureau of Economic Research measures used to determine a recession, a lot of them being
that might have been the catalyst.
related and consumer income and expenditure related, they're hanging in there. They're actually more resilient than I think everybody had expectations to coming into this year. So I look at an economy that's actually being more resilient than expected. And so as a result of that, probably defer towards a continued rate increase. And I think that's what the market is potentially looking through today, and why you're seeing some of the interest rate sensitive sectors start to trade off.
Charles Gasparino.
Right, understood.
That's
so at
it,
this point
124.
now, what is your advice to investors? Because, you know, we had a lot of withdrawals. People were trying to figure out what to do with their cash because they can earn a pretty penny on that
HYMC
cash.
is
Also,
moving too.
Concerns about the run on the banks. But now what?
I know, I was thinking about you, Al. I saw Bob up so much.
Deposits seem to have slowed. We're still seeing deposits go into money market accounts, but in terms of the flight to safety, so to speak, that we're seeing recently, that definitely has slowed. Right now, what we're doing in our client portfolios is actually kind of looking for quality carry wherever we can across the portfolio. So within the fixed income space, you're still seeing good 4, 5, in some cases 6% yields on investment grade credit, which we like to take that. We like to take that yield.
Yeah, market definitely likes it.
There's the maturity schedules,
new high on the day for Baba.
And the refinancing schedules of investment grade companies. A lot of these companies have strengthened up
the
their
volume
balance
today is
sheet,
incredible
they've
on it
issued
too.
debt at lower interest rates further out.
96 million.
And so there's that low reinvestment rate risk. We're doing the same thing on the equity part of our portfolio, and almost a barbell strategy where quality carry, looking for quality companies that are generating good free cash flow, and not so much low leverage, but good coverage ratios. So they're generating free cash flow well in excess of their interest rate coverage.
I like
and then as a
that
barbell to
GME
that,
is
we
actually
still like what's been
holding
sold off
up and
in the
going
banking
while
concerns,
AMC
small
is
cap
just
space.
sitting there.
Given their exposure to financials, it sold off pretty hard.
This
the
might
last
be
couple of
T+2
weeks.
though.
We're still seeing attractive
Still haven't seen
valuations, and we're looking for
action
quality
from that, I don't
companies
think.
within the small cap space. Given if you look
This
at the
was
Russell
AMC.
2000, about 40% of the companies in the Russell 2000 are losing profits or not producing profits. So we're kind of looking for quality in that space, but yet there's attractive valuations. And then the trend that we think is going to start to resume and is even taking shape today, dollar weakness. So good quality companies in the non-US and even EM space, with China even lowering reserve requirement ratios just last week. So trying to take advantage of what's been left behind with a barbell on quality carry where we can find it.
Right, and as you talk about dollar weakness, do you look abroad? I mean, do you like anything abroad? Big, small, emerging markets?
Definitely. I mean, we look abroad as confirmation of what's going on in global trends. Again, just Thursday, we have German inflation, which I think will be somewhat an indicator in terms of interest rates. I wouldn't be surprised to see the interest rate market in the U.S. move in reaction to what German inflation comes out.
Still holding
German
above the
inflation
VWAP.
being a good bellwether for what global inflation is starting to do or continues to do. And so as a result of that, we do like continental Europe so much. A lot of capital has been moving out since
I don't know how it could. I'm streaming here all day, but
of the UK into the continental Europe. So there's some good quality companies there. Small and mid-cap companies in particular are trading at very attractive valuations in continental Europe. And one of the secular trends that we continue to look at and like as part of that is small mid-cap companies in continental Europe as a way of re-regionalization of the global supply chain, given the pressures from the pandemic. A lot of companies maybe not going to complete local supply chain, but as somewhat of redundancy in their global supply chains, they'll look to have local and regional suppliers going forward. And a lot of the companies in continental Europe and other regional parts of the world will start to benefit from that in particular, and again, trading at low valuations.
And then when we got, just to circle back to some of the sectors and expand on your thoughts, for example, tech, I know it's run up some, but still the valuations are cheaper than they were in years past. Energy, you get paid to wait with dividends. People often ask about those two sectors. Just final thoughts there.
Sure. Tech's somewhat of a tough one in that we're seeing some bifurcation. So we're avoiding the mega cap tech that's really run up actually in the banking concern. So people kind of investors going in saying, hey, I'm going to own what has worked in the past. And given the significant increase in cost of capital over the last over the last year and a half, really 450 basis points, so to speak, that's still a business model change that needs to be digested by a lot of the mega cap companies. So, and if you look at mega cap tech, it's while it is lower valuation, it's still trading well above its long-term valuations. Long-term being about 20-year average price to earnings ratios, still trading about 115 to 120% of those long-term price to earnings valuations in mega cap tech. So we're actually rather go down into kind of small mid cap tech and even below, even large cap tech below the mega cap. But as a way to get tech exposure, we're also looking at tech in non-US developed regions as well, Europe and even Asia developed as well. In terms of energy, we do think that the China reopening has yet to play out. Again, China looking to, they lowered the required reserve ratios just last week. They are going to grow their way out of the post-pandemic zero COVID issues. And so we do think that still has a way to play into the energy space. We're starting to see contango in the oil curve start to reverse, not towards backwardation just yet, but to us, that's an indication of price increases yet to come. So that still plays out into the energy space that isn't priced in yet.
Stephen Colano, thank you so much. A great conversation. Really appreciate it. Stephen, thanks. Managing Director of Investments at Integrated Partners. Later this hour, we're going to take a look ahead to those Lululemon earnings. And one of our panelists says the apparel maker punches above
I don't have any
its
LRC.
weight. We'll also talk strategies for retirement, including how to protect your bottom line in the age of automation. And we're going one-on-one with the CEO of LoveSac, how it's been consistently topping those earnings. And up next, what about a recession, possible recession?
You own
what does it
AMC?
mean to those FANG names in the portfolio? Coming up.
AMC. AMC popcorn. Spy looks like it might be ready to bounce here. Is this engulfing down here? Not really. It's starting to bounce, so I'll leave it alone. $15. Sorry, folks. Let's stop out on that golfing for spy pets. Nice. It's not actually engulfing. The bottom isn't lower, but you could still call it engulfing, I guess. I don't like that though. I feel wise at the same support level as the owl. Bouncing is us. Like USA? I did too. Well, I looked closer and it's actually not engulfing, but yeah, it's close. I don't like it though. I feel like this is maybe just a little bounce before coming back down. Thanks guys for your likes. Appreciate the support today. A little bit of excitement. AMC woke things up. Freaking AMC. 36 thumbs up though, I thank you guys. Just a little normal intraday halt for AMC, no big deal. Woke up BBBY, GME, Carvana. Maybe not Carvana, I don't know, this thing's still going up. I think it did though, it was like right here with this volume too. Then the AMC came down. I've seen this one move with it. Good day for you, Kira. What'd you do? AMC rallies what you need. They've been engulfed. SI grinding back up. That gas with the flush dropping. Upgrade is 60. Gave it a 60 price target. That popcorn, man. Yeah, you were talking about buying AMC at 4 too, huh? There were a few guys that were getting hyped on AMC at 4. This pump today came right after Gasparino tweeted about Amazon being interested in buying it. So I don't know if it was related to that or not. Seems like it might have been. It woke everything up though.
That happen very quickly in the numbers as we get into the third quarter of this year.
Wait, can you explain that? You think it's going to be more moderate than mild, so it's going to be worse than expected. Is that what you're saying?
I think it's going to be worse than moderate and worse than mild and worse than expected. It always is. You can't raise the discount rate or interest rates 5% in 11 months and expect an economic result in within 18 to 12 months at the minimum. We really didn't raise rates hard until the fall of last year. With a quarter basis point move in March of 22, we haven't seen rates really have their chance to dig into the economy and work its way through. That will happen beginning in the third and the fourth quarter of this year. We will start to see productivity fall off. We'll start to see excessive layoffs. And for some strange reason, Nicole, the Fed wants to see people lose their job, right? Their second directive. They want to see 1 million to 2 million jobs lost. And so I think they're trying to hurry this up, probably because they don't want to pay politics next year in an election year. It could be the first year in election year history where the markets actually don't grow if the Fed keeps up their horrible mismanagement of monetary policy.
So when you're picking stocks now, are you keeping the same strategy or are you changing the strategy?
Well, we buy stocks speculatively, and we only have to be right 60% of the time to be pretty successful. And so that gives us a pretty large margin of error. But as far as this environment goes, what should investors buy? What should advisors buy? What should firms buy for their clients? They should buy the best of breed. Companies are going to have great value potential in an undynamic economy. And so the Fed ultimately will come to the rescue, as it always has. The market is hoping for that. I'd be in shock if they didn't. But what we look for are things like companies that have great free cash flow, that are the best in their class, have better comps than the other companies in their class, that will definitely develop earnings potential going upwards, even though we're probably in our earnings recession presently.
Mm-hmm. And we've seen people moving to some of these big cap tech names, like the FANG names, as they've had the worries about the banking situation. And you like this group, right? Your number one pick is Meta.
Well, I've liked it all year. And as I've said a couple of different times from December forward, in your presence on this network, that, it would be a mistake not to own those as a staple going forward. Because one, they were oversold. Meta's up 70% year to date. Apple and Microsoft are up 15 and 20% year to date. They're still trading at a metric that's a little bit below the actual market metric. And so even though we are priced to their maximum range as far as growth right now. We'll probably see a pullback here in the next month, and then maybe a rally going into the summer. Based on next quarterly report, if earnings are strong, these companies will keep moving forward. The price will keep moving forward. And so that remains to be seen, obviously. But I think out of the potential of all these stocks, if the economy's flatlining, if GDP is contracting, what companies are going to go up? We have to look at the Apples. We have to look at earnings. We have to look at Microsoft. We have to look at Meta. We have to look at Google and Alphabet. Those are the ones that will continue to rise in this kind of an economic environment, and they will become the new value play because they are still selling below their peaks, albeit Apple not included in that statement.
And would you hold these for the long term generally? Is it a short term and a long term pick for these names?
I don't think, I think it's a short term and a long term pick.
I like it.
The longer the better.
I see. Jeffrey Small, great to see you. Thank you so much. President, Arbor Financial. Thanks, Jeffrey.
Thank you, Nicole.
Coming up next, we're going one-on-one with the CEO of LoveSac back on our show to talk about the very latest earnings report, how well the company is doing, and their anniversary. We'll be right back.
a little bit in this kind of environment, but the Sactionals product that you're looking at now has really been the driver. Look, we have the best couch invention for every family in America. Every individual that needs to relocate, move, changes their mind, wants a different color. Babies, kids, pets, dogs, real life happens. It's washable on the Sactionals. And with just 2 simple pieces, you can buy a bunch of seats, buy a bunch of sides, build anything you want. And that's really been the driver for our business. And we can intend to continue to do it. But it was never easy. From a giant not beanbag company to pivot into a major home furnishings competitor, now with perhaps the best-selling couch in the United States. That's a long process, and we're grateful to be here.
And you're constantly innovating. You know, for example, we've talked about having the speakers in the couches. You know, I see a table there. I see the way you can change the covers. As you said, you could change the color. I guess that would be by changing those covers, and having all those pieces, you could just sort of reinvent and add to your LoveSac. At this point now, the competitive landscape is being a major player in the furniture world. How would you see that? I mean, has the supply chain improved? Are you seeing people come to you that used to maybe shop somewhere else?
Yeah. Well, the biggest piece is building a brand that people love, right? By delivering a product that really pays off even more over time, and delivering new inventions, as you said, that can pair with the Sactionals that they bought 6 or 7 or 10 years ago, like
Sactionals,
right? This completely immersive home audio system. You can upgrade your Sactionals with StealthTech at any point. You can buy it new, or you can upgrade over time and add it back in. That's the reverse compatibility that comes from our designed for life products. And when you operate like that, and then customers experience in real life some spills, some changes, maybe a relocation, they learn to love our product even more, and then they spread it by word of mouth. And that's why our marketing ROIs have gone up. Even as our growth has been crazy, our marketing ROIs are getting even stronger over time because of the combination of new inventions that continue to grow, that we grow with, and the word of mouth that drives us. A full 38% of shoppers with us report not cross-shopping their Sactionals at all with any brand. They're looking for Sactionals. And that's the compounding nature of being really diligent with our marketing messages and our business model.
So a break of kind of the 88 level, 90 level, as long as it's not just a wick like this, kind of hold, and yeah, that's when I might average into it.
Love them, have them in my own home. It just is what it is. That being said, I think that they're
Sactionals.
back. I think the trend may be in your favor right now. Are you finding that? Are you finding that more and more people
retail's
want
probably
these
already bought the whole
types
float.
of couches?
Well, I'll tell you what is
just we haven't actually bought
happening.
it.
The Netflix and chill revolution. This is not a new phenomenon, but it's one that is absolutely rampant now. And as people once again hunker down to ride out whatever economic storms are on the horizon, they're going to do it on couches like ours, hopefully
did have some volume
ours,
on that break.
And that bodes well for us. You know, we know that the number one driver of our business, maybe not the home furnishings broadly, is just replacing worn out couches. And more than ever, people are wearing out their couches at home, working from home, entertaining from home. And that bodes well for us, remembering that Sactionals can not only be a sectional, they can be a giant moon pit, they can be a love seat, 2 seats, 4 sides, a single armchair. All of that is possible with just our 2 simple SKUs, and that's what makes our patented products so unique in the landscape.
First of all, I like how you say sectional.
Or else.
Don't think I didn't catch it. I got it. Let me ask you this. I'm going to put a lot of questions into one, and then you answer it, because I think they're almost the same question, but I think about folks, consumers, right? So they're buying
all I have to do is sell
the couches.
NFT
Are they
tickets
asking for a cheaper model, or do they have a budget and they're willing to accept less for that money? You know, the ticket price, are they bringing back, if they used to spend $10,000, are they spending $5,000, or if they're just willing, you know, you have inflation. So that's the first thing. The second is, as a recession is possibly looming, are people also doing credit cards? Are they paying on time? Or do you have some sort of buy now, pay later? What kind of behaviors are you seeing, so that in your eyes and your vision, you can tell us what's going on in the next 12 months?
Yeah, generally, we have seen a little bit of attrition in in the basket size with our product. Of course, we have a high ticket product no matter what. People are spending $2,000, $3,000, $4,000, $10,000 a whack on their Sactional setup. You know, layer on Stealth Tech, it's another $3,000. And our products are expensive, not because we're trying to be precious, but because they are built to last a lifetime, guaranteed for life, and designed to evolve with you as life changes. And that value comes at a cost. Now, so we are seeing some attrition, even as our AOV generally has been rising because of new introductions like Stealth Tech. And so there's some push and pull there in our world, but definitely seeing the consumer being a little more cautious for sure. Obviously, our growth rates of the last few years of 40, 50, and 60% are a thing of the past at the moment. We're still putting up better growth than the entire category. Huge delta between the negative 16 and 20% growth, negative growth we're seeing in the home furnishings category in general, and of course what we're delivering in real time and projecting to deliver today. Meanwhile, though, the consumer is using more credit for sure. They're taking advantage of our LoveSac credit card powered by Synchrony, so not on our balance sheet, no risk to us. But that's being utilized more and more as perhaps they are tapping out more of their own savings, just like we're reading in headlines, or using their own credit cards, but taking advantage of the 0% interest rates that we can offer through Synchrony at times like these, and that's been provided some buoyancy to our business. But that's what we're observing, and there are no bones about it. The consumer is feeling the pressure. The consumer is feeling more nervousness in this environment. But with that, the best way to combat that is to hunker down at home on your LoveSac or Sactionals and turn on a movie and forget about it. And thankfully, we will benefit from that kind of consumer behavior as we move through this.
Good
Just
advice,
ignorance is bliss over there at the Sactional
All right, just
area.
forget about everything. Get in your LoveSac and don't worry about a thing. Sean Nelson, wonderful to see you. Congratulations on 25 years. It really is outstanding. Just amazing. Congratulations to you and the team. Founder and CEO of LoveSac, 25 years later, is still doing incredibly well and growing. Thank you.
They do well.
All right,
makes
in
a
the
lot of
second
money.
half of our show, Lululemon set to release its earnings after the bell today. One panelist weighs in on what to expect and maybe should it be in your portfolio?
LoveSac and chill. What's up, trader? Coffee. What a chat. Oh my gosh. Oh, I was gonna look up LoveSac. What's their ticker even? Is it Love? Oh, that's Southwest. It's Love, LOVE. Well done, well done. Ticker. All about that ticker. That'll determine if you're successful or not. Public company. 134 million a quarter. Crazy. Oh, they're not making money yet. Last quarter they lost money. Has been rough. Down 500%. Thanks. Earnings compression is upon us. Look at the stock rally 13% on that earnings. What were the expectations? Even worse? Should it be running up at this level? What do you mean? Love to see GME just grinding up on its own without AMC. AMC AMC looks like it's about to break out. Just please wake up, BBBY. Looks like it might be. Bed Bath with some volume and a candle up to VWAP. I think AMC might be waking it back up. Oh, breaking resistance. No, GME might still be fixed. Or might be fixed, might not be broken anymore. I think if we get over... There's maybe a certain level where it'll look like it's broken again, but we haven't hit it yet. It might be over 30. That's kind of where it was back here. That's what the S3 Partners guy said too. Who owns S3. And it has seemed that way so far. That said, it does get kind of parabolic when others in the same basket wake up, like AMC or Bed Bath & Beyond. That's where we saw this big candle. That was when AMC was ripping and got halted. And there goes AMC again. So, still in the basket, broken itself, I guess. I'd like to see it rally on a cycle again to confirm that though, and not just some weird liquidity pump midday on AMC. But this was good strength, even though it's fixed looking in a normal stock. The fact that it's been climbing up since it had that pump. And that is neat. The real sleeping giant though is BBBY at these prices compared to GME and AMC. Buys moving up here too. AMC about to make a new high. Not getting crazy yet. I feel like this was maybe all started from that tweet. Needed this today. Just enough dopamine to get you till the next.
The last 90 minutes of trading, Nicole.
Without a doubt, watching those rates very closely, and in the meantime, watching oil creeping higher. When I saw it above $73 a barrel, I had to rub my eyes.
Man. Crazy.
Yeah, it is inching its way higher, and that's concerning, right? When you're talking about the inflation front, the narrative there, and we're seeing
19%.
ultimately a rejection of the lows that we saw just about a week ago, right? Recently trading back down to $65. We're talking to levels that we hadn't seen since November of 2021. Now, crude
is waking up a little bit.
Ultimately here again, you know, a brief visit below that $70 level and back to, well, inching its way back up here. And I did want to point out, when you're talking about that inflation narrative, one thing we've been noticing is that RBOB hasn't really been participating to the downside to the same extent that we've seen recently in crude. So I think things in terms of the WTI got a little bit overdone. There you can see on the chart the breakout to the downside in crude. While look at RBOB, it's kind of inching its way back up towards those highs from the year. Crude recently posting new lows for the year ultimately. So quite the divergence playing out there in two products that normally track each other very closely. We'll see how that resolves, but at this point, it seems to be finding resolution to the upside. So let's keep an eye on the WTI. We've got the inventories this afternoon from the API. Tomorrow, the EIA. Also, a weaker dollar, I think, feeding into some of the strength we've seen recently. This move back to 74.
Right, understood. All right, Ben Lichtenstein, good to see you. Thank you very, very much. Thanks, Ben.
Yeah, not a real velocity.
All right, it's time to take a look at your retirement portfolio, do some extra planning here. Charisse McKenzie's with us, President and CEO at Saturn Wealth. Thank you so much for being with us. After doing this for some time, what kind of environment are we in? What are you telling folks?
I still like this for continuation next week or so.
Well, obviously it's a very volatile environment, and people are getting very, very nervous. They saw what happened with COVID, with the market, you know, going down with the quickest recovery ever, and now things continue to be volatile.
After this massive rally
try to encourage people to be proactive. and to maybe take a look at how much risk you're taking, see what you can do there. Ask yourself some important questions like, how much can I afford to lose? How much am I comfortable with losing? And try to make some adjustments so that you're better positioned to be able to withstand this volatility.
And when you say how much am I willing to lose, I mean, it depends on your time horizon too. I mean, there are some people who say, I don't want to lose a penny.
Exactly. I mean, the general rule is the closer that you get to retirement, the more conservative then you want to become, because you have less time to make up for a downturn or something like that. So you want to take a look at that and try to get those things in better position the closer that you get to that target date.
Right, understood. So at this point now, are people still counting on things like Social Security?
Since Social Security began, there's always been a worry of it not being well funded and potentially running out. So people always seem to have that fear. And it's very complicated and always changing. But, you know, they're trying to implement some different things to keep the system in place, because there would be a huge outcry if suddenly that were to go away when, you know, on average people count on 40% of their retirement income to come just from Social Security as a source. So if that were to suddenly go away, that would be very devastating.
Like what kind of buy alert?
We also help people figure out how to maximize it, because people are often leaving up to $100,000, if not more, on the table, just because they don't know their best way to file. There actually are over 567 different calculations and ways to file for your Social Security, which is hard to figure out on your own if you're not really sure what all your options are.
There.
Right, and you said get this plan written down,
some more of my contracts
which would include a plan
now I have
to
open orders up
too,
and
right?
rejected with a red candle.
Absolutely.
Open orders
so
for
we usually recommend that you want to start with your highest interest rate first,
for birds.
and then pay
I've got 3
that
different
off,
open
and then
orders
slowly
for
work
birds
towards the lower interest
for
rate
like
ones.
120
and then
contracts.
make sure that you really have a budget established for your retirement.
They're all to sell now.
With things now,
My
everything
buy
is
orders
so
got filled on this
automated.
rally for some
you know,
reason.
everything is ACH'd out and
Fine, moving up more.
direct deposited in, and people don't really have a sense of exactly how much they're spending. And also those needs could change once you're in retirement. So what your budget is now might be different down the line. Maybe you'll have a house paid off. Maybe you'll have some debts reduced. Maybe, you know, you're going to downsize. It really just depends. So it's important to understand what you're looking at now and what you need now, and how that might potentially change in the future as well.
And I love the idea of having emergency relief fund just on the side, just in case, you know, the roof falls in, the kid needs money, the car breaks down, I don't know. But at the same time, when you're trying to pay off debt, sometimes it's hard to have emergency money on the side. What's the order of doing things?
Almost back to VWAP.
Yeah, well, I generally think it's a great idea to have at least 3 to 6 months of expenses in reserves,
GME
because there are always those
2.3%
unforeseen things
now.
that come up. I always say the one thing constant is change, and you have to be prepared for that, because otherwise, if there's a big ticket item that comes up, you're going to potentially have to go into debt and be paying interest on that debt, which can be even more difficult to try to get yourself out of.
Would be pretty
So
bullish
if you have those funds available for those things that are unforeseen, that can often help prevent you from kind of going more backwards as you get closer and closer to retirement.
Yeah. Are people asking you about certain sectors? Did they say, hey, you know, everybody talks about crypto or AI
AMC
or
not doing
tech
anything.
or FANG or whatever?
Wicking, red candle.
Yes, I'm hearing a lot about that. I know I bonds have become more and more popular. You know, people were very into a lot of commodities, like, you know, your gold and silver, because when they're better than they actually ended up doing. So there's always, you know, that big new thing out there. Crypto obviously has been something on the forefront of people's minds that's been pretty volatile as well. So we always just try to have, you know, people be diversified so that you don't have too many eggs in one basket.
I can't believe the GME options are cheap again.
Right, understood. It's great to see you, Charisse McKenzie,
President
and CEO
April contracts
at
at the money.
Well, thank you very much.
87%. That's wild.
Still ahead. We're bringing our panel. We got to talk.
That's another
about
sign to me that
Lululemon.
it's
The company
fixed.
is coming out with the numbers
Even though that's like
after
a good
the
thing.
bell, and we'll get the CFRA
Weeklies,
price target and talk about
125 is
the
pretty high.
competitive landscape.
Look at that next week, though.
Lululemon hot or not?
Double digits. I wish the market maker would drop like 20% of the strikes they have. It's the Hoggy Boggy Hogwarts. Okay, there's a pop on BBY, up above VWAP, up 1.3%. Yeah, I mean, there are potential catalysts for tomorrow on GME. Really on all of them. Could move all of them. Yeah, I put in another 5 calls for January and then 1 for April. Might pick up more tomorrow, shorter term. Is that a request rally? Yeah, it can run to 82 cents pretty quick in like 2 seconds. AMC rejected, red candle. Pretty big red there. $5.50 was its top. GME's following suit. Yikes. Yikes. AMC has rose as much as 18% after the Intersect website reported. AMC has rose as much as 18% after the Intersect website reportedly it's because they put reportedly before it. Reported. You don't need to say reportedly, I don't think. You can just say website purported that Amazon. It's repetitive. It's a school of redundancy school. AMC has rose. First of all, it's AMC has risen as much. Gosh, tweets. I hate reading tweets. It's gonna make me speak worse English and spell things incorrectly. Incorrect. AMC. I'll just read this in right English. AMC has risen as much as 18% after the Intersect website reported that Amazon is weighing a possible acquisition of AMC, though Bloomberg does not confirm the report. Yeah, I mean they're calling that as a catalyst. The timing makes sense. It's such a ridiculous notion, but who cares? Feds bar the impact of Silicon Valley Bank failure appeared to be widespread, threatening the entire banking system. Amazon may buy distressed AMC theater chain in seismic Hollywood streaming shift. This Intersect company has some people from AMC working at it or something. 10 lotto, 30 calls. Those are definitely lottos. Reportedly reported reports reporting the report. Purportedly. Purported. It's a word I've never used. Purported. Appearing or stated to be true, though not necessarily alleged. They're $6. There's a reason they're so cheap. The whole like get what you pay for, that's the same thing with the options market, but it's using math. It's actually you get what you pay for. By means of your odds of being successful are so small. Yes, lottos. A plus reporting, purportedly report. Alright, BY is up above you up. Like that it didn't come down with AMC. That AMC pump was totally from that reporting. Crazy. Reportedly. Up 1.3% on Bed Bath. This resistance we've drawn earlier, 80 cents. Yeah, rejecting the 80 cents so far. I was hoping we get a pump above it and use it as support like we did back here. Not the case yet. It's still resistance. Nice to make new lows though. Flat is good. We'll take flat. Hopefully this decreases the IV also. Nope. IV is still insane. Good. Yeah, with something that far out of the money with that short amount of time, you're just kind of, it's just an IV play more or less. So on any little pump, you want to just sell them. Tomorrow's Wednesday. Yeah, you're gonna lose a lot of time, a lot of theta decay on that just every day. Oh, GME coming down. Touches. 1, 2, 3, 4, 5. I kind of count this all as 1 and this all as 1, but I see your 5. That's true. That's true. You could sell half today, make it free, but probably reported. Reported, spelled P-U-R-P-O-R-T-E-D. Reported.
The different names here. I do want to talk about the China factor, but just the other names that seem to jump out at you as winners.
Yes.
Yeah, I mean, I think that when you're looking in the
meanwhile, Purported has gained
sector,
all sorts of
is one. I mean, Nike is one of the biggest names in the business, and it has really proven a tremendous amount of resilience over decades, and that is something that I think is difficult to discount. You know, when you compare it to upcomers like Allbirds, for instance, which kind of had a heyday for a short period of time,
still over $2.
Doesn't seem to be a brand that is necessarily going to kind of stick around for decades. I think that is a challenge. But even when you look at, for instance, a brand like Adidas, it showcases some of the cycles of the business where Adidas was very popular even a couple of years ago, and then it's run into some problems with some of its licenses, some of its partnerships, and at this moment in time, it's a little bit of it is in a trough, but that's not to say that it couldn't rebound. I mean, a lot of this, like we said, is highly cyclical. It depends on partnerships. It depends on product innovation and great marketing in this category in particular.
Yeah, and Zach, I just finished speaking with the CEO of LoveSac. They're doing great, right? So it's their 25-year anniversary. They beat again, quarter after quarter, the stock's jumping. But he did note that consumer behavior, there's some attrition in basket size. He also noted that consumers are using credit cards more. They have a Symphony credit card with 0%, financing or whatever, something like that. And so the point is the consumer is acting a little cautiously, Zach. What's your takeaway now on the consumer for 2023?
Oh yeah, they're still in the basket. AMC woke up
so we're,
BBBY,
2023, we just don't see how it can compare to 2021 or 2022. Obviously, the last 2 years have just been full of stimulus. Consumer savings went through the roof. They've been slowly spending it over the last 2 years. And, pull forward of demand, we see 2023 being a little bit weaker. And that's kind of what you've seen in a lot of these companies' guidance for the year. A lot of these companies are guiding for sales to be flat to down, mid-single digits. So, they're not expecting too much from the consumer in 2023. And it's fair to say that 2021 and 2022 were, kind of anomalies where, they had, consumers had 2 or 3 times as much savings as they typically do.
Yeah. Sucharita, a quick thought. You said it seems to be leaning into China. Tell us a little bit about that.
Flat.
Yeah, well, Lululemon's second biggest market now seems to be China. That's where they have the greatest number of stores internationally. They opened a number of stores in 2022. And with the reopening of the Chinese market to Chinese consumers, I think 2023 should show decent numbers there. But I think that the big risk is just leaning into a market as an American company where the government has very adversarial relations with the U.S. And I think that any company that is planning to address the Chinese consumer on Chinese soil, historically, there's the graveyard of American companies that have tried and failed is not small. Whether or not Lulu is able to rise above that remains to be seen, but certainly given the geopolitical vulnerabilities there, which they also cite in their SEC filings, I think that it's a big question whether that's the right market to be focusing on internationally. You know, even Amazon has tried and passed. You know, they've decided to go into other international markets. So I think that's one of the red flags. Certainly not for the short term, but I think it could be a concern for the long term.
Might be a false break.
Well, we'll have you covered here on the TD Ameritrade Network, folks, looking closely at those Lulu numbers. We'll have that. Sucharita Kodali, Zach Waring, thank you. Thank you, friends, for being with me. I'm Nicole Petalides. I will see you tomorrow, but keep it right here. Market on Close is next.
Friends?
Hey, Kyle, can we get a little time here? For Happy Gilmore, anything.
Oh, Billy Madison. I can't remember if that was Happy Gilmore. Rains? Might be Billy Madison. Could have held my longs here, but you never know. One of these days we could just get a capitulation come out of nowhere. This is, yeah, ugly price action. I don't like to trade that. Not very clean. MC back down below VWAP of 9%. I kind of wish I knew it was that news. Should have checked Twitter. I wasn't thinking that AMC would move on a tweet like that. Back to VWAP now. Mark your calendars for March 29th. GameStop fans. GameStop is clearly preparing for something big, although people don't seem to quite know what. Recently, the video game retailer turned a number of heads with an announcement regarding its NFT marketplace. Yesterday's markets closed. The company posed a question on its GameStop Twitter account, ready to explore more of America. This references the company's NFT collection. GameStop didn't provide much more information about this update, but it did list a specific date and time. While GME stock is falling today, the cryptic tweak has garnered considerable attention from the GameStop community. What exactly should they be looking for? Take a closer look. Yeah, they're just They're saying it's going to expand their NFT collection. Might be what it is. Says this. More recently, when analyzing GameStop's growth prospects, Investor Place's Thomas Yang reported GameStop's new management has failed to reinvigorate the business. Its belated push in NFTs, Web3 gaming, cryptocurrency has fallen short. Revenues continue to decline as gamers migrate to buying digital versions. I don't know when this was dated. Clearly hasn't written this since the last earnings report. Or even the last two, maybe. Company needs an Elon Musk-like personality to shake up its business. What the heck? Alright, I'm not even gonna keep reading that. I touched VWAP. GME now negative. Back down to VWAP. Yeah, so I think the AMC rally was just on that tweet, which makes sense why I would just sell off after. No, that's the same G-America tweet, not new. Jimmy's made by Amazon. Yeah, that's what I read too. Bird's holding up about. VWAP there. AMC's just giving it all back here. GME.
Gets to previous highs, a little bit above them. Kind of looks like a breakout, but not quite as we settle back into the mid 250s. The most important group in my mind, the most important sector or subsector, if you will, are the chips. But it's been so concentrated in growth companies like NVIDIA and AMD to a lesser extent that the broad participation of this group hasn't exactly given bulls what they want in terms of a major breakout just yet. So I'm watching that chart very carefully here, especially tonight because we've got Micron earnings after the bell. We've also got Lulu. So it's going to be a fun couple earnings here. Generally, though, it's a fairly quiet day. We see the pullback in the high beta stocks, but not in a big dramatic fashion. Only about 50 bips, about 0.5% lower here for the SPHB high beta ETF. That being said, there's kind of a surprising degree of red across the market today on a day in which the dollar is down almost 0.5%. A lot of times when you do see the dollar lower, you get a little bit more of a risk on tone. But with yields up, maybe that's limiting some of that risk-taking appetite today. Note, though, the difference. Yields up, dollar down.
Get back out your way.
That's a big difference from the regime of last year when yields up drove the dollar higher as well. I think this market is still generally just not sure what to think about how the central bank is going to respond to this situation, as it continues to be a very complex one with the banks and, of course, with inflation. And we'll get that update on Friday. Renita Young and Kevin Hanks are here with me as we kick off the afternoon here. Let's talk banks first, Renita, because we do see a little bit of softness creep back in. Regional banks are a little change to the downside. A pretty good day yesterday. But actually the story is not so much the domestic one here. It's kind of a quiet day for the domestic banks. It's actually what's going on around the world and mostly in Europe.
Yes, mostly in Europe. And first of all, as if the banking sector needed more drama, right? The global banking sector. This is happening in France. About 5 of the biggest banks there are being raided, and it's on an alleged arbitrage scheme alleging that investors and shareholders are trying to avoid paying dividend taxes. And so that includes about 1.1 billion euros, or 1 billion euros, which each equals about $1.1 billion. That's how much investigators are trying to recover. But this probe includes SocGen, BNP Paribas, HSBC, and the shareholders allegedly transferred stock for a short period of time to shareholders outside of the country to avoid paying taxes, right? Those investors hold on to the shares during the time when dividends are paid.
It's genius.
And either they were not taxed or they get refunds on those taxes. And then the sold securities, they transfer them back to the original owner, then they split the money in between the two that was saved. And so this arbitrage scheme, it's been a big deal in Germany for about a decade now. And so now it's made its way to France. But this is all part of a 4-continent probe that's happening with over 120 investigators and over 1,200 different suspects. And so, I mean, it's become a global issue, and we don't know which country is next, right? But we know that it at least involves a dozen banks around these 4 continents.
Boy, this like developed into like a Hollywood plot real fast.
It did.
Okay. So generally, there is unease in this sector, in this category, Kevin. At least today, I guess. So the problems are more European than ours, but still bank issues. So a little concern, a little worries, you think, kind of lingering?
You know, Oliver, the S&P banking sector was up 3% yesterday, a really strong day. And the fact that any headline regarding uncertainty about banks is destined to make banks at least pause here and back off slightly. So no, I'm not really surprised. It looks like these guys, from a trading perspective, Oliver, it looks like they were doing tax rolls to try to avoid paying tax on gains.
Wow,
that's an
really
old trick
trade options,
that
right?
has been tried and failed.
Part of the attraction for me on BBY is just the high IB. We're selling options.
I don't know the exact details, but believe me, this is an old play taken from an old playbook.
Instead of buying shares,
Speaking of
sell
the
cash
old
secured puts.
Kev,
Make money while you wait.
The market here has been so obsessed with the notion of the Fed pivot. We got another day where bonds are selling off here. We're creeping higher past that 3.5, closer to 3.6. Big note out from BlackRock and their strategy team saying that pricing and cuts is wrong. Tell me how you think the market's dealing with that.
Well, Oliver, you and I have been talking about this for a while on your shows throughout the day, and that is the Fed is certainly saying one thing.
Slow crawl
the
right
bond
here.
market is saying a different, and slowly but surely, one of those two is going to have to come back towards the other. And here's what I think will happen. Without some market-changing catastrophic event, I believe that BlackRock is correct here. You and I have been talking about that I think those late year or early next year rate cuts will start to fade away as we get closer and Jerome Powell starts making his intentions
but then you need
more
to get a couple weeks at least for there to be any premium.
I never say always, and I never say never. And there could be something on the calendar or some event that changes Jerome Powell's statement. You never know for sure.
I feel that.
A regional banking problem almost had the market thinking about pausing. So we can never rule out. But right now,
again, like I was just saying,
the scenario that BlackRock is talking about is pretty much what I see as well, Oliver, without some event that would change the Fed's opinion.
Okay, barring some unforeseen incident. All right, thanks, Kev. Thanks for getting a good start here. Appreciate the rundown of the information.
Still slowly grinding down
markets.
here.
Let's talk some more about banks and the credit impact potentially on the economy of the problem that we've discovered in these regionals, mostly on the West Coast, but of course fears that it might spread. Jeff Taylor joins us, the co-founder and managing director at Emphasis Digital Risk. Jeff, tell us about what you guys do at Emphasis, and welcome to the TD Ameritrade Network.
It's great to see you again. What we do at Emphasis Digital Risk is we're the largest residential mortgage risk management firm in the country. So if you're in the origination business, we process, underwrite, and close loans on behalf of large money center banks and non-banks. And then if you're in the quality control business, we review loans that investors are putting on their balance sheets.
Okay. Sounds like you've got some pretty good insight into maybe what some of the fallout from this event may be. Is there anything that you see immediately that is changing?
Yeah, it would have been nice calls, I suppose. David Busters?
One. If I look at the residential mortgage market right now, changed if you're originating and selling to Freddie or Fannie or a government loan. I think that's very much the same. I think what has changed over the last 30 to 45 days is if you're putting this on balance sheet. For instance, if it's a residential mortgage or it's a home equity loan, I think banks are starting to tighten a little bit their lending standards or just look at things to make sure that the asset they want and duration they want is matching up more than maybe you would have talked about a couple of weeks ago. So I think that's the number one. Number two is, look, in the last 12 months, we hiked rates 9 times, 4.75%. That's a lot. So from a refinance perspective, that's pretty much paused. From a buying perspective, that's still that's actually, it's strong, although people are being cautious with all the nervousness going on in the general marketplace right now. So if I go global statement, what I look for the U.S. housing market, I think it's sound, specifically if you're selling loans backed by Freddie, Fannie, and it's a little bit more in a wait and see lending environment if those loans are going to large money center banks.
So the credit crunch potential of this situation is still to be determined. There's not exactly like an obvious strain immediately hitting at this moment.
Yeah, I mean, look, I think it's to be determined, but like I just said, right, if you are putting on a balance sheet, everybody is triple checking and making sure they're matching up with duration, because look, all banks have a situation right now. For the most part, they're
offering dividends,
interest rate yield curve. So they're paying out more than they're collecting for savings accounts, more than their investments are yielding them. So that credit crunch right now, as far as what they're going to put on balance sheet over what period of time, is definitely under a microscope, much stronger than it was, 30, 60 days ago.
Got it. Now, the home market has also largely been driven, as you know, by supply constraints. One of the biggest catalysts for keeping home prices elevated and demand there is that there's just still a lot of mismatch, people looking for homes. So prices have been pretty sluggish to come down. They've come down, a decent amount, but not that much, really, on the broad scales we just saw this morning for prices. So does this have the potential to exacerbate that problem more, or is that kind of now a silver lining to this problem where maybe it gives us some time to kind of let that supply and demand match a little bit better if there's a little slowdown in lending?
Yeah, really good question. So I'll give you the annual number, then I'll give you the 30-day number. So basically, January to January, it was a 5.6% national rise in home price appreciation. If I look over the last 30 days, December to January, it's about a 0.5% decrease. So if I annualize that, that would be a 6% price decrease over the year. So when I look at like actual supply, it is still very tight. But I think what people are starting to come off finally is that they're realizing that they maybe can't sell the house what they want to sell it for, but maybe what they need to sell it for. And that difference can be anywhere from 10 to 15% generally on what they have it listed for today and what you might see it actually listed for in the next 3 to 6 months.
Okay. So it seems like so far it's somewhat business as usual. The onus to prove this is going to be some economic calamity is kind of on those making that claim at this point. It certainly has added some stress internally at these banks, externally as people speculate.
Sure does.
What about from an individual perspective, how much thought do you give that for kind of the personal finance situation if you were banking with one of these stressed institutions? Maybe you had a mortgage in the works. Maybe you already have one that's serviced by one of these stressed institutions. How are the actual creditors handling this?
So that's a great question. So look, if you have either deposits or a mortgage at a bank that is either failed or it seems stressed, number one, obviously as FDIC has already said, your deposits are going to be insured, so you're good there. Secondly, from a mortgage perspective, you continue to make your payments. What you do when an FDIC takes over a bank, and you looked at it yesterday with SVB, it's straightforward. They will tell you what to do, but continue to make your payments. That's the best thing that you can do as a consumer, so you don't affect your credit or what have you. That's the strongest advice I could give.
Got it. Okay, so stay the path and don't try and use it as a way to not pay your bills, I suppose, here. Jeff, thinking about what you're looking for to gauge the situation going forward, any metrics, any data points, what maybe regulatory-wise, is there anything you feel that is on the calendar or just from an economic perspective we should be watching to know if the situation's worsening? I mean, is it just credit spreads? Is it mortgage apps? Like, what do we look for?
So
$1,000 per account per year. Square is making $50. How do they bridge from here to there? Well, there's a lot of services that American Express offers that Square currently doesn't. But there is nothing that a bank does that Square cannot do.
Right.
And when you ask Jack offline, that is what he will say. So, look, I mean, it's nerve-wracking, and that some of these customers may be fraudulent. But I would not underestimate Jack and Square's engineering team from genuinely digitizing and disrupting and improving a current banking process, because that is what that guy has done for over 20 years. He's one of the great engineers in our country. And I don't think that report really in any way refuted that.
One of the connections now we have
Stolen
with
California
Jack Dorsey,
highway
of
patrol
course,
vehicle
is
being
his
pursued.
crypto embrace, the actual pivot of the company to be called Block. And we've basically gone down the list of all the major crypto institutions. And
yeah, I
there's
saw
either
GNS.
been self-made blowups, or there have been now regulatory pressure and scrutiny coming.
Not GNS.
Do you view that as being a risk to this company at all? Seems like in the crypto world where there is smoke, there always ends up being fire. And now this is being an app that is really kind of focused on that.
I think it's got a long way to come.
Beg for the attention of regulators in a way? They're looking to clamp down on this industry.
Maybe filling this gap.
Look, you know, first of all, it's not just crypto, it's Bitcoin. I mean, so Jack is an advocate of Bitcoin. Now, why is he an advocate of Bitcoin? Specifically Bitcoin. Why? Because if you look at his kind of engineering philosophy, his architecture is all about speed. It's frustrating that if you're a merchant, you don't settle but 3 times a day, morning, afternoon, and night. Like, ask your merchants who are on this show, when do they get paid, even when you transact with your Visa card? This guy, he wants you to have instant deposit, instant settlement. He thinks that's your money and you should get it. And crypto, when it's working properly, it does that. It's a major part of his engineering philosophy. Merchants, I asked him if he were to reboot the payment system, what would he prioritize? And speed is something that's very important to him. So, look, I didn't come on here to defend Square or Jack Dorsey. I happen to admire him as a great engineer, and I've, you know, over the years have recommended his businesses. And I don't, you know, I'm not going to. I'm open to information and admire discovery, but I don't think any of this really profoundly changes. Like I said, you put all the compliance on top of Square, you're only going to cost them $200 or $300 million. That's 300 basis points on the margin.
Okay, like the candor in your response to it, and also like the attempt to try and quantify what it would cost for him to right the ship in some degree. James, to wrap it up here, how does Square, or Block rather, fit across the payment space? Given how far the stock has dropped, correct me if I'm wrong, I mean, last month you upped your price target, right? Still in the 300s, so I guess that would make this one of the best values, you would argue, at this point.
Look, you know, I would just point out that Square on the merchant side, like, what is that? That's the dongle and terminal that people are familiar with.
Yep.
And generally, Square has benefited from merchant formation. So what's that? People who are listening to this show, maybe some of them are their husbands or wives or kids are thinking about forming new businesses. If you look at Census Bureau data, you go to censusbureau.gov, there are 20 to 30,000 businesses being formed each of the last few months in the United States. Those may be tech workers that got laid off, they started a new company. Or they may be in retail, they got laid off, they started a retail business. My point is, when those people need credit cards, Square gets the call. So actually, merchant formation right now, I think, benefits Square on the seller side. And then Cash App, you gotta be, in my opinion, you gotta be patient. This is a guy, he created that app in a laboratory, did not expect it to be so successful. At first, when we spoke to him, he said, it's gonna cost me $50 per account in customer acquisition costs. He updated that number to 20. Then he updated it to 5. People liked it so much. It cost him $5 a CAC costs.
Yeah.
So my point is, I know we got to wrap, but my point is these are two huge ecosystems. They have tremendous runway. And I think that he's a great steward of this company.
Very well argued and a delightful conversation, James. Thanks for bringing us your analysis. Really good perspective and a good balance, frankly, from what we've been reading, and probably some of my own cynicism on the side of the crypto and the bank replacement. But the merchant part certainly can't argue with, is that they're just totally dominating commerce. James Friedman, analyst at Susquehanna Investment Group. All right, coming up, let's talk some options. Tom's got 2 bullish trades for us. When we get back, we'll discuss more of that BABA story. Market loved that split up.
Yeah, it did. SPY ripping right back up again. eVTOL still moving down, up 4.7%. Silvergate getting a green candle here, it's up 3 1/4. It's holding out above 2. $2 hold into the end of the week would be good. 3,400 calls in the money. Sorry, 9,900. That could be increasing, given all the volume today on it. Hey Jonathan, thanks for the support, man. After hours juice? Ooh, maybe. Everyone's hyped for tomorrow. Is the 10K deadline tomorrow as well? Or is it next week, like on the 3rd? And SPY ripping right back up there. Birds above VWAP.
Had to shut down cruises, right? But their Disney Plus was doing well, but getting dragged down by the parks business. Do they split that up? ESPN was starting to do well, but they're taking losses on the build out of their Disney Plus. So, I think this is what investors get excited about. You're seeing GE Healthcare that just got spun off, going through that also. They're going to split into 3 different companies. So this may be one of those companies that it works for, splitting into 6 different entities at this point that might unlock that shareholder value. And I think that a lot of people are excited about.
Okay. Yeah, market clearly is creating value already. $12 of it for Alibaba. Yeah. And Chinese stocks are kind of getting pulled higher as well, 4%. So big day for China large cap. Yep. Let's talk Oxy. Pretty good day for Occidental. Warren Buffett just buying every dip.
Yeah.
Guy is like...
No shame. No shame. Any dip that comes in the stock.
I'm starting to wonder. I mean, this is like...
Yeah.
This is more the behavior of, someone else.
Well,
he likes to buy dips.
Yeah, that's right. But think about this. He owns now about 23.5% of the company. Stock was upgraded today also, so getting some lift there. But then you got crude oil back above $73 a barrel. We're at 2-week highs on crude. So if you believe that thesis that, oil is going to continue to move higher, and some of the firms out there have $90, $100 price targets by the end of the year for crude oil if we see a pickup. OPEC Plus meeting soon. They said they're not going to raise any of their production levels, but record production here, getting close to that here in the U.S. But we're seeing a pop in oil. Well, that means we're seeing a pop in Oxy. You throw on the back of that the Cowen upgrade to a $70 price target from 63, and then Warren Buffett buying more shares, over 4 million of those. 23.5% stake in there. He can buy up to 50% of the shares, according to that addendum that they put into place a few months ago. But that being said, we saw some unusual option activity in the call side there also. But these were really short-term, August 31st weekly series. Trader came in about 15,000 of the 62 strike calls, which is basically at the money. Average debit of only 90 cents because they've only got 3 days in this trade. That break even is 62.90 over the next 3 days. It's only 1% above the current share price.
Been in an uptrend for a few days now.
Call volume about 3 times
pretty unique for
the
that
average volume that we've seen over the last week. So yeah, they keep piling in this. And Buffett has shown that he will continue to buy on any dip in this company.
Yeah, seriously. Okay. I mean, he's like going for ownership essentially. It's just going to get folded into Berkshire Hathaway or what? I mean, not really clear what the end game is here. I mean, if he hasn't pushed for any major changes, he's just buying the shares. He's not
he's already stated that he's not going to push for any changes because that's one.
Then you keep buying it, and eventually you kind of have to.
One of the biggest things that he does before he gets into an investment, right, is solid balance sheet, but then also the management team in place. He believes in this management team. Remember, when they outlaid all that debt to buy Anadarko, remember people were saying, "Oh, what are you doing? This is nuts. You're leveraging yourself to the hilt to buy that," and look how it's paid off. Especially with crude oil above $73 a barrel, the break even's below $50 a barrel.
Okay. Your bearish trade today is in Lowe's. Housing numbers showed a little bit of slowdown, a little bit of resilience. You kind of look at it either way. Housing prices have come off the highs, but not by much.
Not by much at all.
And there's plenty of pushback. It's very regional specific. The home builders have been doing great. The home improvement has been doing so-so.
Yeah.
Lowe's and Home Depot have done fairly significantly worse than the builders.
Yeah.
But what's the bear trade here?
Well, stock's down 4% so far this year, about 7% so far this month, even despite the demand is there for housing, right? We know that at this point. Costs are still elevated. Getting into a house, that affordability issue is another problem. The CEO, after earnings last time, came out and said consumers are upgrading existing homes, but then he also sees a slight decline slight decline in home improvement throughout 2023 moving forward. So there's inflationary pressures getting to a lot of consumers, even though the jobs market is pretty robust. Demand for housing's out there. And remember, Lowe's only has about 25% of their business is the professional business. And that's where Home Depot kind of dominates them. And that's where the margins are, as opposed to DIY retail consumers that typically go in and probably spend less. Inflationary pressures, they're not going to spend anything. So that's a concern for them moving forward, and the CEO stated that. But we did see a put buyer in here, and they went out in duration, you know, of a few months out into the June cycle. Traded about 10,000 June 160 strike puts. These are far out of the money to the downside.
I don't think they can reverse
they paid
the same days ago, no, because they'll have to have a time frame
so that break even for this trader, 157.63 over the next 80 days. That's 17% below the current share price.
There might be
the stock over the last 52 weeks is not
some
below,
laws on how quickly or when it could even be buy.
About 3 times normal daily average volume that we've seen over the last week. So somebody taking a bet that, hey, this upcoming earnings at the end of May might be a bad one, that we might see
moving back up here above
dribble down probably to multi-year lows here. So this is a big bearish take in here, and it might be somebody that's just hedging a position that they have in the long stock, but this is kind of an odd strike and an odd payment that you're taking on for 80 days to get that protection. So maybe just somebody outright buying puts.
Okay, guys, I have enough time still. I'm going to do a recap video today, so I'm going to cut off the stream.
When you're looking at
Thank you guys for your support.
I mean, you'd have to get a
30 mil a day with some excitement on AMC there. I'm thinking it was definitely from that tweet now. Tomorrow
update on a big
might be a nothing,
winner from Jenny when we come
could be
back.
a something.
Do some trading with Scott Bauer, about 15
yeah,
minutes.
do you guys know if
the
the 10K on GME is actually due tomorrow? Is that the deadline? I kept hearing different dates. But yeah, we're still waiting on the 10K from them. And then I guess we're waiting to hear from BBY if they're gonna have a shareholder vote for a reverse split. So might not, but that is on the back burner somewhere. Right, the move on birds. So yeah, I'm gonna cut off the recap video, and it should be live in about 20 minutes, 30 minutes. Thanks, Ace, for your support today. New membership. Appreciate it, man. Thanks, Dennis. Thanks, Jan. Thanks, Jonathan. Thanks, Donna Rowe. 29th is hype for sure. Yeah, I still don't know on that 10K, but might be nothing. Thanks, Gene. Yeah, we'll see you guys on Discord. See you on Twitter. See you in the premiere, the video. Okay, have a good rest of your day. Peace out.